Happy morning to all of you. Happy morning to all of you. Welcome to one-day workshop on new tax audit reports of a public trust. May now request SIRC Secretary CA Ayapalayam Venkateshan Arun to escort Program Coordinator and immediate past Chairman CAE Palguna Kumar Sir and the session speaker CAK Shivarama Kumar Sir to the dais, please. We will start today's proceedings with the invocation of ICAI Motor Song as a mark of respect to our mother institute.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati
Thank you. Please be seated. We recognize the presence of a regional council member and a CPA committee chairperson, CA Revati S. Raghunathan Madam. Please come and occupy the dais, ma'am. May I now request CA A.V. Arun sir to formally welcome the gathering through his welcome address.
Respected past chairman of SIRC Balgunji and today's speaker Shivarama Kumar and E. Chaitanya and members from Tirunelveli, Thrissur, Hosur, Karur and members of Chennai. A warm good morning, and my colleague Revati Madam in the council. So warm good morning to one and all present here. So we all approaching the due dates. We are all afraid of the trust. So that too, especially for the 10B and 10BB, we have a lot of confusion. A lot of mistakes are done in the earlier year. This year we get notice for that. So that the Balgunaji is want to have a full day workshop relating to this tax audit, trusted tax audit, so that we have this program. So Balgunaji himself organizing the speakers and everybody and the program structure. Sir, thank you, sir. We take it our job and made it easy for us. So thank you, sir. So I think this session is definitely helpful to your this year trust audit thing. So I formally welcome you all for this one-day workshop on new tax audit report on public trust. So thank you for the opportunity.
Thank you, Arun sir. May I now request CA Dr. Palguna Kumar sir to brief about today's workshop and what are all the key takeaways for the audience.
Om Namo Venkatesaya. Chief Secretary of SIRC, Sri Veeram, CP Committee Chairperson, Sri Revati Raghunathan, my co-speaker, Sri Shivaram Kumar, and another speaker, Chaitanya Ektuka. Many senior members, learned members, and all the other participants, a warm good morning to all of you. Today's total deliberation is on the new tax audit report meant for trusts Earlier also, we have been conducting and issuing the audit reports 10B, 10BB only, up to 22-23 assessment year. For this 23-24 assessment year, only the title is kept as it is, totally content is changed in these formats. These two audit reports were prescribed or promulgated through statute only in February 2023. What is the speciality of these two audit reports, 10B and 10BB? Today, totally we are discussing about 10B only, which is having 49 clauses. We three speakers have debated among ourselves these total 49 clauses. What is the new thing about this audit report? We have been doing audits for ages. What is the new thing about this new trust audit? Though in 1985 onwards we have been doing tax audit, in the tax audit, though it was started I think with some 26 clauses, now with 44 clauses. For a businessman under 44AB what is prescribed, and verification of facts and giving those facts by way of that audit report, 3CD more specifically. There, a chartered accountant is not supposed to or is not expected to quantify, certify what is the business head taxable income. No. Though for the past 37 years it is there, never it has asked to quantify, to certify the business income. What are the eligible business deductions, including depreciation, eligible depreciation, disallowances, allowances, allowable, disallowable, everything, they are there. Maybe one or two capital gains, 45.2 is there in the tax audit report. Maybe 269 SSST is there for penalties sake, though nothing to do with competition. But business income as it is, under the head business only the tax audit report is prescribed, but business income has not, need not be, there is no provision. Whereas in this first time, what we were doing earlier in 10B, 10BB, what is the gross income, what is the amount applied for objects, maybe religious, maybe charitable. So never quantify. Now, for the first time, prescribing this through the rules, this format, is expecting the auditor what is the eligible exemption and what is the taxable income. So this we have to quantify, certify in this form 10B, which is for major, say, my colleague will explain the difference between the applicability of 10B and 10BB. Both are one and the same, but only in 10BB for smaller people number is reduced from 49 classes in the 10B to 32 classes. So this quantification is a more greater responsibility because, as the Secretary has, Arun sir has already said, number of notices on the charitable trust. In filling up ITR 7, if a small lapse is there, I don't call it a mistake, a lapse is there in filling up ITR 7, number of notices with heavy demand are already there, several, say, steps are being taken, either 154 or say going in appeal, so much. So when such is the case, now the Act in the past 4 years has been amended in several ways. That means for a businessman, apart from business head income, one income only, business head income, he may have capital gains, he may have other source income, except that nothing will be there. For capital gains, a special rate will be there. For other sources, no question of special rate. Whereas in this case of public trust, whether religious is charitable, there are 7 types of taxable income. which we are going to discuss. And these 7 types in seven different classes, out of 49 classes, in seven different classes, what is the taxable income? What is the taxable income? This audit report is asking. Out of the 7, 4 are having normal rate. Put together, 4 put together is the normal rate of income only. Normal slab rates we apply. Whereas the other 3 special rates, 30%, 30% and MMR. So what is the 30% income? You compute and you certify. What is that MMR income? You compute, you certify. So the responsibility is more on the chartered accountant who is certifying these trust accounts, whether it's a smaller one, the 10 BB will apply with the 32 clauses, which are more or less. There is no new clause in 10 BB. Out of the 49, some few are eliminated and then in a concise way they kept it. So whether 10B or 10BB are one and the same. So it is very tough job which we are going to see. So it needs a very attentive, very serious exercise. Unless we do it, though it appears all these days the old 10B or 10BB is a 5 minutes job. Now for me this can be minimum 4 full days unless you work. The senior CA minimum 4 days, he cannot fill up this 10B or 10BB according to me. So that is the difficult thing. I am sure in this land of holy land of India, centuries old Bhagavad Gita is there with 18 chapters. Krishna made it very clear. If you want happiness in the life, be practical. Choose the way it suits you. So we all know what is Bhagavad Gita, but are we sincerely what he prescribed? How far we are practicing and how far we are peaceful? He prescribed the medicine. That means you want truth, you want peaceful, be happy, life, 100% happiness you want, go by the principles, methods, prescribed, procedures. So the procedures are prescribed in Bhagavad Gita, the principles are prescribed and the practices are suggested. Same thing for a trust. Procedure violations, some taxability. Principles violation, higher punishment. And practices prescribed if you violate. Via media taxation. So all these things, let us till evening 5 deliberate, discuss. And we made it a workshop because some of the problems and the material given to you also, the questions are there, the problems are there, the answers only will be discussed from the dais. You have to write down. Why? Because unless we solve the problem, merely sitting and listening that this is the solution, this is the way the act prescribed, it may not go into our brain. That's why we call it a workshop and everyone has to physically participate. I thank the SIRC, the chairman, Mr. Panaras, who has who is a good associate for more than 20 years, to me. Around 20 years back, when there was no branch at Ballari, he invited. When there was no branch at Ballari, and I was not a regional council member at the time, only from 2009 I was. He invited me and he wanted on HEF a half-day seminar. So like that, a knowledge-seeking council members are there. So I thank all the council also for giving me this opportunity. Thank you. We'll continue.
Thank you very much, Palguna Kumar sir. May I now request the CA Revati S. Raghunathan madam to share her words of wisdom.
Good morning, everyone. Good morning to CA Palguna Kumar sir, our past chairman, Bhimabal sir, our past chairman, and the speaker, Sivaram Kumar, and Arun, my colleague. It's actually very heartening to see the Prameya Hall, almost full. And, since physical meetings are going to be the norm, and we hope that for all programs, people will come in and, because at SIRC we are taking efforts to actually organize seminars with highly experienced, sought after professionals like Falguna Kumar sir and Sivakumar sir. And and we're also endeavoring to provide programs on niche areas, niche subjects, sunrise sectors, opportunities, and but what we find is that unless it is something like a GST or something like this, charitable institutions, people do not come forth too much for these physical programs, and it is a little disheartening at times to see an experienced speaker not having an audience when they have voluntarily come to share their knowledge. And let me tell you, these opportunities which these faculties take are not remunerated at all. They have come voluntarily and generously to share their experience with us, because we ask them, request them and say, please come and share your experience. Members will be benefited. So it's a very happy morning today for all of us to see so many people here. I know charitable institutions is the need of the hour, and wherever we go, all branches, all CP's chapters, this topic is being taken up. So once this charitable institutions due date is over, and the income tax due date is over, and the GST due date is over, I request people to come forward for all the other niche areas which we are looking at, and the opportunities which are opening up for chartered accountants. For example, the social auditors examination which is being now conducted, it is also opening up huge opportunities, and I think the charitable institutions, people who are in practice will find actual need to take up this examination and qualify in it, because later on only the NISM qualified auditors are going to be selected for these opportunities. Empanelments have started, and we are taking up these areas as specific topics to be covered in the CPE seminars. And thank you, sir, Falguna Kumar sir, and for accepting, designing this program. I think he's the star attraction today, hero of today. So thank you very much. He's designed it. He's invited all the speakers, and he's, as Arun said, made our job a lot easier. And thank you very much, everyone, for making it today. And hope that you would all also consider coming for all the other programs, considering the effort that we put in designing these programs and inviting the speakers. Thank you very much.
Yeah, thank you very much, Revati Madam. It's time to honor our program coordinator. May I request Arun sir to present Kanchipuram Silk Shawl and health bouquet to CA Dr. Falguna Kumar sir. May I now request to CA Revati Raghunathan Madam to present a shawl and health bouquet to the first technical session speaker, CA K. Shivarama Kumar. Yeah, that's the inaugural part. We are quickly moving to the first technical session. The first technical session, Form 10B clauses 1 to 27, will be dealt by CAK Shivarama Kumar. CAK Shivarama Kumar, a commerce postgraduate, MBA, LLM, fellow chartered accountant, also holds diploma in information systems audit. He is a practicing chartered accountant since 1985 in tax consultancy, audit and assurance with the clientele including public sector units, listed companies, banks, builders, colleges, diversified companies. He is a guest faculty at the Insurance Training Center, SBI Learning Center, presented papers at many seminars of ICAI and its branches across India. He has published articles on tax matters in print and on reputed websites. He has got a best student speaker at college and intercollegiate district levels. He is a best speaker and gold medalist at the state level intercollegiate competitions. Best speaker at the South India CA Students Meet at Chennai. Best Student Poet Awardee, represented Krishna district by winning declamation in the first World Telugu Conference. Outstanding Young Person Awardee by JC's International. He has also been awarded Man of the Year 2007 by Andhra Saraswati Samiti, Machilipatnam, an internationally recognized literacy association. He also won state level Ugadi Puraskar at a literacy critic by Andhra Saraswati Samiti, Machilipatnam. He is the founder of Machilipatnam Study Circle to provide free coaching to students preparing for competitive examinations. He also ran a free hostel at Machilipatnam for the 1997 cyclone destitute children. He served as ICAI set up by an Act of Parliament at the Vijayawada branch as a secretary, vice chairman and chairman. And he also the treasurer of George Coronation High School, Machilipatnam. With this brief, I have great pleasure in presenting before you CAK Shivaram Kumar sir to take us through Form 10B process 120, sir. Over to you, sir.
Welcome to everybody here. A very good morning. I am thrilled this morning to stand before you for a variety of reasons, all of which are nice and pleasant. Way back in 1980, I came with 2 hands full of luggage to this august place of learning to have coaching here in the SIRC premises from Machilipatnam, Andhra Pradesh, at a time when there were no coaching classes in the entire Andhra Pradesh and the present Telangana. And every moment I spent here, I have accumulated the learning in a slow and paced, but definitely in a steady manner. Shanasha kanashaschaiva vidyam arthancha sadhayet. Should learn by the second and earn by the rupee to become a scholar and to become a wealthy individual. Way back in 80, I was listening to doyens of the profession, C.A. Gururaj Upadhyaya, C.A. Rajaratnam, etc. When meetings were conducted, I never expected that one day I would be elevated from off dais to onto the dais. It's Sri Mata's blessings. Because yesterday the first thing I did was, I arrived yesterday morning, visited Ma Kamakshi in Kanchipuram, took her blessings, which I did when I first took the certificate of practice on 2nd August 1985 from the then Secretary Sri B. Ramraj. It's very nice that I am standing, I am humbled to stand before a splendid assemblage of chartered accountants drawn across South India, and very much privileged to be, say, a part of this with the mentorship and leadership of our Guru, C.A. Dr. Pallum Kumar, I thank C.A. Arun and C.A. Revati Madam for having given me an opportunity to sit by their side and participate. With this, we will go straight into today's program. I know my time is about 1 hour 15 minutes. I will be covering clauses 1 to 27 of Form 10B. The ancient saying goes, Sakala Guna Bhusha Vitarana. Charity crowns the human virtues. Tyagene Amrutatva Manashuhu. Veda says, you can attain liberation only through sacrifice. But now, charity comes with a huge rule book. All along, I was only filling 2 columns in Form 10B, application of income in India, because I never had the opportunity of certifying cases where the application was outside India and covered by 11(1)(c). And the other thing was whether the excess was invested in modes and manners specified in section 11 subsection 5. Other than this, there was only one case where there was a related party transaction. He was the project manager come one of the trustees. He was paid a meager 5,000 rupees. I was mentioning it. Also stating in the same report, there are manual reports, that the payment was grossly inadequate for the tremendous service he renders in favor of the trust. Except that there is no blah blah in the report. But ever since 2020, for various reasons of national integrity and various instances where the wheel of charitable institutions was lifted to get at the heart and core of the institution, its activities and its service or threat to the interests of the nation, a spate of amendments have been made ever since Budget 2020. And Budget 2022 was a watershed. And still more, notification number 94 of 22, where Rule 17AA was promulgated, which was prescribing books of account and twice the number of books of accounts as records to be mandatorily maintained by all charitable trusts without any threshold limit. And Finance Act 22 and 23, where the tax-free institutions under section 1023C, 4, 5, 6 and 6A were almost visited with amendments which are akin to the compliances and the mode of claiming exemption under section 11, 12, 12A, and now 12AB is another significant change where the registration in a 2-step process of provisional and regular registration for all the 1023 institutions as well as section 11 institutions has brought about a very fundamental change in the taxation of charitable trusts. The entire landscape of taxation of charitable trusts has gone a sea change with the 22 and 23 budgets, and particularly with the largest ever audit report prescribed under the provisions of the Income Tax Act and rules in the name of Form 10B. The permanent registration concept was done away with. It was already done away with under the Foreign Contribution Regulation Act with a 5-year renewal, and similar provision is now on with 22AB, triggered of course from 1/4/21, but now postponed to 1/10/2023. computation, the accounting procedures, the audit report, and devastating consequences, as Dr. C.A. Palvan Kumar sir has already explained, devastating consequences for failing to comply with the various mandates contained in so many sections. I find that normally many chartered accountants are respected if they deal with search and seizure cases. From now on, please recognize trust auditors as the kings of taxation, because right from section 2, subsection 15 to 276D, every section impacts the charity taxation. And so many complexities are involved, a tremendous knowledge, an excellent presence of mind, and a mountainous sense of responsibility are essentially required to promote a trust, to run a trust, and be there with all the compliances to avoid very serious consequences. The specified person concept in section 13.3, specified violations in section 12AB are the game changers. For example, 271A imposes a penalty for a businessman for non-maintenance of books for a maximum of 25,000 rupees. Courts were holding that when 271B was issued to a party for not getting his accounts audited, they were escaping with a 25,000 penalty because there were no books. 271A can be levied to a max of 25,000 and there is no further obligation on them to pay and empty their pocket into the government exchequer. But now, non-maintenance of books would land the trust in a situation where it loses the registration and a very high tax up to 44% can be levied on that. And 48(2)B we have income tax related party transaction. Now related party transactions, even in the case of trust, shall be at arm's length. There are two consequences. In the case of related party transactions, there is going to be tax under section 1310. And 271WAE levies a penalty equivalent to the amount of excessive payment to a trust. That is a 100% penalty for the first failure and 200% penalty for the subsequent failures. I don't think there is no other more punitive measure under the Income Tax Act than non-compliance with the provisions of the charity taxation. It is high time that charity auditors should emerge as a specialist. We have children specialists, ENTs, neurologists, etc. in medicine. So let us be charitable trust specialists. And Dr. C.A. Palvan Kumar would soon be creating a group led by him, and I am ready to join. There are many, and I am very happy that I am informed by Dr. Palvan Kumar that the auditor of Kanakadurga Devasthanam of Vijayawada, Andhra Pradesh is here. I recognize his presence because he is from my home branch. I am extremely delighted to have him with me here because I am not lonely. I have somebody to support me. In case I am not going to deliberate on a few issues, or if I deliberate erroneously, or if I don't deliberate at all, I request Dr. C.A. Palvan Kumar Garu to take care and say, mend and amend wherever I go wrong or wherever I don't track at all. So, this Form 10B is a 360-degree audit report, come assessment order. As C.A. Parvan Kumar sir told, in a 44 AB audit report, I have issued audit reports where the turnover was, say, about 10,000 crores. There are so many who have audited cases with, say, much more, like 10 lakh crores. But it's my privilege. But 44 AB, I am giving various details. The case is taken up for scrutiny and I am scot-free. But here, 10B auditor is certifying the truth and correctness of the computation and virtually passing an assessment order. He is liable for that. And now artificial intelligence is into place, and I am drawing cases from various places where erroneous returns were filed wantonly or mistakenly, claiming excessive refunds, and artificial intelligence, the big boss of the income tax department, is there in place, matching and cross-checking the details, and a spate of 136 notices are issued. I think that it's nice that 136 is now helpful, because if they issue something else, the first fallout would be 200% penalty for misreporting. It's not done. I'm encouraging people to file updated returns and be done with 25% taxation. But here, I'm certifying the truth and correctness. Form 10B, besides the regular, I have given in my slide that the tax auditor here certifies the truth and correctness of the computation. That's the most dangerous part. You are held liable as a professional. Now PMLA Act has liabilities, Income Tax Act has liabilities in the cases of auditors. The ancient Dharma Shastra says there are 4 equal partners in an act. Karta karayita cheva prerakas chanumodaka sukrute dushkrute cheva chatvaras samabhagina. The doer of the act, the director of the act, the instigator of the act, and the approver, Aka, auditor of the act, they have equal responsibility for the deeds or misdeeds or do's and don'ts of the trust. It's one of the most careful things to be addressed while signing the Form 10B audit report, as already pointed out by my senior colleagues. Form 10B is now applicable across all charitable institutions, whether covered by Section 1023C4, 5, 6 and 6A and Section 11. Previously there was a smaller audit report, different audit report called Form 10BB. Now it's a part of history. We are not concerned with that. Let's not deliberate on that. Form 10B is now coming with more than 100 questions, 49 clauses with so many sub-clauses, and 19 schedules. One of the largest I have seen in the Income Tax Act, and we certify under other acts also, like Cooperative Act, there are no such kind of lengthy reports. Besides the incisiveness with which we have to certify the trust audit and trust accounts, it's the width of the coverage, the time we should allocate for preparation and filing of the audit report and finally uploading, which once uploaded has very serious consequences for non-compliances with various terms, should be carefully looked into. And it's high time that charitable trusts should also be equally charitable to their auditors, to remunerate or compensate them for the extensive workload which the statute has put on the heads of the auditors. I request that the people that be in the SIRC communicate this to the institute and see that the minimum recommended remuneration shall be adequately taken care of for the charity auditors. Because, of course, if the government is uncharitable with the charitable trust, it need not necessarily be that the institute should also be equally uncharitable with the trust. People say that with the many amendments in the trust, the government has lost trust in the trust. And Noble Educational Society and Ahmedabad Urban Development Authority's cases show that the Supreme Court also is conscious of the activities that are going behind the screen with the facade of trust. They have thoroughly discouraged. And with this, Form 10B has come to stay, preceded by Rule 17AA. Form 10B, even if there is 1 rupee of foreign contribution, Rule 17AA is mandatory and Form 10B is mandatory. And without giving effect to the sections 1023C and 11, if the gross receipts of a trust or university or educational institution or hospital or medical institution, these are the 5 terms constantly used across the statute book umpteen number of times. So we should get them by heart. I have done them. I think usually it is better for you to follow. So this, whose gross income without giving effect to 1023C or 11 is more than 5,000 crores, you should file Form 10B. Those trusts who have FCRA receipts, who apply income outside India. Applying income outside India without observance of the procedure carved out in Section 11C will be resulting in loss of registration and taxation as per Section 13 subsection 10. A trust is entitled to apply income outside India by making an application to the board, and there were cases where the trusts established in India were, say, coming to the relief of earthquake victims in Nepal or Bhutan, other places. The board was very much, say, fast in responding to the request and granting necessary permission. So 3 conditions for applicability of Form 10B. As already told, Form 10B is a big picture. It's the biggest audit report, as we have already said. It's a 360 degrees coverage. And auditor needs to certify not only the truth and fairness of the accounts, as in the case of any other audit report, but they are also liable to certify the truth and correctness of the computation.
It's not here. It's your laptop or?
Morning earlier, breakfast struck up.
Sir, or
Repeat.
mail sir.
I'll do this. I'll use this. This audit of trust, the normal accounting principles and audit principles equally apply to Form 10B. It need not be detailedly exhorted. Following the normal accounting principles is a must. But Section 13 says that the application of income in the case of charitable trust is allowed only on cash basis. For accrual basis, we have Form 9A and 10, which you are well versed, because I see many grey-haired professionals before me. I need not say it will be carrying coal to the new castle if I delve deep into the basic provisions of the charity taxation. The normal accounting principles shall be observed by trusts. And now normal accounting principles, the observance is a must, but Rule 17 AA, we are going to visit it in the next few minutes. It's actually a real game changer, as I already pointed out. And format of financial statements, already ICAI will be very fast to react in situations. Came up with a technical guide, and which says that serious implications like 115 BBI and other things, anonymous donations, etc. They have said that where address or identity of the donor was not given or incompletely given, they can be taxed as anonymous donations. That's one part of the technical guide. And disclosure of accounting policies in the notes to accounts we have been doing in the case of 44 AD, 44 AB reports also, that accounts are made up on historical basis. We have been following mercantile system of accounting, and we have been following prescribed. And there are ICDS, say normal accounting principles, Rule 17 AA, Section 13, and disclosure of accounting principles. No depreciation shall be there. When you say that normal accounting principles are followed, you should say you have accounted for the depreciation. But now, even if you have accounted for the depreciation, it should be added back while computing the income because of the specific provision. Not only in the case of charitable taxes, in all cases where the SSCs won their cases before either the tribunals, high courts, or the Supreme Court, the government were the first to react and take all the steps forthwith to annihilate the impact of the decision and come with an amendment or a new provision. It has also happened in the case of depreciation, carry forward of excessive application in the case of trust. Now depreciation is not allowable because capital expenditure is allowed as a deduction. And carry forward, even when it was promulgated by the Supreme Court that carry forward of excess application to future years was possible, it was undone by way of an amendment. And whatever accounting principles are followed, they should be consistently followed, as in the case of other entities which we audit. And we go to columns 1 and 7. These are only the basic details. The PAN of the auditee, of course we know that. The name of the auditee, the assessment year. Previous year, if it is the first year, the starting date would not be 1st of April, but the date of incorporation or commencement. And registered address and other address if applicable. Refer note, type of the auditee, trust, society and company or others. What about this other address and the notes? We will go to that. As per Rule 17 AA, the accounts of the trust or university or educational institution or medical institution or hospital shall be maintained at the registered office of the trust or institution. But by way of a resolution, they can be kept and maintained in manual form, electronic form or digital form at a place other than the registered office. A resolution shall be passed and shall be intimated within 7 days to the jurisdictional commissioner, and such an address shall be filled up here, and we should take care that the procedure carved out in the Act and rules for permission to keep the books or records otherwise than at the registered office is followed or not. We should examine the documentary evidence and then only report. columns 8 and 9, whether the auditee is established under an instrument, yes or no. In case not so established, auditor has to make a comment as to the proof of creation of the trust and case law enabling the trust for registration as such as per section 12 AB /1023. This note is made by me, but the form says whether the auditee is established under an instrument. Here we have trusts, we have societies, we have section 8 companies, we have others also where trusts were created orally or by wills. In cases where even Form 10A has envisaged a situation where a trust is not created by a document, like memorandum and bylaws in the case of a company incorporated or a society incorporated as per the state or central laws, and in the case of a trust deed duly registered as per law. There are so many holy institutions like say Kumar sir were referring in earlier deliberations and even recently, the Adi Shankaracharya Trust, the Chaturamnaya Pithas of Adi Shankaracharya Trust, and I for one have temples which date back to 400 years, which were not created on the strength of a document, or even if it was founded on the strength of a document, the document is no longer available. In all such cases, Form 10A also allows that the proof of creation of the document can be self-certified. That's allowed, and we have specific cases, the old temples, monasteries, ashrams, there need not be anything. For temples, relevant say state, they may have some endowments act. In Andhra Pradesh we have got AP Endowments Act. Even if a temple was say consecrated about 2000 years ago, there will be a listing of the particular thing and a notification as per the provisions of the AP Endowments Act. Similar endowment acts will be there in all the states. Such a notification is a valid document. Even if it is there, even if it's not there, a self-certification by the trustee, applicant of the trustees or the applicants is sufficient. We have the cases of the famous Commission of Income Tax versus Lakshmi Narayan Maharaj, 1984 Madhya Pradesh High Court, and Principal CIT exemptions versus Dawoodi Bohra Masjid, 2018 case, very recent case of Gujarat, where there was a trust, there has been a trust for so many years, even say spanning for over hundreds of years, but there is no document of creation. It will not be an impediment in grant of registration under say 1023C or section 11 as per the new procedure under section 12AB. So we need not be discouraged that there is no document. Still take up the case, get registration, get audit, and get your fee. Rule 17A also says when there is no specific document for creation of the trust, there should be a self-certification. And details of registration or provisional registration or approval or provisional approval or notification of the auditee under the Income Tax Act. Section 12AB was introduced in the Finance Act 2020. So by 30th June 2021, every trust was obliged to file an application for re-registration, and in the case of new trusts or institution, they should be making an application for provisional registration, and within 6 months of the commencement of its activities shall make a regular registration in Form 10AB for being in force for the next 3 years, and in both cases the renewal should be made at least 6 months before the expiry period. I am just rushing through because they are not immediately connected with the Form 10AB reports. All these are the prescribed provisions and rules under the Income Tax Act. And now by virtue of circular number 6 of 2023, all the timelines are extended till 30th September 2023. In the case of existing trusts, as at the promulgation of section 12AB, if a trust failed to make an application as prescribed under section 12AB, it can be made up to 30th September 2023. If a wrong format of application was used, say it was filed in form 10AB rather than in 10A, it can be modified. Or if it is not done so far, if it was refused for being out of time, it can be subjected to reapplication and renewal can be obtained. Such renewal will be valid for the next 3 years. Of course, all new trusts, there was, say, this two-step registration, provisional and regular registration, nothing like a permanent registration. It has been there since 21, but now circular number 6 of 2023 dated 24th May 2023 has changed the timelines. And it has also changed one more timeline, filing form 9A and form 10. They were originally promulgated in the Act to be filed 2 months before the date of filing of the return. They were due by 31st July normally, but now they are also extended along with the application for registration. So kindly everybody take a print of circular number 6 of 2023, keep it on your table, file it carefully. It has cured almost all the deficiencies on the part of the trusts or the auditor's offices in complying with the provisions of section 12AB. When once the registration is done, the details to be provided in question number 9 are just very simple. The section under which registered, as I said, section 1023C, 4, 5, 6 or 6A or section 11, date of registration or provisional registration, approval. Approval has timelines, but Supreme Court has categorically stated that non-observance of the timeline by the Commissioner for grant of registration does not result in automatic registration, but the defects should be cured or it should be subjected to reapplication. So I think virtually it's almost, I should not say in an open house, it's a dead letter in the statute book. The timeline has no impact on the department. It is only there for us to learn, deliberate and from a dais or discuss among ourselves. Registration or approval notification or unique registration number, it's automatically generated once we file. Authority granting the registration, you can get it from the signatory to the form. Due date from which the registration is effective, that's also there in the thing. But here there were some snags in section 12AB. It should be from the previous year. In the case of new trusts, which when you make in financial year 2020-23, the registration will be effective from 23-24. That is now rectified. But commencement of activities, it has a significance. 6 months from the date of commencement. What denotes commencement of the activities? The senior professionals, they have interpreted that registration or collection of donations is not the commencement of activity. Commencement of activity is the first event where you apply the income of a trust or institution for the purposes for which it was created. It is a point to be noted. There is no specific case law on this so far, or CBDT has not come up with a sort of notification or circular. 10, form number 10, it may not be quite audible because I have made a GPG. I will just read out. Details of registration I have already given. Column 10, details of all the authors or founders of the settlers of the trustees, members of the society, members of the government council, directors, shareholders, holding 5% or more of shareholding or office bearers of the auditee at any time during the previous year. The details are name of the person, relation, percentage of shareholding in the case of shareholder, because there are Section 8 companies which are created on a non-profit basis, then if the shareholders will be the trustees, the percentage of shareholding shall be mentioned here. Unique ID number. ID means ID of the person. Say in the case of individuals, there are 6 kinds of ID as mentioned in form notes to form 10A. They can be picked up, and the address, of course, it's no matter, it's there in the Aadhaar. Whether there is a change in relation during the previous year of audit, yes or no. If yes, specify the change. The managing trustee has become a trustee, or trustee has ceased to be a trustee, new trustee has come into, say, place in the case of a retiring or, say, disappearing trustee. And this is part A. If the trustee is not an individual, that is, a government nominee can be a trustee, a company can be a trustee, an artificial juridical entity can be a trustee. In all such cases, the name, unique identification number, ID code, address, non-individual person mentioned in row 10A, in which beneficial ownership is held, percentage of beneficial ownership, whether there is any change during the previous year, if yes, specify the change. These are all, say, normal details. There is nothing, so no detailed explanation is called for. It's only picking the data and filling the form. Objects of the trust. Section 2, subsection 15. Objects of the trust. Actually, there were 2 landmark judgments on the objects in the year 22. As we all know, New Noble Society. It was first passed by Andhra Pradesh High Court. I think it was almost 10 years since the original New Noble Society judgment was passed by the Andhra Pradesh High Court. I have corrected the objects clause of all education institutions 10 years ago with me. I have ensured that only education was mentioned as the objects. In all such cases, I have dropped all other objects. I got the amendments made, say, 10 years ago. If you want to give me a hand, you are free to do that. Because one day I never imagined that the case would go to Supreme Court, and Supreme Court would be coming up with a path-breaking judgment like New Noble Society, with so many implications which we are going to deliberate in the next few minutes. Objects of the trust, they are very important because there has been cases.
Can you go to the previous slide?
Sir?
This section says the founders of the trustee and all that. So if the founders are not now available, can we give the current year's trustees' name and address?
Actually, the present trustees only, their name should be given. If it was established in 1934 by, say, a national leader, I don't think we should report that. Only trustees as at present. As at present. Thank you, sir.
Section 8 companies alone can be there. There is no shareholding in Section 8 companies. Then why this 5% is there?
In case it was there, they have only, say, if there is nothing like that, we always say that not applicable, as you know, because only, actually it has got some, say, implication like this. If the trust was created by a company, Section 8 company, as a holding company, and it's having an object of general public utility, and for carrying on incidental business, you can float a company, and that company's managing director can be trustee in the case of this holding Section 8 company. That is one remote situation. I have only, say, thought of the mention. It's just like that. It's only a theoretical possibility. I have not personally come across such cases. But holding and subsidiary companies in the case of trust is almost a waste for the trust, and also not remunerative for the trust and the auditor also. Objects clause has got objects clause. So doctrine of ultra vires says there was a famous case. The shareholder in a gold mining company should be sure that his funds are not dissipated in a fried fish shop. There was an English case. So doctrine of ultra vires ensures that the company or the institution works for the above objectives. This objects clause should be carefully drafted, should be scrupulously followed, and incisively reported in the audit report. Non-observance of the audit clause, that is, spending funds for purposes other than the objects clause, is a specified event where registration can be cancelled as per section 12AB, and the consequences are there is an assessment. Ignoring the status of trust and taxing at normal rates. And we have a specific notes in the Form 10B. Object is religious, relief of the poor, education, medical relief, yoga, preservation of environment, preservation of monuments or places of historical importance, artistic or historic importance, and advancement of any other advancement of general public utility. 2008 there was a big amendment in this particular subclause of 2 subsection 50. While drafting the objects clause itself, I have only touched 4 or 5 points, not very relevant but still not very irrelevant for reporting the things, because we see that trusts are formed for carrying out, say, promote national integration, international brotherhood, say, for peace and integration, etc. The Supreme Court has been derisive that objects of such general nature without an agenda, they are not permissible. They should be specific. There should be an object coupled with action. National integration, peace, social justice not favored. There should be, and there are public charitable in nature, but they are covered by other sections like PF trust, gratuity trust, employee welfare trust, health benefit trust, etc. They are only meant for the employees of the company or their families, education, providing education to them, not to the general public. All these trusts are covered by sections other than section 23C and section 11. And mere incidental benefit to the poor, like railway contracts and midday meal scheme. There is a Kerala High Court decision where a society was formed to engage people, outsource people for preparation and service of midday meals as per the state government's directive. I am a trust. I am carrying on, I am getting a contract for providing midday meal to 100 schools. I draw my employees from poor families so that the poor families will be having some work, employment and income. Merely because the employees are drawn from poor families, it cannot be an objective of relief of the poor. It's nothing but execution of a government contract, and section 11 benefit was denied by the Kerala High Court. Another case was there where railway contract was obtained with the same philosophy. It was also denied registration.
Sir, taking care of the welfare of the differently able people.
Yeah. Tell me. Welfare of?
The welfare of the differently able people, disabled people.
Disabled people, actually, that will be helping the poor. Even if an employment, Income Tax Act also says you have an accelerated deduction for salary to the extent of 133% in the case of salary paid to differently abled people. Differently, like that, if you are helping only to the differently abled people across the society without any barriers of community, caste, religion or region, then it's a general charitable trust providing for the relief of the poor, and you are entitled to get registered. Actually, this section 13 has got some specified violation where benefit to a particular religious community or a caste is prohibited, but there are old trusts. Government, I think, has given an amendment saying that all the existing, like say, this Kshatriya Welfare Trust or other VC Welfare Trust like that, they can continue without being hit by the new provision. But now no new trust can be created addressed for the benefit of a particular religious community or caste from now onwards. This is my opinion. You can say actually thrash it out as you come to it, and there are elders who always ready to guide us, some for a fee and some gratuitously.
Can it be a list of persons of 1 year continued for?
It becomes a private trust, sir. It's already called out. Private trust is a specified violation under section 12AB. It loses the registration. It is specifically covered under section 12AB, sir. This is one of the confusing sections for me, but I have come out, say, learned there are new cases about the objects and modification of objects which do not conform to the conditions of registration. Now section 12AB says, in case there is an old registration, now I am filing form 10A, there is a registration. At the time of renewal of registration, I will form 10AB. Thus particular registration can be granted subject to fulfillment of certain conditions. Recently, one principal commissioner has, say, imposed about 12 conditions for grant of registration, which are not strictly in conformity with the provisions of the Act. Previously also, principal commissioners were, say, giving registration. Say, if you file your previous returns, or you must file returns by 30th June, not 31st July, or you must do this, do that, and all amendments shall be made with the prior approval of the commissioner. All these things were there. Actually, all of them were subjected to judicial scrutiny, and in all cases where the conditions were repugnant to the provisions of the Income Tax Act, all such were assailed by the courts, and now government has come up smartly with all amendments. Now we have a new set of rules, new set of code. Previously section 132 was only a code in itself. 153A, B, C, D were a code by itself. Now charitable trust is a code by itself. I think something is more in the offing. Section 20.3 has got 25 provisos. I have written down every proviso, but I still get confused. And section 11 is there, 12, 12A, 12AB are there. I think next budget they will be integrating section 20.3C and section 11 and come with a very nice and neat code, duly renumbered and convenient for the reader, implementer and the auditor. Here objects of the audit, I have already said, non-observance of the audits results in loss of registration and taxation of the trust income with say applicable rates. Here there is one problem, we should know this. So when section 1310 is triggered by non-observance of the objects clause by a trust, income shall be computed at normal rates. If it's a business, okay, it can be computed as per chapter 4 and etc. But if it is income from other sources like voluntary contributions, all capital receipts and capital expenditure, they are eliminated. Only revenue income and revenue expenditure are considered. When they are positioned side by side, section 57 deduction is only for those expenses for earning the income subject to tax under section 56. I have got voluntary contributions. I have not spent anything for earning voluntary contributions. So can there be a chance where I can claim a deduction under section 57? Voluntary contributions have no expenditure for earning it. So under these circumstances, there cannot be a deduction under section 57 and the entire gross receipts of the trust can be subjected to taxation. That is one situation which I envisage. I don't think somebody, luckily, maybe next year we will hear such cases and we will again have a meeting to sort out the issues, probably generating further say litigation. This is also, there are so many issues which are unanswered, which are answered unfavorably, which are not in line with the, say, actually equity, principles of equity and justice. They are going to be challenged, and government is not going to, say, give in, and the Honorable Supreme Court is not going to accept the trust contentions going by the New Noble Society and Ahmedabad urban development cases. Recent Supreme Court Noble Educational Society's case and its key takeaways, Ahmedabad Urban Development Authority case and its key takeaways. I have run through them with 2 slides. How much time I have?
You have to complete it.
No. How many minutes more I have? Because I don't have a watch.
Half an hour. What is there?
There, clock is there, but half an hour I should complete. That's all. Say, give me alert 5 minutes before that. Yeah, I think I will be completing that even before that.
Organizer says, now itself he wants to give tea break.
Tea break, huh? Okay.
Actually, the
Thank you for your hospitality. We'll break for tea.
Yeah, all are requested to break.
So you will serve it here or?
No, here, opposite to this hall, cannot be.
Okay. I also love giving a break. So I'm not sorry for the break. It's only a commercial, tea commercial. Let's rejoin.
All are requested to quickly reassemble within 5 minutes. I'm going to solve today. WhatsApp ಕೂಡ ಒಂದು
Your kind attention, please. Your kind attention. The charitable trust train is ready to start on platform number 1. Please assemble. If you miss the bus. You don't catch the train, you are going to miss the bus. Okay, we are assuming.
It will be derailed, sir.
Yeah. Why it's not clear? Okay. So we have just mentioned about the objectives clause. We have seen 6 clauses. The most contentious among this is object of general public utility. Previously it was their object of public general utility, not for the purpose of earning profit, etc., etc. It was not there. It's wise. And now there are 2 things. There are 11.4 and 11.4a maintains say separate set of books for the other objects, and the business shall be incidental to the objects. Before that, object of general public utility was subjected to comment and a dictum by the Honorable Supreme Court in these 2 cases. We will see very quickly, because I have only, I think, 20 minutes more to complete my deliberation successfully or otherwise. Noble Educational Society is a case from Andhra Pradesh High Court, where the education, previously there was Indian Express newspaper's case, where publishing of newspaper, enlightening the public on the various happenings of the state, the country and the globe was considered as an education, and the Indian Express Newspapers Private Limited was declared as a charitable trust. But now scholastic education is only declared as education for the purposes of Section 2, subsection 15 by the Honorable Supreme Court in this case. It has toppled all the earlier cases and has commenced or heralded a new regime. Requirement and educational institutions we know, I float a society. In all states, government recognized schools are run only by non-profit societies or organizations. But they have to construct buildings, they have to build the required infrastructure, collect fee and give training or education, whatever it is. There, the requirement of educational institution, society or trust seeking requests is solely to engage itself in education or educational activities and not engage in any activity which are unreferred to in education. This particular judgment part replies only to section 1023C. University or other educational institution existing solely for education. Now 1023C, 3A, 3B, 4, 5, 6 and 6A are covered by the registration provisions, return provisions and income computation provisions, whatnot. Here 1023C clause, existing solely for education means there should not be any other objective. If there is any other objective like relief of poor or medical relief, etc., it is better to discontinue registration and change over to section 11. Now from 22 onwards, a particular organization or institution or establishment or corporation or trust can have registration either under 1023C or section 11. If you have both, one of them should be dropped. So existing solely for education means all educational societies which are being audited by us, we must check, recheck and recheck that it contains only education as its objectives. That is, providing school education, college education, running hostels, running libraries, running reading rooms, assistance to education. That's all. It does not mean just imparting training. Whatever is, education in all its, dimensions should be covered, and a society for 1023C exemption shall exist. Educational society existing, claiming exemption under 1023C should have education as the only objectives. Relief of flood victims, relief of persons distressed in natural calamities, drop all those things. If an educational trust is giving a donation to a Prime Minister's National Relief Fund, it is not spending for its objectives. It can be disallowed and taxed. It applies for section 11 also. While considering applications for approval under section 2023, Commissioner is not bound to examine any objects or institutions, only objects of institutions, to ascertain genuineness. He is also free to call for audited accounts or other documents for recording satisfaction where society, trust or institution genuinely seeks to achieve objects with which it professes. Previously, this was there for section 11. Commissioner of Income Tax should examine only the objects, genuineness of the objects. There is nothing like examination of the activities at the inception. Now it's also gone. For registration and 12AB, the Commissioner is entitled to examine the objects and also examine the activities. That's all old case law, even if it was delivered by the Supreme Court. So 1023 approval, if I am making an approval for a university or educational institution, hospital or medical institution, the Commissioner should examine whether the institution is genuinely carrying on the activities which it professes in its objects class. Otherwise, approval under 1023C is denied. If it is, say, education and other objects are there in section 11 trust, I am a society, ABC society, providing education, providing relief of the poor, providing medical relief to the students. I can have get registered in section 11. Then also this judgment mandates that the registering authority should examine that the objects are clearly mentioned and scrupulously followed. And registration of trusts or charities is obligatory under state or local laws, and concerned trust, society or other institution and seeking approval under section 1023 should also comply with the provisions of such state laws. This would enable the commissioner or concerned authority to ascertain genuine of the trust of the society. Why we are discussing this is section Form 10B applies to educational institutions also, 1023 institutions also. Previously they were covered by 10BB. So come 1423 they are covered by Form 10B. So if you say that you have an approval for 1023 institution, we should ensure that it's not hit by the mischief of this new noble educational society's case. If you are a pure educational society under 1023C and you are giving a report in Form 10B, see that it only pursues education objective and nothing else. If it is a trust carrying on education also among other things, see that the objects clause is not violated. Your objects are important. Your activities shall align with the objectives. This is the diktat of New Noble Educational Society. And there have been instances where lenient view has been taken in the case of educational institutions and universities, because the government has always been like that. Recently I have shared with some of my friends where I have applied to the CBDT for condonation of 840 days of delay in filing Form 10B, which was filed by my colleague, and said maybe inadvertently or not well versed with the provisions of the Act. Nobody is a Pandit, me or somebody else, you or somebody else. So he filed. It's a case of university. I got the same condoned by presenting the genuine reasons for not filing it before 840 days of the due date. It was condoned. My contention, my understanding is, it was a university promulgated by the state for the benefit of the general public. So they should take a lenient view. Now that also is not there. Even say big famous temples where we prostrate, the administrators have committed defaults and paid hefty fines. It's in the newspapers and on the TV. So there is nothing like mincing words with the department now. We should fall in line. So this Noble Educational Society's case is that. 10 minutes more to finish because this is very important. Ahmedabad Urban Development Authority's case. It's actually a treatise on the object of general public utility. There are so many corporations like Agricultural Market Committee, like Urban Development Authority, Port Development Authority, etc. They are registered at trusts, though government corporations. They collect cess, fee or other remuneration for the services. It comes under object of general public utility. They say that such, fee, cess or other consideration in the case of all government corporations shall be considered as reasonable even if it results in a profit. But where an educational society or say other trust or other society, hospital or other institution, because hospitals charge a fee, they are registered as charities and 1023C or section 11. Unless they charge, they can't run the show. But where the Ahmedabad Urban Development Authority case has laid down that excessive charges and stashing away money from the public, even if it is again rolled out for, say, making more charity, is objectionable and disentitles the charitable trust for exemption under section 11. Section object of other public utility and the business carried on as incidental for realizing the objective of general public utility should be carefully followed by fixing the fee, cess or other remuneration to cover the costs and leave a reasonable surplus. And what is reasonable surplus is a matter to be considered as per the facts of each case. But this dictum is wherever you are a trust, you are carrying an object of general public utility, you are collecting cess, fee or other remuneration, be reasonable, don't overcharge. That may result in losing your registration, which will be, say, you will be failing the administrators or trustees, they fail in their duties to take the trust to the next level. Provisional registration, activity, commencement, application for registration status. It is actually in two stages. Section 12 AC 1(3) prescribes filing of application for regular registration for the provisional registration holders who are fresh applicants within 6 months of commencement of the activities. Relevant rule is 17A2, relevant rule is Form 10BAB, because all the existing trusts which are having Section 12A registration are already subjected to refiling by us as back as in 21, 22 or even in 23. Those who are seeking provisional registration should make an application immediately and again within 6 months of the commencement of activities. And now with the new amendment, if a trust has been in existence, one of our members are asking, I have a trust, it is in existence for the last 6 months or 6 years. Make a fresh application, get registration, and get re-registration before 6 months of the expiry. But here, I have a word of caution for all of our colleagues. Now, the provisos to section 11, so where previously I have applied for registration, pending a grant of registration, AO was issuing notices at 148 by looking at my bank accounts or looking at the document of purchase or sale of property of the trust. That was prohibited. Section 11 benefit cannot be denied during the pendency of my application. Or 148 notices cannot be given for earlier years, because I applied in 2021. I had some activities in 1819 and 1920. Having seen that I have activities earlier before the application for registration, AO was precluded from issuing notices on 148 for the simple reason that I was not registered for the earlier years. All those provisions are now dropped, and one trust which has been in existence for years and has not taken care to apply for registration earlier, if they apply now, there is a danger of receiving notices on 148 EAB and reopening of the cases, and there is no escape from taxation. Books of account and document prescribe place, manner and maintenance of compliance. As I said, notification number 94 of 2022, I think it was on 10th August 2022, Rule 17AA was notified. It has 3 limbs. The manner of keeping and the maintaining the books of account. Rule section F we see for business, it is a very small rule, specified provisions on 44AA. You have a day book, say cash book, ledger, and other books which enable computation of income. But now it's not the case with Rule 17A. It has got 8 books and 9 records. Manner of keeping the means means, maintaining the books of account means, it can be manual, electronic or digital formats, sub-rule 2. The place of keeping already we have discussed at the registered office or by a resolution at a different address to be intimated to the AO within 7 days of passing of the resolution to keep it. I have, say, a registered office here just next to SIRC. It's an educational society. I have a school in, say, Podambakam. I can pass a resolution stating that all the books of account will be maintained at the college premises at Podambakam. The resolution shall be passed and should be informed to jurisdictional AO within 7 days. And period of books is, it is 10 years from the end of the relevant assessment year. It actually works out to 11 years from the end of the relevant previous year. Now 148B says only 3 years normally reassessment, or up to 10 years if the stake was beyond 50 lakhs. Now for trust the retention of the books is 11 years from the end of the relevant previous year. And what are those books? These books apply both to 1023C and Section 11 institutions. The cash book, ledger, journal, bills issued to the trust, receipts issued by the SSE. Any other books showing the transactions of the trust or institution. These are the books prescribed. And in the case of business incidental to the object of general public utility covered by section 11.4 and 11.4A, separate books should be maintained. If separate books are not maintained for such incidental business, the trust loses its exemption and the income is taxed at normal rates. What are those records? This kind of record maintenance is not found in the case of business even with 1 lakh crore turnover. Record is of all the projects and institutions run by the person with name, address and objects of the project. The record of voluntary contributions with donors' name, address, PAN and Aadhaar. The income from property held under trust with list of such properties. Property under trust is defined as a business undertaking also, which is covered, by the business incidental to the carrying on of object of general public utility. So while listing out the maintaining the record of income from property, if there are any business units which are incidental to the objects of the trust, such details of business undertaking, place, address, GST registration, etc. shall be mentioned. And income of the fund or institution, trust, university or other educational institution or hospital or medical institution, other than contributions received. So we are noting down the record of contributions. We are also maintaining a record of other incomes from the incomes other than from contributions. And another thing is record of application of income in India with the amount, name of the person to whom any credit or payment is made and related objects for which it was paid. Actually what we write in accounts is, I am running a school, I am giving a salary to the principal. I will say salary to principal. So and so college. If I have more colleges, I will say college by college. I will say it is made, if it is more than 10,000, I will make by RTGS. Income computation, 40A3 and 40A1A are also applicable to trusts. There should be TDS, there should be payment through digital modes or banking channels if the payment is more than 10,000 rupees. And besides writing this I have received voluntary contributions or I have received fee. I'll say contributions are noted in a book. Voluntary contributions are received in another book. Both these things are recorded in my cash book. My cash book shows salary is paid this much, rent paid this much, electricity charges paid this much, etc. Now there is one record. Electricity charges paid. Tamil Nadu Electrical Supply Corporation. We have AP Central Power Distribution Corporation Limited in Andhra Pradesh. So same should be there. So when you pay an electricity bill, it's an application. The record should be maintained. Power bill for the month paid to so and so. Office, headquarters, Vidyut Bhavan, Mount Road, Chennai.
Is it possible, sir?
Don't ask me if it is possible or not. I am only here to tell you what the act says. If it is not possible, do one thing. Don't do it, or first thing is don't float a trust.
Everyone is maintaining proper vouchers.
I am not denying that fact, sir. The only thing is, I am writing a voucher, making the payment through banking channels. The pay is identified. Everything is there. But record of application means I should write the same thing in the record. As an auditor, you must comment whether particular record is not maintained. If you say all electricity bills were paid, covered by vouchers, bills original, they were found genuine. Even I have extracted a statement from the portal, from say Tamil Nadu online or AP online, we can get all those things. I have verified. That is an insufficient, inadequate compliance of Rule 17AA unless you write all these details in a separate book. Is it possible means it is or it is not. Because you are doing the same work twice and thrice over. Nobody would do that. The only thing is, besides discussing the provisions of the rules and the records to be maintained, can we raise a voice to show, demonstrate that there is unnecessary and avoidable duplication of work in the case of trusts, because trusts are only to help people who are not able to help themselves. Don't make trusts helpless, because they can never be helpful to others. Auditors also will be similarly helpless. The only thing is it takes 2 more years for them to say that we are not going to certify trust accounts, because 100 things they comply and 200 things they can't comply. But inability to compliance is not a reason, is not an excuse. As ignorance of law is no excuse. So somebody says, I don't know, I have written everything, I don't know that record should be maintained. The auditor knows. Even if he doesn't know, Form 10B asks you. So record of application, record of payments to institutions or trusts, and application of income outside India containing the details of amount, name and address of the payee. Application of income outside India is a specified violation. If it is not properly preceded by CBDT's permission, it results in deregistration of the trust and taxation at normal rates. And deemed application of income as per section 11(1)'s explanation clause 2, record shall be maintained. This clause states that in the case of non-application of income due to non-receipt of income in a previous year, trust can file Form 9A and postpone the application, because we know some amount is received on 30th March or even 25th March. You can't say spend it before that. You keep it in a bank account. You file Form 9A. Now the due date is 2 months before the due date for filing. Just now one of our friends is asking. So in the case of audits, it's okay, 31st July. In the case of non-audit cases, it is 31st July. Shall we file Form 9A in the, say before 31st May? It's not there. Actually, in the case of the gross receipts falling below 2,50,000, nothing happens if you file or you don't file. If it is a trust, you are obliged to file irrespective of the quantum of the income. So there will not be any consequences also if you don't file Form 9A or 10, because the maximum income is 2,50,000. Even if the entire thing is disallowed, nothing is going to happen. Actually, when we were having tea, one of our friends asked me this question. So I was more interested in the tea than in answering his question. So now it's time to say brood and answer. So postpone the application. Unreceived amount is applied in the previous year in which Form A was filed and not in the year of actual application. That is the next year in which it was taken into account. That is deemed application. So in 22-23, I have received 10 lakhs, which I could not apply in 22-23. It was, say, taken out of my income by filing 9A. When it is applied ultimately in the next financial year, the application is a deemed application for the next financial year. That kind of application out of the funds which could not be explained for the reasons mentioned are covered by Form 9A should be considered as deemed application, and a record must be maintained by the trust showing such deemed applications. An income accumulated as per section explanation 3 to 11.2, where 85% of the income could not be applied in a previous year, the trust needs to file Form 10 2 months prior to ITR due date and keep the accumulation in modes specified in section 11.5. You have kept some bank deposit, so you have applied only 70%, 15% you could not apply. You have kept it in a bank account. Don't just write it in the books of account. Maintain a record of income accumulated which falls below 85% and maintain a record of the fixed deposits. Record of money invested. First write a record of income accumulated. Next record is record of maintenance. First quantify the income. 15% of 1 lakh, 15,000, write it in a record. Next record is where it was invested, in Catholic Syrian Bank or Punjab National Bank. Because Punjab National Bank I like because I paid my fee in the Punjab National Bank across the road. And record of money invested other than those mentioned in section 11.5. If 11.5 is not observed, say instead of depositing in the modes prescribed under section 11.5, you have invested in some, say, Nidhi company or say private finance company, something, write it. Because you will be doing it at your own peril. Because once you write it means auditor picks it up and the ITR 7 is there to disallow that. So all these details, before they are picked up by the auditor for reporting, shall be very carefully maintained by the trust. I don't know, not the trust auditors, but the trust accountants need a full 1 week training session to write the record and say accounts of the trust and maintaining the very, very detailed record of the trusts and institutions. And what are the consequences of non-maintenance? I have already told you. They should be at the place, they should be in the manner, they should be retained for the period prescribed under Rule 17AA. If they are not there, no section 11 and 12 benefit. 11.1A says when a capital asset is sold and it is used for acquiring another capital asset, and as per 1978 circular, if the proceeds of sale of a removable property are kept in a fixed deposit with a tenure of 6 months or above, it is treated as another capital asset and exemption is allowed under section 11.1A. That is not there. And when there is no maintenance of books of account, income is computed as per section 13. There, capital receipts and capital expenditure are excluded from the computation. And if there is no maintenance of books, there is no accumulation for 5 years, because we file Form 10 where the accumulation is made for a maximum of 5 years, and non-maintenance of books disentitles that benefit. And object of general public utility, here you have to mention whether the activity is being carried on by the auditee in the nature of trade, commerce or business. If yes, the percentage of receipt, because the maximum is 20% of the gross receipts. If it exceeds, it is subject to disallowance. Whether such an activity in the nature of trade, commerce is undertaken in the course of actual carrying on of such advancement of any other objects of general public utility, yes or no. Whether any activity of rendering service in relation to the trade, yes or no. If then the percentage of receipt from such activity. Whether activity of such rendering service is undertaken in the course of, because there are business, trade, commerce, business, service or other activity, incidental. For all these things, write the name of the activity, state the amount and express it as a percentage of the gross receipts. This is what this particular clause asks you. It is actually financial information being filled out. It should be extracted from the records. No, say further explanation is called for. Clause number 17 and 18. Clause number 17, 18 also is about incidental business. As I have already told you, section 11.4 and 11.4a are inextricably linked with each other. Property held under trust, I have already told you that it includes business. 11.4 and 4a are complementary. Business undertaking, business of the trust only incidental. It's already decided by the Madras High Court in 330 ITR. I have given the citation. AO shall say compute income from business as per law. But if no separate books are maintained as envisaged in section 11 subsection 4, the trust loses its exemption. Excess shall be reckoned as applied for purposes other than charitable or religious purposes and taxed accordingly. If 11.4 receipts are in excess of 20% of the gross receipts, that excess shall not be treated as application and it is taxable at the normal rates. Clause number 18, we have seen, to report the business income mentioned, say yes. If yes, details of the business code as per ITR. If business is not incidental to objects of the trust or non-maintenance of separate books, we have already discussed, results in cancellation of registration as per section 12b4, which is a specified violation. TDS made by others for the trust, it can be extracted from 26 years. Clause 20 to 22, 23, 1, 2, 3 of Form 10 BD. This clause 20 is applicability of 22nd proviso to 23C, that is applicability of 48 to be reported in the case of 1023 institutions, for which also it is made mandatory. 21 is the trust has, it is applicable only for the cases covered by 80G. For all 80G, irrespective of the amount of donation, we must file Form 10 BD before the 31st May. Now it's circular number 6 of 2023 extended it to 30th September 2023. But for every year from next year onwards, the record of donations received by 80G institutions, 80G 2 or 5 or whatever it is, they should be reported in 10 BD. Name of the donor, address of the donor, PAN of the donor, Aadhaar of the donor. 10 BD after filing, you will get a 10 BE. That should be given to the donor. They are cross-checked by artificial intelligence. If there is a mismatch, the trust is called to explain, and the donor's claim under 80G is denied. It's already happening for this year. It's going to continue in the future also. We can be sure about that.
Sir, what about the donations in kind?
Well, just give me 1 second, sir, because I have to rush through the presentation in the next 5 minutes. We will just reserve the questions. We will definitely answer. The only thing is I am worried about my next speakers, intruding into the room and asking me to get up. Clause 22 says the total donations reported under 10BD. But for 10BD, say if the name and address of the donor are not given, he has sent by check, definitely created in my bank account, there was no violation. But I don't have the details. There could be such donations also. And all such donations where I have not filed for 10BD, there is nothing, say, all these things should be aggregated and reported in clauses 23, 1, 2 and 3 of Form 10B, which are not eligible for deduction under 80G, as in the case of cash donations under section more than 2,000 of cash donation ineligible. That should also be, say, given, because if somebody claims a donation, cash donation of 4,000 rupees and his PAN is reported by me, or I said that it is not found in the list of 10BDs filed by me, that is automatically disallowed by the department with the use of AI now. For that, we have to give the details of, say, 23. Breakup of eligible donations in cash below 23 shall be given by extracting the total. Ineligible donations in cash about 22,000 should be given, but is inter-trust donations, they are not eligible. Corpus donations, inter-trust donations for corpus, they are not eligible, or that ineligible donations in cash above 2,000 should be given. Other ineligible donations also should be given. This is, we have talked about the record to be maintained in respect of the voluntary contributions in cash in kind by the trust. As per Rule 17AA, all those details should be extracted and reported here. Aggregate of donations in clauses 23 and subclauses, and clause 25 says foreign contribution should be separately reported. They have given a schedule in Form 10B. I have extracted the schedule. Nature of the FC received in the previous year, amount received, application out of FC. Corpus, non-corpus, total. Say this particular FC received in the previous year total and application for FC, they are cross-verified with the FC returns of the trust. It is only for this purpose. You report one figure here or one figure there, they are cut. Again, donations received are, say there are so many donations, corpus donations, voluntary donations and anonymous donations. 115 BBC anonymous donations is there. That particular thing is donations in kind. The Act does not say I have donated a computer or 100 computers to a trust. They should be reported. And how to value? Actually the Act and rules, they don't guide, but say for our safety, issued guideline is they should be taken at the fair market value of the donation as on the date of donation. And anonymous donations, subsection 3 says, anonymous donations under section 224 of 2A are where the donor's identity is not known to the donee. That is the definition. Subsection 1 of 115 BBC says, in the case of anonymous donations, you don't know the donor's name, means aggregate all such figures. 5% of the total donations or say 1 lakh, whichever is higher, it is exempt. 1 lakh or 5% of the donations, you keep that amount, that is exempt amount. The balance is taxable at 30%. Anonymous donations are taxable at 30% as per 115 BBC. First, total donations are say 10 lakhs, say 20 lakhs, Anonymous donations are 5 lakhs. So 20 lakhs, 20 lakhs are the total donations. So 10 lakhs are the anonymous donations. Anonymous donations, 20% of total donations is to 4 lakhs. 1 lakh is another figure. Exempt 1 lakh. Out of the anonymous donations of 10 lakhs, deduct 1 lakh and 9 lakhs are subject to tax at 30% under section 115 BC. Under wholly religious trusts are exempt from the provisions of 115 BBC. You can drop any amount, say for religious.
There we need not report the details in the anonymous.
Yes. Yes. 115 BBC, it also doesn't apply to university or hospital wholly substantially financed by the government. So, 27 mark approach. Yes, warranty value. Okay. So, I have covered clauses number 1 to 27 of Form 10B. This provisions of registration, re-registration, maintenance of books of account, audit, say specified violations, specified incomes, and say income on accredited, tax on accredited income, 115 TD. All these are very relevant right from section. There is, say, just for 10BD, non-reporting, there is a 200 rupees late fee for every days of delay, and there is a 271K penalty for non-filing of 10BD up to 1 lakh. The consequences of are very serious. It is incumbent on the chartered accountants to train to first apprise the trusts of their obligations, to see that only trained accountants, they write the accounts of the trust and ensure that they make a fair compliance of their legal obligations, and then we need to certify. Say in the case of trusts, they are helpful to many, but they are themselves helpless for many reasons due to financial and administrative constraints. But still, it's the law. It is put to strict implementation. And I once again thank everybody here and many people who are not here, who have provided me the excellent opportunity of standing before you and deliberating before you with my very limited knowledge and humble experience when compared to erudite and scholarly professionals before me, and many of whom are not before me. Thank you, and thank you.
Thank you very much, C.A. Sivarama Kumar sir. It was a content-oriented as well as fun-filled session. May I now request SIRC Secretary C. A.V. Arun sir to present a memento to Sivarama Kumar sir as the person of the love and affection. Palguna Kumar sir, over to you sir.
Once again, good afternoon to all of you. My job is to continue the classes in the Form 10B, that is 28 to 36. Another speaker will follow the third session after the lunch. Before going to it, because I got one of the questions in the coffee break, and one particular thing, my previous speaker has said that depreciation is now not allowed under section 11(6) for any religious or charitable institution, but subject to the section 11(6), I read the 11(6) says 11.6 says, I am reading the total section. In this section, where any income is required to be applied or accumulated or set apart for application, then for such purposes, the income shall be determined without any deduction or allowance by way of depreciation or otherwise in respect of any asset, acquisition of which has been claimed as an application of income under this section in the same or any other previous year. So what it means, either in the same year or in the early years, if you have claimed the cost of any asset as application, such asset's depreciation shall not be allowed under section 11. So there is a possibility in majority of the cases under section 11, cost of the asset you could not claim, you cannot claim. I give a number of examples. For example, an engineering college started, a medical college started. In the very first year, the promoters, the authors will contribute, say, 50 lakhs. They contributed 50 lakhs. So they borrow another 4.5 crores with this 50 lakhs from a bank. And then with 5 crores they construct the buildings. Unless they show the buildings, AICTE will not give the approval. So in the very first year, they cannot, where the cost of the buildings is incurred, they cannot claim it as an application because there is no income. What is meant by application? From the income if you have applied. That is all. So there is no income, there is no application. Then in the subsequent years, definitely you can claim depreciation. So what is the procedure you have to follow? As he has rightly said, normal books of accounts you have to maintain, where the building is only out of bank borrowing liability you are showing in the balance sheet, and building on the asset side. Unless the building is put to use, you will not claim depreciation. So from the next year onwards, where you are putting the building to use, you claim the depreciation in the accounts. And when you are having from next year onwards the income, from such income, such depreciation is allowable. Maybe after 5 years, 6 years down the line, you replace your old computers and you buy your new computers. Then computers is a capital asset, but that year income is there. In the application, you claim the cost of the computers. Such computers, though you claim in the computation as application, in the books it will be there in the balance sheet. So for such computers also year after year, you must, for getting the true and fair balance sheet, you must calculate the normal accounting normally. So you must maintain the depreciation schedule, 2 types. A, on the assets whose cost has not been claimed. B, on the assets whose cost has already been claimed. 2 types of depreciations. So on the first category, where the assets cost has not been claimed depreciation, in subsequent years continuously you are eligible to claim the depreciation as application, though you follow the cash system. Because now from 2023, all the applications shall be as per the cash system. Now a question may arise, in this cash system depreciation is a cash system. No, depreciation is allowed. You have to compute the income. So the 11.6, I am just supplementing my friend's statement that depreciation shall not be claimed is the general, but subject to these things. So with this, I will go to the classes quickly.
Sir, in
So,
such a situation, the repayment of a loan cannot be treated as an application. If assets are raised out of the borrowing, normally we will claim the repayment of loan as an application. In such a situation, we may not be able to claim the repayment of loan as an
I agree with you with the common sense, but as per the law, I disagree with you. So the law, any loan, while I am going to the schedule, in my PPT there is a schedule, LB, loans and borrowings, I will tell you about that. I will clarify at that time also your point. Still it is a double deduction, still it is allowable as a mistake. Number of court decisions are there, still it is allowable. I will cover in my PPT, it is there. one class.
Amendment has come out because the application has to be actually paid. Unless it is paid, you cannot claim.
You are right.
Because how the 11.6 is relevant? Because the act itself has been amended, the expenditure should have been actually paid. The depreciation only in notional. Even though I do not claim the cost of asset, I am not actually incurring the expenditure. In that sense, I cannot claim depreciation. That is the old court ruling and all prior to the amendment.
You are right. Then the word interpretation, to the extent clarity is not there. As a maximum, I can say your argument from the department side may be tenable, but from this side also it is tenable. Unless there is a 100% clarity, we cannot go by that. Still it's a that. Okay. First, I am going to the class 28. So the class 28, I continue where he has left. There is a voluntary contributions. So first of all, 2 caveats. Number 1, before you starting this 10B audit report, straight away don't go to the 10B audit report filling up. First 10 classes, as I said, name, PAN number, previous year, assessment year, you fill up. But after 10th class, don't go. I request you to be more practical. Keep ITR 7. ITR 7 in the past 5 years, consecutively every year they have tinkered, amended, changed. So this year also in February 2023, they have brought the new ITR, some classes are changed. Keep the ITR on your right hand side. Without ITR, don't go directly to the audit. Why? I got reasons. Similarly, keep in your working papers, first of all, Form 10A. He has already touched. At the time of applying for this current year 23-24 applicable, the renewal Form 10A, see what you have claimed in your Form 10A as your objects. Those objects are still there, still followed or not. Every year afresh you have to see. Don't simply say because last year it is allowed, last year some audit certificate or yourself. Every year you have to keep by your side what are the objects I stated in my application. What are the objects now the expenditure, the application is made. So keep that Form 10A also by your side. So this ITR 7, because why I say, in the ITR 7, the income the ITR 7 wants, what is the gross income with subcategorization. Income from main objects, income from incidental objects, rent, commission, interest, other income. The ITR 7 wants bifurcation. Such bifurcation is not there in 10B audit report. In 10B, what is the bifurcation? Where he left voluntary contributions and other income. Only 2 types. For income, there is no subclassification in 10B. Whereas in the ITR, income classification is also there. Income, head-wise, object-wise also. Not only the nature-wise, object-wise. Education income, other income, business income, and GPU income. So ITR 7 and this Form 10B, 50% or more are synchronizing the figures. Because in the ITR 7 also, the object is to arrive the taxable income, exempt income, taxable income. In this Form 10B, the audit report also to arrive the exempt income and taxable income. The object is one and the same. As I had told in the morning introduction, that there are normal incomes, 4 types of normal incomes, which my colleague has already covered, 1310 elaborate. Section 1310, the new section. So the 1310 income, one type income. 85% shortage is one type income. So the normal incomes, 4 type I am going to cover. And these are with specific clauses which are coming in my given schedule 28 to 36 only. This middle portion of this audit report is the heart of the total taxable income, exempted income. Similarly, in the ITR 7 also, what is exempt income, what is taxable income is the essence. So the object of both the things is same, and the why, after all, by common sense we know that why they want the audit report 1 month before, again made 2 months before, all these things. Why? Because they want to, with software, link the audit report additions, computation. Is it in sync with the written actually filed? So they want to compare. Otherwise, what is the purpose? Even in business tax audit, 1 month before the due date of filing of the return. But normally, even for a businessman, the moment your audit is finished, audit report is uploaded, business return also is ready to file. There is no necessity. But for them, they want the time because computer. So this syncing, is it happening or not? Unless you do simultaneously, because the time is over for audit report. Yes, let us file, and then afterwards let us see ITR 7 means there will be much difficulty, and there is going to be, because two different parameters like thing they set, but ultimately they want only one result answer, which is, so you should keep ITR 7 and ITR language, what they have used. ITR is also having schedules. So many schedules ITR is having, ITR 7. So those schedules and these schedules, this is Form 10B is also having schedules. Are they matching? We must see. For example, TDS receivable, similarly 40A, like that number of schedules are there. Both are almost similar. Based on that only, they have drafted this Form 10B, so one should be very careful. Now I am coming to this class 28. So the class 28 says income from other than voluntary contribution. He has already explained in the class 27 what is voluntary contribution. The voluntary contribution, this 10B audit report, and the ITR 7 also voluntary contribution, if you go, voluntary contributions, they include grants from government, CSR funds, grants under CSR. So, in the ITR 7 specifically included. Here also, the voluntary contributions includes grants. Now, the moment I say the grants can be two types. Revenue expenditure meeting grant, capital expenditure meeting grant. Grant unconditionally given, grant with some conditions given. So, what I say, what is a corpus fund grant, what is a non-corpus fund grant, also differentiation here. So all these are put together the voluntary contributions. So the class 27 is elaborated. Anyhow, you be careful what is voluntary contributions, because the definition income 224 includes the voluntary contributions. Voluntary contributions include the corpus fund donations also. So the corpus fund donations, among the schedules which this Form 10B is having 29 schedules, this corpus fund donation schedule is the biggest schedule, very lengthy schedule. Other schedules are very, very small, sometimes 1 line, 2 lines. So be careful about the voluntary contributions. And now I am coming to this 28 class, income other than voluntary contributions, all put together. It's not giving the classification. Whereas for application, it's giving the classification in sync with the ITR 7. Whereas for income, ITR 7 giving different classifications. Here is sum total. So normally what it includes, income from activities taken up for main objects, income from incidental objects, rents from buildings, or say lands, investments. For example, in the ITR 7, agriculture income is given separately. Agriculture income is also given separately. So here, the miscellaneous income like sale of scrap, all these things. So I give one more precaution. The other income, you just like that don't say other income, because for you, when you are not able to classify them, group them, our general auditor's idea is put in the miscellaneous, put in the others. The moment you put in the others, the danger is from the GST department. Every trustee is also, if you say other income, why that other income is not taxable under GST? A notice may come after 1 year, 2 years. So be careful. For example, sale of scrap by a university solely existing for education. So education is exempt under GST. That other income also is exempt under Income Tax Act. But under GST Act, even if it's solely existing education institution, government institution, any other income is liable 18%, normal. So, for example, university auditorium is let out for somebody. University auditorium 365 days, university cannot use. Even a school, for example, here nearby we are having Laila College. Laila College auditorium, only 60 to 80 days in a year they will use. Other times they give for other neighboring schools who are not having the auditorium. They go there and they conduct their school day, annual day, this. They collect the rent. So it happens every day. So it comes in, either the property income it should come, buildings is given, or it should come in other income. Once the other income or the buildings let out, for example, university let out a ATM counter, a bank, in every university. So that's liable for GST. You cannot argue that the bank is, ATM is for the use of students only. Who else will come and use that bank? So it is also incidental supplies of service to the students, part of education. You cannot argue. GST people are heavy. I have seen a number of cases noticed also. So you please be careful. So about this other income, whether you put in the main objects, whether you put in the other objects, you should be very careful. Because, as is already said, the 11.4a, what is business? The Income Tax Act gave a definition for business. Business includes trade, commerce, activities. So, for charitable trust, though this is a section 11, 12, 13 is a separate code along with 1023C, no separate definition is given for business. So, we should be very careful. The exemptions officers, they will cull out some words and then say, for example, I will give you an extreme example. You are having in Polamalai, I wrote an engineering college. They are having 50 buses. So, they collect bus fees from the students. Suppose those 50 buses are outsourced buses, only name Palmyra University or this, that university. So, every year, the bus fees collected is more than the bus expenditure given, rent given to other fellow, and it is giving surplus. Though buses are necessary for carrying on the education activity, because students should come from city means, unless you provide the buses, students, bus facility is not there means, especially for girls, parents may not allow. No, in private bus, private auto, I don't allow, if the college is providing. So then, the officer will say, every year you are having surplus from this bus fees, then any activity repeated with a profit motive is a business. Any activity repeated with a profit motive is business. So for such a business, have you maintained separate books? Have your auditor included it as a business income, separate set of books are maintained, and that income used as a certificate. You have included it in the main object only, education. I will say you have given wrong entry, wrong interpretation. Already in the Income Tax Act for 2 years, past 2 years you have been seeing from 2021 onwards, section 271DA. What is it, 271DA? Any omission of an entry or a commission of an entry which is not genuine, audit is also responsible. So, we should be very careful in interpreting the words. What you say as incidental may not be a business, may be a main activity. But the department may interpret that incidental as a business. Department may say incidental is I will give the same example of a college. Because they are having 50 buses along with 4 or 5 cars and thousands of students come with motorbikes. So they take the petrol bunk license. Any petrol company, even for a private limited company, they will give a storage license. So these people kept one petrol bunk near the main gate. If exclusively for their buses, their students they use inside, not open to public, it may not be a business. If by chance they open that petrol bunk also to public, then carried on the business, which is not incidental, beyond the objectives they have gone, total collapse. Sir.
In the case of education institutions where run hostels or buses, you said that maintenance of separate books of accounts.
Decision is there.
So
for and against both side decisions are.
No. My genuine doubt is this. Ahmedabad Urban Development Authority's case, they said that incidental business is applicable for object of general public utility, and when say providing buses to the students is covered by education and section 215, then it is not a business, but it's a part of the pursuance of the objective of education. Then can we plead before the AO that it's not a business at all because it's not an object of general public utility, and thus maintenance of books, separate books of account for running buses or hostels or other provisional services is possible, and no adverse inference can be drawn against the trust. That's the genuine doubt because.
See, with regard to your doubt, I give the broad answer first, then I will go to inside. In this 11, 12, 13, at two places the word business is used. In this 11, 12, 13, at two places the word business is necessary. The Ahmedabad Urban Development Authority case where, because it is for a general public utility, they went to the basic definition of section 215 charitable purpose. Charitable purpose includes 7th class general public utility. That general public utility 215, proviso 1. What the proviso 1 of that definition 215 says, in the case of this general public utility, in case they carry on any trade, business or commerce activity, such activities gross receipts are exceeding 20% of the total institution's total trust receipts, then it is no longer a charitable purpose. Based on this, trade, commerce or business, if they carry on, the income tax department, number of cases where they lost in the high court, in Gujarat High Court they lost it, so the matter department has taken it to Supreme Court. Whether the Urban Development Authority carried on the business or not, you decide. What the Urban Development Authority has done, it acquired the lands in and around that Ahmedabad and laid out the plots, LIG, MIG, it sold it in public auction to the public. So the department says, buying the land, selling the house plots is a business. Your urban development object is education, no, relief to poor, no. You sold the plots to all, rich and poor. So you are not covered by all the first 6 who are coming in the last object, general public, and carry on the business. Such receipts are more than 20%. No, exemption, definition. That's how the matter went to Supreme Court. So this is one part of the business where the decision you have said, they said if the margin is thin, it is not business. If the margin is more, it is business, the interpretation. Such decision, such margin thing, that Supreme Court decision, what I quoted, will not apply. I have gone to education. An educational institution can have an incidental activity with a profit motive, which is incidental activity. Hostel is incidental. Without providing a hostel, how the parents will admit me in the college? If I provide a hostel only, parents will admit in the college. If I provide a hostel. So the necessary incidents which are giving some profit margin is not business. That Supreme Court issue you should not see, independently you should see. So, but for all such things 11.4 will apply. 11.4a, 11.4 cap. What it says, you carry on. For example, you go to any Shankar Netralaya hospital nearby, they have to provide one pharmacy. That pharmacy is selling only to inpatients the medicines? Cannot. Some public may also come and buy. So, because the public buy, will it become a commercial activity? My object is to provide for the patients. So, I am not selling at the market price. I am selling at a small margin the medicines. I cannot sell less than the cost. If I sell for less than the cost, all other town pharmaceutical shops will come and buy here only. So I have to sell with this market. So which is incidental. So for hospital selling, running a pharmacy is an incidental business, separate set of books of account, use the profit for main, no problem. So the example I gave for an engineering college, taking a petrol bunk is not really incidental. You want to cut the cost. If you want to cut the cost, take the petrol bunk license, but buy in tanker bulk, thereby 2%, 3% commission, which you have to pay to others, you can save. That money also for education you can use. But don't use it for public. Because if you are selling for public means definitely it is for profit motive from the public, then at public rate only you should sell. So that's why I give the example. So this is the distinction of the word. For other objects, for 1 to 6 definition charitable purpose, the business is different. This GPU carrying on, business activity is different. That's how it's changed. Okay. Then, so this class 28 is arriving the income only. Then class 29. So this also has already touched. So this 11(1)(c), what it says, two clauses are there. Those trusts which are formed before 1952, those trusts which are formed after 1452, two clauses are there, 1 and 2 in this 11(1). So this 11(1), income applied, our trust income from property is applied outside India. If you want to apply outside India, you should take the permission of the central government. If you take the permission and then use it outside India, then it is not a violation. Your Indian income, why they have given exemption under the Indian Income Tax Act, you should use it within India. But if you want to apply outside India, if it is for a genuine purpose for which the government is interested, government will give the permission. If it is with the permission, no problem. They want this 29 also from the current year income. What is 27, 28? 27 clause is voluntary contributions, 28 clause is all other income. Out of this 27, 28, what you have applied outside India is 29. 29 with the permission if you apply, no violation. Without the permission if you apply, you are going to face the violation. This is clause 29. So this clause 29 clearly says, if you have applied outside India, name of the person to whom the rules, which person outside India you make the remittance, taxpayer identification number, just like our PAN number, the other person's number, amount of remittance in rupees, because any amount to go from the bank you have to auditor have to give his declaration plus sometimes 15 CSB. So then the next amount of remittance in India, in outside India other than 4. Without 15 CA, what the amount has gone? Charitable or religious for which purpose you have sent the money? Is it for religious purpose or charitable purpose? Country of application, for which country? Whether applied for promoting the international welfare in which India is interested. So that also. Then, if approval for application outside India has been taken, approval number, approval, whether it's general approval or specific approval, then date of approval. All these things you have to give. This is about class 29. 90% we may not have the cases, let us not spend much time. Then go to class 30. Class 30 is only a formula. What is 27? Voluntary contributions. What is 28? Other than voluntary contributions, all your income expenditure, income including balance sheet corpus fund. So your income is the balance sheet, you go by the normal corpus fund, where you will credit? Only in the balance sheet, you don't take to income. So that including the corpus fund is income. So that is 28. Minus 29, what you have applied outside India with the permission, So that you remove. That means the remaining amount is equal to income required to be applied in India. That is the heading they are given. So you are arriving first gross income, because from that only you have to deduce what is taxable income you have to get means, what is first income, gross, then allowable application, then finally taxable income. The purpose only, this is in a logical way, they have given these clauses. So this is a class 30. Now I am going to 31. This is the heart of this 49 classes. Out of 49 classes, what is the heart of the class, or what is the major thing, or say important thing is class 31. You should spend more time only for this class 31. All other classes you can spend a little time. So this 31 is total amount applied for charitable or religious purposes in India during the previous year. So, total amount applied in India during the previous year. This is the one. And how they want it with this bifurcation. And for this bifurcation, if you read the notes on accounts, code numbers are given. Based on the code numbers, again you should give this. And again you see on the right hand side two verticals. First vertical is electronic mode of application. Second mode, other than electronic mode of application. So, first mode and second mode, electronic mode, other than electronic mode means, what is electronic mode also they are given 8 types. There's a, say, RTGS, NEFT, Google Pay, this, that, so many things they are given in the notes to this audit report. Electronic mode means 8 types, that also they are given. So, how do you arrive this figure? As an auditor, if you want to certify, How do you arrive this figure?
Whatever through bank it is electronic.
Sir?
Whatever through bank.
Whatever through bank is electronic, you are right. But whatever through bank, will it be only application of income? Please see. Is it only through application of income? So many things, they may borrow from management, when shortfall is there, again repay to the management. So whatever went from bank is equal to application? Cannot be. See, difficulty will be there, so many things will be there. So, my advice is, you should ask the assessee to prepare cash books for bank books separate, bank day book, bank ledgers separate, cash book and cash book ledgers separate. Why I say, the 2017 onwards, you are having section 115 BBE. What is section 115 BBE? The income that is computed under section 68, 69, 69 ABCD is equal to 115 BBE. What is 68, 69 ABCD? 68 is only what is accounted for in the books of accounts, credits which are not to the satisfaction of the AO explained in 68. All others are what is not there in the books of accounts. So what is not there in the books of accounts? Why they brought 75% tax? Because source is not explained for each one. Unexplained expenditure, unexplained investment, or partly explained. So, in this charitable purpose, religious purpose, the scheme is giving you, asking you, are you matching the source and application? Are you matching the source and application? In this clauses also, this audit report and the ITR 7, if you have met the expenditure, apply which source? Is it from the general income? Is it for the capital receipt sale of asset? Or is it from the corpus fund? For example, we are going to see, as I asked, the loan repayment. Loan repayment from where? The schedule is asking. The audit report is asking. You have repaid the loan. From where? Source. If I have only one current account, how do you say specifically from that source I repaid the loan? The problem will be, if I have only one current account where all the income is put and all the payments are from one account, can you as auditor say, yes, loan is repaid out of current year income only? For you to certify, it's very difficult. There may be fresh loans partly for fresh asset, partly for repaying old loans. How do you say that the loan is from current year income unless you maintain separate bank accounts, separate cash books? It's very difficult because you are going to certify ultimately. Unless you are sure of it, with doubt, with suspicion, overall profile, I have attested everything. You may attest your worksheet. Officer will not get satisfied. Officer always looks at your suspicious mind. So you better advise the clients. Capital receipts, revenue receipts, separate bank accounts. Even among the revenue receipts, for corpus fund, separate bank account, for 22-23 still we advise. Why? Because the act is maintained separately, two words are used. What is maintained separately? Words, section says, section 11. Unless section 11(1)(d), what it said? Any corpus fund donation, unless maintained separately, section 11(1)(d). 11(1)(d) exemption is not available for 22-23 itself. So, all corpus fund you put in the separate bank account and either you use it for the specific purpose or you keep it in the bank FD. 100% exemption. So, similarly, for other capital receipts, revenue receipts, you maintain separate bank accounts, and from there, for telling me it is easy, you go down to the say practical field. An education institution will have 6 sub-institutions. Educational trust will have 6 high school, degree, engineering, medical, or say MBA, BEd, pharmacy. For each institution, that approving authority, license giving authority says, for me I want one income in the balance sheet. And for that again you bifurcate this many books. Even a qualified CA to maintain accounts, very, very difficult. But the Act expects. What the Act expects? All your applications, source you link. If the source, unless you prove, it may be a wrong certification. So, this application, you pay the money. Application, after this class 31 below, the nature wise you have to give, again you should regroup it into revenue application, capital application. Again, you have to certify. Next slide.
Sir, interest on FD is capital receipt or revenue receipt?
You are right. You are also CA, I am also CA. There are 4 types of FDs for a charitable trust. How can I answer yes or no to you?
It's a long-term fixed deposit.
So what is the source of that FD?
15%
It's from accumulation.
Your accumulation. So if from your accumulation, if you keep an FD, ordinary accumulation, surplus funds below 50%, and you kept an FD, and interest is a revenue receipt. Is a revenue receipt.
What if a corpus fund is kept in FD?
No. There is a possibility. I will tell. There are several types of FDs because
Corpus fund is in FD.
You are right. If the donor says, my money you should keep in FD and that interest only you should apply, then also it is revenue receipt. My interest also first 5 years you should accumulate and then apply, then it is a capital receipt. So, section 11.2 or section 11.1 explanation 2 also says, section 11.1 explanation 2 you need not keep the FD, whereas for section 11.2 where you file the form 10, you have to necessarily keep the money separately. Once you file the form 10, as I already explained in the previous session, you keep the money separately, but its income is revenue. Only principal money you are accumulating, within 5 years you apply. Okay. If it is an FCRA grant, if it is a CSR grant, can you touch the interest as you like? Just like a revenue receipt as you like? No. CSR grant related interest you should use only for CSR under one section 135 of the Companies Act. And the FCRA conditions also, FCRA Act says any interest earned out of FCRA shall be used only for the purpose for which the FCRA is given. So the deposits will vary. That's my answer. But anyhow, sir, please keep the questions at the end because we are running short of time. Already 1 hour behind the schedule. Before 5, if you want to close, some classes will evaporate. Please allow us to continue. The subject, no doubt, is so vast. You are all having genuine doubts. But anyhow, keep the question answers at the end, please, so that we can continue. And especially my session, you should allow me to continue, not to delay the lunch, which is more important than this classes audit report. In Telugu there is a saying, but Tamil name ye paatu tappina saapaatu tappadani. So enna difficulty irundhalum ingu saapaadu mattum vittadadaba adu appadi solren. Timely. My senior colleague Bhima Bhatt sir, past SIRC chairman, is sincerely sitting in the front row and going through. Special thanks for you, sir. So, this application of income, as you think, it is not that simple. They want the classification. For example, relief to poor and the second class, relief to poor and advancement of minority, always in dichotomy. Always in dichotomy. For example, in a medical college, there is a poor people, white racial card means below poverty. For poor people, there is a ward. For them, you gave free medicines, you gave free treatment. Will it come in relief to poor or will it come in medical relief? Dichotomy. Similarly in education, similarly in other things. For example, in one particular case, only as already given in my previous session, only for people, poor people, when railway contract is given or say a welfare activity is given. They didn't say that it is relief to poor. So similarly, in many cases, for example, for a religious temple, a particular donor says, daily should feed with my money 50 poor people only. If you come to Tirumala, do you think who are taking Annadana are poor people? Or can the donor say, the trustee sir, only poor eat, otherwise go? Is it possible? When you are saying free meals, you cannot distinguish between poor and the others. You are saying free meals, everybody will come and take it. So similarly, this classification, you may really with good intention to classify. The officer while going through the books of account may come with a different thing. No, you are wrongly certified. It comes in relief to poor only, he may say. It will not come in some other thing. So, which is not there in your objects. You are having purely medical. That fellow says, no. Relief to poor is not. For example, the other nation, Dawoodi Bara Samar, institution, the Quran says, on a holy day of Ramjan, previous 1 year income, 6% you calculate, 6% you are bound to give as charity, Quran said. Please, the people will follow. So the department taken the matter up to Supreme Court. Supreme Court, the department says, your trust deed says, as per Quran, give this 6% to relief to poor. So yours is a relief to poor institution only. Yours is not a religious institution. So I want to tax. The matter the department has taken up to Supreme Court. Supreme Court ultimately said, no. The basic 6% relief to give charity is where it emanated. It emanated from. Quran is the mother of a Muslim religion, just like our Bhagavad Gita. So it is a religious institution only. Supreme Court had. So how one word will make a difference, the matter will go up to High Court. It's very difficult, you cannot strictly classify. But the Act wants auditor certify for which object you have spent. That object is there in your bylaws are there, you certify. For your objects only you have paid the income, you certify. So practically, because every religion says relief to poor is part of the religion. Relief to poor, Manava Seva, Madhava Seva, in the sense, kindness to humanity is the spirituality and divinity. So unless you are kind, you are not a religious person. So the interpretation issues will come. One should be very careful. That's what I want to say. Do the job, but keep some ammunition in your hands in case something goes adversely. That's what it is. Then 31.2. Details of application out of that. See, this is actually nowhere in 11, 12, 13 is there. What they said? If you apply to a single person more than 50 lakhs during the previous year, in your application, the amount what you have said in 31.1, if some amount is going for a particular person only, in a medical hospital, medical relief, they buy the CT scan, 2.5 crores, 5 crores, 3 crores, am I right? So for a particular person, more than 50 lakhs, these details you give, you said you are applied now, by the revenue expenditure or capital expenditure is application. Then you give this, his name, his PAN number, amount of application, and then is it electronic mode or, because out of 1,001 or out of 10,001 would have false entries would have created. It created trouble to all the trusts. You give the full details. See, they are there, you have watched, audited, but in the audit report you give. So you would have done in a piecemeal, for example. For example, the same education institution. Diesel itself would have costed 50 lakhs, but every week you have paid the diesel money to Indian Oil Company only with an agreement. So then the Indian Oil Company account number, this, that, because you are having 194Q and then 206C. So keeping all that in mind, for the trust audit report, 50 lakhs more, any application, capital or revenue, give these details. So these details here. So be careful that it may not lose sight, that's how. Then 31.3. Amount which was not actually paid during the year. See, one friend has asked me, sir, consistently, if I follow mixed system of accounting, for expenditure side, I follow cash system. For income, I follow mercantile system. Because nowadays, almost all the state governments, they introduce several schemes, health schemes, education schemes. In Andhra Pradesh, health scheme is otherwise known as Arogya. For all the poor people, any private hospital which is registered with government, it can incur the treatment expenditure, claim as reimbursement. Similarly, for education, any poor student you admit, economically backward also, claim the fees as reimbursement. Now, those state governments mandated that your accounts, what is you claimed should be there in your accounts. So unless you follow mercantile system, how can you get that in your accounts? Your auditor should certify, yes, this is due. In accounts it is there. With CA certificate only, the government will reimburse. It's there in several state governments, including Andhra Pradesh, where from my head. So unless you maintain the Income Tax Act, what it says, your income may be accrual system here. I allow only unpaid. So an income that is accrued, not realized, how can I apply? I cannot apply. Then the two alternatives given in the Income Tax Act. What are the two alternatives? Either you go by Form 9A, which is given in Section 11(1) clause explanation 2. It is given that in the year in which it is going to be realized, I will apply. You need not deposit the money because it is not realized. Either you go by that route, the shortfall, or you go by the 11(2), which says, I have already realized the money, but anyhow I could not apply. So I will keep it in the FD and I will use it for specific purpose. For example, the hospital wants to buy a 5 crores, every year 1 crore only surplus. So in the 5th year only, when the money is accumulated 5 crores, so I buy the 5 crores mission. So like that. So here, if you are following cash system, this clause will become redundant. If you are following mercantile system and application and already in 31(1) clause, what is the amount applied includes the accrual expenditure, then this 31(3) says what is the amount which was not actually paid during the year, which is included in this above. Then second, what was earlier accrued, this year would have paid. In this year expenditure is not there. It is earlier expenditure accrued you have provided, but in the payment you have made. Where from you will pay? From your current year income. So this plus or minus, just you are having, we are going to have that clause also. In the tax audit report also, the 40A IA, TDS, for want of TDS, in 1 year you will get addition. But in the year in which you comply, again you will get the deduction. No? Same thing here also, it is given in the audit report. This accrued expense also, because of cash system, in 1 year it may be disallowable, but second year when you pay it is allowable. So then, total amount to be allowed. Now you got this income to be applied in India you got. For that, this small adjustment you are making, thereby in class 5 you are getting that what is to be applied. Then 6, as I told you, what is to be applied in India, again bifurcate into revenue and capital. This is the 6th class. So you arrived some amount in 5th subclass of this 31 main class, and then bifurcate into revenue and capital it is asking. Then amount invested or deposited in banking corpus which was applied during any preceding previous year and not claimed as application during that previous year. This is the recent amendment effect. What is it? Section 11(1)(d), few minutes back I have explained you, was unconditionally given up to 21-22 assessment year. So the amendment what was there in section 11(1)(d) corpus fund, unconditionally given, many people were receiving the donations purposely as corpus fund donations, only from donor a letter, and they use it for salaries, so they were claiming. So to put a full stop for it, what they have done, the section 11(1)(d) will apply if at all it is a corpus fund donation or a specific direction donation, if you use the money for the same purpose in the same year, or the unspent money in the year in which you bring back to 11(5) mode, deposit or investment. What is 11(5)? Deposit or investment, these two words starting section 11(5). So if you keep the money either as a deposit or invest in any asset as per section 11(5) for your object, then in the year in which you keep, it is a deemed, not out of normal corpus fund donation. The deemed application is earlier corpus fund used for your objects, not invested or deposited, but in a second year, third year, because you got some surplus income, to keep the corpus fund liability equal to your asset, you have invested such money in that year is a deemed application. So now, unless you prepare a rescission payment account, this amount from your current year income you have deposited, replenished 11(5) mode to comply with section 11(1)(d) is very difficult. So this also they are coming to arrive the actual application amount. Then 31(7). So what is the 31(7)? The Form 10B schedules, the corpus fund schedules, as I have told you, the 27 what he has referred, this schedule, corpus fund donation schedule, SC they call it, in 3-4 places will come in the total form, in 3 pools. In class 27 what he has covered, the same schedule. I am also covering the same schedule. So it is asking, as per the schedule, the information is there or not. In this total form, as I have mentioned, 29 schedules are there, but this one schedule is referred in 3-4 places. That's how I am showing you this schedule. What is the opening balance? Have you applied it? So it starts with the year opening balance. So have you received it during the year, any corpus fund donations during the previous year? Third column, applied it during the previous year itself. Then amount invested or deployed. You have applied and you kept the money in the bank only. You cannot acquire the asset. Then there is a fourth column. Then fifth column, total amount invested or deposited back into corpus. That means now this class what I have shown you, earlier year money, now only you replenish it. That comes in the fifth column. Financially in which this was originally applied. If you are saying replenishing, originally in which year you got it, that also you mentioned. Because the schema, the artificial intelligence, that year whether you have shown or not, they want to compare. That's why they modified this ITR 7 and this. So like this the columns goes. So this is the schedule. Just for your reference, one can go through the details, filling up this only. So I am going to the next. This is only the FC schedule I am showing you. Now class 31.8. Class 31.8 also refers to one more schedule. As I told you, loans and borrowings. Repayment of loan or borrowing. The wording, please carefully catch the wording. Repayment of loan or borrowing during the previous year, which was earlier applied and not claimed. Earlier applied, the loan was earlier applied and not claimed as application during that previous year. Okay. So this is the any repayment of loan. For this, they want you to certify in this LB schedule. So this schedule is named as LB. That LB schedule you have to fill up and then come back to this. So here also opening balance of the previous year, then loans borrowings during the previous year, applied for the objects during the previous year, amount of repayment of that means loan is freshly taken and applied. Opening balance is there, and fourth column, repayment of that loan or borrowing during the previous year. As the wording given there. So the wording given in this 31.8 is repeated in the fourth column. Then the financially in which the fourth column amount was applied earlier. As I told you, engineering college, first year you have taken the loan and applied for building. Now in the fifth year you are doing. So you must go to the back record, correct year in which you got, you should fill up. Because the artificial intelligence, they may link. So you should fill up. Then the total repayment of the loan or borrowing during this correct year and the closing balance of your loan. So for the loans, unless you have generally these charitable issues will have minimum 4 or 5 types of loans. For example, education institution take, hospital you take. Vehicles always with hire purchase they get. Vehicles they get the hire purchase. Buildings with building bank term loan. Repayment period will be 20 years, 25 years. Equipment term loan, 5 years, 7 years. So, OD, overdraft also, because I am not able to meet money. So, how many types of loans are there? For all the types of loans, separately you should fill up this LB1, LB2, LB3, because each line item is separate. You cannot say only one line item is alright, but several times you have to fill up. So, this is all the difficulty, but anyhow, as my colleague has already said, whether you have difficulty or not, they want the information which you are certifying. So, please certify. Then, I told you this class 31 is the heart of this audit report. Up to 1 to 8, income and then repayment which is allowable. Okay, application. So, 27 plus 28 minus 29 is equal to 30. 30 is the gross income. 31 what is allowable is first 8 classes. From 9th class to 21 class, you are going to see what is not allowable. So they gave the subheading, amounts to be disallowed from that application amount. I give a caveat now. In the morning 10 o'clock inauguration I told, what is taxable income is different types, 7 types of taxable income you can add. For some procedures violation, 1 type of taxable income. For some principles violation, specified violation is a section 12AB subsection 4, which earlier was introduced, is replaced. So the specified violation leading to cancellation of registration is a principal, major principal violation. That is a separate taxable number. So these are the separate things, desirable things. These desirable things are separate. Section 115 BBA, payments to related parties, separate. For not filing the return, for not getting the audit report within the time, within the time no return is filed, within the time no audit report is filed. Then section 1310, books of accounts not maintained, section 1310, that is a separate. So different types of taxable incomes you are computing. In that process, this is one out of the already applied money, which is not allowable, is one type of disallowance. The other types of taxable income for violation of principles, how to compute the income, different things are there. This and that you don't get confused. See, if you are talking of the business income computation, take the P&L account, net profit, add less, you will get the business income. That's all the business income, taxable income. It is not that simple for a trust directly to arrive at taxable income. That's what I want to drive home the point. Here, different types of taxable income, different ways of computing it. This is one type of taxable income nearest to your business. That is disallowable items. From the application, what is not allowable. 40A, TDS, not complied, 30% of the expenditure. Because they said, mutatis mutandis, don't put the total figure. They borrowed this section and here it said, mutatis mutandis, the exact word they have used in the act. That means, there how much on the business side disallowed? 30%. Here also is. Whereas 40 capital A 3 or 3A, 3 is 40 capital A 3 is current year expenditure, more than 10,000 paid by cash. Outstanding liability paid by cash, 3A. All these things, 100%. Then, donation to given trust towards the corpus of the receiver with similar objects. Please see how meticulously they have done these disallowances. You are having educational object, they are also having educational. Yours is 12A approved, AB approved. They are also 12AB approved. But what you have given donation to them to establish in the name of our trust one block in your college. Our trust is Sai Trust, your trust is Venkateswara Trust. So your Venkateswara Educational Trust received the money from Sai Trust, saying that in that Venkateswara Trust, Sai Trust block, you want your name. That means you are giving a corpus for donation. If it is a corpus for donation, it is not allowed. Though it is you claimed it as expenditure in your income tax account, it is not allowable, though with similar objects. Next, donations given to us who are not having the similar objects. Big violation, as he has pointed out in the first session. Other than your objects, if you incur any expenditure, it is a serious violation. They want to know. Because you are not supposed to give. He gave an example, an education institution giving a Prime Minister Relief Fund. Prime Minister Relief Fund, though it is a government only, central government only, it's not your object. Donation to relief is not a, so then gone, other than objection. So that is the seriousness. So this class, how much is that money? You tell me. Then, 13th class, subclass, donations to other persons. That means, in both the cases, first 11 and 12, they have 12AB, you have 12AB. Without 12AB also, you donate somebody. Then, that comes in 13. These are the 5, another 5. So, this is the class where you have to fill up. Now, another 5. Amount to be disallowed, I am continuing. The 13 classes are there, I am continuing. So, here, the application outside India without permission. He has shown you in that class number 29, I have already shown you, section 11(1)(c). With the permission of Government of India, outside India, how much you have applied. Without permission, if you apply, though it is an expenditure you have booked, it is to be disallowed. Then, with the proviso, and the 11(1)(c) main is there, 11(1)(c) with proviso is there. Okay. Applied beyond the objects. So already I told you, donation is one type of other than the object. You applied, that means you incur the expenditure itself, not donation. You incur the expenditure, which is not there as your object.
How the auditor will find out it is beyond the object?
That's what you are while doing auditing, keep the objects which are approved by registration, and each voucher you should ask your assistant to, as per objects only, whether this voucher fit into this object or this object, you scrutinize and then certify. How the auditor knows whether these or other objects are not means? It is the job given to you. You have to certify it. While doing they may not do, but while auditing you have to do. While doing left and right they give, sir. Somebody comes, sir, hey, treasurer, secretary, give the check to this one. For what purpose, they don't know. So you should educate them, otherwise say, you should invite your own language.
You have to say goodbye to them.
And I have goodbye to them. Otherwise it's not possible. As you rightly said, with this much difficulty, really for those institutions who are doing auditing, even 10,000 crores company, tax audit is not that difficult, as I told you. But this is small 1 crore, 2 crores audit report also. All these classes are there in 10 BB also. Here 31 class, there 26 class. Class number 26 in 10 BB. Same thing repeated. Only number 49 is reduced 32, but this computation of income is retained there also. For a small fellow also, all these things if you want to do, as I told you, 5 days you spare, and you will give ultimately 5,000 rupees fees. For that you have to do all these things and give the audit report. You know how much labor is.
Peer reviewer will come and check whether he was seeing all this.
Ultimately, one day scrutiny, and that fellow will put all sorts of questions. But because they are also trained, every year they get the training. You put all these types of questions, somehow deny them. The government wants to deny and correct it.
Hereafter, the assessment will be done by the computer itself, not by the officer.
And you are right, artificial intelligence nowadays so much now. We are seeing in the TVs this thing, robots with artificial intelligence, they are addressing the press conference. Press conference, so many questions will come. Robots are answering the press conference. Data fed, it will answer. So this auditing and this scrutiny is much easy. Income tax act scrutiny by a robot is very, very easy. You have to put all sorts of questions in the faceless assessment, scrutiny, without seeing somebody. You go on answering, they put the questions, you will be.
Officers will raise the
No,
questions.
they won't see whatever you are submitting also. I have seen in many cases. They
You're
have
right.
not even applied their mind.
You are right. All sorts of difficulties are there. So that's why, as he said, they don't want to make the charity to survive like this. Okay. So the application outside India without permission we have seen, and applied beyond the objects also we have to certify. Any other disallowance, this class, see, you have already prescribed this is not allowable, this is not allowable. And even if the act has forgotten, you please tell me, what is that? Any other disallowance also you please certify? You gave the list, I want to certify as per the list. Then any other means, what is any other? You should invent and then you should take care that no other is there. If it is there, you certify. So, this is how the Act expects audit report should be this class. Then total allowable. Allowable means, as I told you, that subclasses 5, 7, plus 8, minus that 9 to 18. 9 to 18 disallowable items. Then you will arrive the allowable application. Then out of that, now you got the income. So out of that, to arrive at the taxable income, gross income, applied allowable, applied not allowable, balance, again to arrive at the taxable income as per normal rates. This is the normal rates computation income. To arrive at again 3 adjustments they are saying. You see, number 1, Form 9A, because till that time you have not, 9A is a deemed application, no? You are going to incur next year or next year. So that is 9A. Then 11.2, it's warranted amount. Then the other one, normally section 11, subsection 1, class small a, up to 15%, 85% you have to apply means 15% is tolerable limit. So that 15% also you deduct. This was not there in earlier audit reports. Now they gave the practical computation. So if 15% also is deemed to have been applied, you deduct. Still something is there with pay the tax. That's how these classes are framed. So this is the 31. So this 31, 9, 10, how the Form 9A, Form 10 also, they want schedules. Because earlier 3-4 years you would have filed 9A. What was the opening balance outstanding? Have you applied or not? They want to know, not only the current year, they want to know. So the schedule is given. Similarly for Form 10 also, a schedule is given. So these are the two schedules for these two clauses. And then now finally 32 is nothing but a formula. What is formula? 30 you got income to be applied in India minus what is actually applied and deemed applied. So the balance is equal to taxable income, which is normally taxable at ordinary rates. The religious institution are charged. This how 31 clause is the heart of the total audit report. A very careful job which needs a lot of time to be carefully, scrupulously followed. Then 32 is nothing but a taxable income you are arriving on which the auditor is certifying taxable income. This income and the ITR 7 I told you, in the ITR 7 also these incomes are there. So that also you try to compare actually filling up ITR 7. Otherwise there may be a possibility here certified figures and ultimately filling up figures may differ. Take care. Then 33. This is a specific income. What is that? Section 115 BBI. My friend already has touched in this previous session. 115 BBC. Section 115 is having nearly 30 A, B, C, D, like that. So many. Earlier we have seen 115 BBE. That is covering 68, 69. A specific rate of 75%. Source not explainable. So similarly here 115 BBI, some violations. They said specified income as defined in this section is liable for 30%. What are those specified incomes? A. 15% as per Form 10 and 9A is conditional deemed application. Those conditions if you violate, for example, Form 10 you apply, 4 conditions are there. What are the 4 conditions? A. Within 5 years I will apply. So 5th year is over, you have not applied. It becomes taxable income at 30%. In that 5th year you cannot apply it for some other purpose. B. For the specified purpose what you said only you should apply. If you want to change the purpose, under section 11(3) capital A, go to the jurisdictional assessing officer. Sir, I want to buy that MRI machine. I have a medical hospital, but MRI machine now is not worth buying. I want to go for a blood bank. Please permit. The assessing officer is deemed to permit. You take the permission, change the permission only you apply, then it is satisfaction of the condition. Otherwise you, on your own, anyhow, many people, as is given that Gangabai Charki Supreme Court decision, sir, that is also medical purpose, this is also medical purpose. I write in Form 10, for medical purpose I will accumulate, and whatever this, that mission or blood bank mission, whichever mission, don't do that. Purpose, the Form 10 says, purpose accumulated, not object accumulated. The word purpose is different from object. So the specific words, number of case laws, they have denied and ultimately they have to pay the tax. Because all these things after the management will not consult you, knowing the risk before undertaking the financial transaction. They complete the financial transaction. At the end when they bring, you are only breaking your head. Is it the object or is it the purpose? The original Form 10. Because the schedule which I have shown also, purpose, if you see previous slide, purpose for which accumulated every year you should mention. So the purpose should be same. So the 4 conditions if you are satisfied. In the money, the officers go to that extent. When I accumulated, it was Andhra Bank. Now there is no Andhra Bank, it has become Union Bank. Now you say, money in bank you changed. You changed the bank, you have withdrawn the money. The condition says, no, withdraw the money. Where I have withdrawn? Same bank, same FD, every year I am renewing, I say. So the officer will not accept. Because condition says, the money invested shall not be withdrawn, shall not be used for any purpose except that purpose. So these conditions when you violate, these 4 conditions also just for your sake I have given. So these, from that money you should not donate. From the current year income, if you donate for your or similar objects to somebody else as a revenue, it is allowable. And that also, I must give you a precaution. This 2020-23 Finance Act, one beautiful amendment. What is the beautiful amendment? From the current year income also, for your same objects also, If you donate for revenue also, I will allow only 85%. 15% you please pay the tax. Which is very atrocious, no? So one university grants some money to another college. Universities promote the colleges. So one university, as part of education, for another college, approved, that also 1280, this also. Even if you go for the revenue expenditure salaries, 85% only, then who will eat away the 15%? See, you have really incurred expenditure. This from 24-25 estimate year, that is. Now in this audit report, it's not there, next year it will come. So in this audit report, that amended class, because applicable for 24-25 estimate year, only this year finance academy does not come. So this thing. Then 13.3. So 115 BBA is a separate specified income taxable at 30%. What are all the violations? Violations, Form 10 you are not satisfied, Form 9A you are not satisfied. Then 13, for related party transactions, the amount applied directly or indirectly. As he has given the example, normally teachers, professors establish colleges. Having sacrificed so much, for his day-to-day expenses, genuinely they take some money. For example, if you don't misquote me, majority of the Christian missionaries, nuns will work as teachers. Nuns will work in the hospital as nurses. Unless you give them salary, how can she survive? Or that nurse will be put in the same hostel where the students are there, somewhere. So is it income applied for the same nuns are there as principal, as the teachers, managing committee, there. So will it amount to management, benefits God? In the arm's length, their life they sacrificed. They are doing service. And unless you give the food, unless you give accommodation, unless you give some pocket money expense, how can they survive? So, who will determine whether it is reasonable reason? Section 13.2 says, reasonable salary, any money paid as salary beyond reasonableness is now covered by this 115BBA 30%. So, who will determine what is reasonable? Whatever you say reasonable, the officer will not say, no, it is not reasonable. In fact, I got one medical college, one management committee's person's wife was working in another private hospital like Apollo Hospital, was getting a fabulous salary. Why do you work when our hospital is there? So he invited her. She has joined. And we have mentioned, any relatives of these managing committee people also drawing any benefit, please specify. Because it's all paid, TDS, everything. Then I said, oh, you are a orthopedic surgeon. No. You are what you got, 2.5 lakhs salary. I was for 4 years continuously getting from a third party hospital the same salary I have done. Even then officer cannot satisfy. Because you are a related party. So, that to the extent that is income applied coming under 115BBA. Section 11.5 violation. All the investments must be as per deposits and investments prescribed 11.5. Some of the education, some of the other people, knowingly or number of disabled cases are there. They go for Sri Ram chits. They go for some other chits. Because chits will give 15 to 20%, 18% rate of return. In the bank, what you get is 6%. So these people unknowingly go for this chits. Is it an investment or deposit? We argued and successfully a number of cases are there, decided cases. Not only in Andhra, Tamil Nadu, number of cases. Chit is neither a deposit nor an investment. So number of patients. This side is there, that side. But don't take the risk. So if at all you violate, then comes under 115BBA 30%. Then last item, income applied outside India. That's what you have seen in the other class. So this is all coming under 115BBA, which the auditor has to certify. Yes, this is the amount coming under this 115BBA. This is liable for 30%. In the audit report you give, same thing. In there is in ITR 7 also. If you see this 23-24 ITR 7, this 115BBA is there in ITR plus ITR also this there as a schedule. So similarly, whatever the taxable incomes we are saying, they are there in the ITRs also. So then, now 34, Anand, he has already explained. So his example, once again I repeat for your clarification. A trust is having 1 crore donations. Out of 1 crore donations, 93 crores name and address is available. Section 115 BBC says, where name and address of the donor is not available, it is anonymous donation. A trust is having, this 115 BBC applies other than religious only. For religious institutions, no question of anonymous donation. Religious institution can have anonymous donation which is not taxable. For other than religious means all charitable institutions, if they have total donations, I gave the example of 1 crore. Out of that, for 90 lakhs you are having name and address. 7 lakhs you are not having name and address. Now, for clarity's sake, what I am saying, the rule, as he has already said, what is that? 5% of the total donations. In 1 crore, 5% comes to 5 lakhs or 1 lakh rupees, whichever is higher is not taxable. Other than that, anonymous donation only is taxable at 30%. So, your anonymous donations are 7 lakhs. Out of 7 lakhs, what is taxable at 30% means, out of anonymous donation 7 lakhs, what is not taxable is either 5% or 1 lakh, whichever is higher means, out of 1 crore total donations, 5% is equal to 5 lakhs. So 7 minus 5, 2 lakhs only is taxable at 30%. So 2 lakhs is taxable at 30% means, in the income to be applied in India, what you have to remove is only 2. Don't remove 7. In the income to be applied in India, voluntary contributions other than 115 BBC has already referred. Other than 115 BBC taxable, not all anonymous donations. So the anonymous donations which are exempt in 115 BBC are becoming income to be applied. So in income to be applied, what is to be removed is only 2, because 2 is only taxable at 30%. That means the 5 lakhs is not as good as a normal donation, out of which you have to apply 85%. Clarity given? Then we'll go. Next, I am going to 34 anonymous donations I have given. Now it is 1:45. In 5 minutes I will complete. So we'll go for lunch. So I am rushing up. So 35, the other income. So my classes are 35 and 36 only after that lunch. So this 35 other income, whether the auditee has any income chargeable under section 12(2), yes or no. So these are all the other income which is taxable. You have to enumerate. They have given these A, B, C, D. So these classes are 11.1.3a. That's what 8 is specifically the income explanations given in section 11.1, or say this which are all taxable under these specific 4 sections. Say for example, the 4th class you say income chargeable under section 11.4 is business. So if the business income is separately what you have to do, if you are having a business income, maintain separate set of books of accounts, number 1. Number 2, get the tax audit report also, 44AB tax audit report also, in addition to this tax audit report, trust tax audit report and the business tax audit report also. In case that tax audit report gives any disallowance amount, that you have to mention and you must offer for tax. Because under the business head, so many other things are there. For example, provident fund not paid within the due date. Though you claim it as expenditure, under the business head it is taxable income. So business computation for business you do, and there if at all any disallowance is there, that disallowance is taxable. So if at all you are having a business, in addition to this, that tax audit report, 44AB tax audit report also, you have to comply. Okay, that's the condition. So similarly, if you go to the capital, this is already he has covered, but anyhow, this class 36, what it says, the section 11, 12, 13 and 10, 23C, almost 100% similar. And for any transfer of a capital asset, so now, normally capital asset transfer means, capital asset definition section 240, capital asset transfer is section 45 charging section capital gains. Any transfer of a capital asset compute the income under capital gains, but the normal persons. Whereas for these trusts and religious institutions, if at all you transfer a capital asset during the previous year, peculiar computation is given. as an advantage. What is that advantage? That advantage is don't go for capital gains computation. Short term, long term, this, that, don't do that. What is the consideration? Net consideration received on account of the transfer. So, if you get any net consideration, that net consideration money in the same previous year, if you use for acquisition of any asset for the objects in the same financial year, either equal to the net consideration or more. For example, a hospital is there, lot of vacancy, just like our institute is having roadside 20 feet. Now, for the past 3 years, our institute is facing for a new metro, 15 feet they are going to take away. So, out of 20 feet, after that we will be left with only 5 feet. So, like that, an education institution is there, or a hospital is there, the road widening, they acquired compulsory compensation they give. Now, it is a transfer of capital, whether you like it or not. Compulsory acquisition also is a transfer. Section 247 transfer definition, any capital asset transfer includes compulsory. So you got the money, then what you should do? Your land is acquired, compulsory transfer, you got the money. So that money, acquire another capital. You want to construct a building 1 more floor, or you want to buy computers, you want to buy furniture, vehicles, you acquire any capital asset. B, if you are not able to acquire any capital asset during the previous year, you want to buy it next year. You offer this total as your income and then file form say 10 to specific purpose. Or B, you don't want to use this money. Anyhow they have acquired. We don't want any capital asset. So the section 11(1)(a) specifically says, which is not applicable for ordinary income. Only for this capital asset transfer, keep in 11(5) more deposits for a minimum period of 6 months, the board circular says. Courts even reduced that 6 months to 3 months, some shorter period also. Courts, those who went, sir, we don't know the board circular, so on by act and rules. So anyhow, but minimum as a prudent person, you should advise, or keep minimum for 6 months as a 11(5) more deposits, either bank deposit or post office deposit or government approved securities or government approved mutual funds. So in that way if you go, then automatically section 11(1)(a) full exemption you can claim. If you are not able to, the first 2 clauses are where objects are solely for charitable and religious. As partly for charitable, partly for religious, means next 3 and 4 clauses are applicable for those who are before this 1970 the amendment of the section. Then partly for that your asset is partly eligible for exemption, partly is capital gains taxable. For that separate computation is given. So that may not be applicable 3 and 4. Normally for any person is applicable only 1 and 2. So based on this 1 and 2, are you claiming the exemption? Are you offering it for taxable income? That's all these clauses. So with this now 150 time. So I completed my 36. But finally I am giving you this slide is more important. This slide is more important. What is this slide? Out of the clauses in this audit report, the first clause, ordinary income, which is not up to 85%, because shortage is there, you are having. That is in clause number 32 is there, I have covered it in clause number 32. And then 11(1)(a), just now I have completed, clause number 36. Third, applied money, not on this thing. In 31 disallowances this will come. That is also taxable income indirectly. These are all the normal rate taxable incomes. So these are covered by me in these classes only. Now specified rates also I have covered. First item 115 BBC, he has covered partly, and I have also said what is anonymous donation, which is taxable at 30% special rate. Similarly 115 BBI, I have also 5 types of violations, payments to related parties, like that. That is this thing. So I think D clause I have omitted. D clause is 1310. What is the 1310? He has touched and I have also touched. What is the 1310? 1310 is equal to either general public utility. You are having 12 BAB registration. Your object is general public. For example, Naradagana Sabha. Naradagana Sabha will not come and lead to poor education, medical relief. It will come in general public utility. That Narada Sabha conducted 10 music programs. For all the 10 music programs, it sold the tickets. And its expenditure is less, tickets sold is more. In yearly once, if you do that money, if you spend 11 months, the courts interpreted that sale of tickets is not commercial. Every month you sold the tickets, every month one show you had in Music Academy or this thing, and every month surplus you got. It is a commercial activity, general public utility. Your receipts from the sale of tickets is more than 20% of your gross receipts. You are no longer a charitable purpose. Please pay on that income tax at normal rates. This is the 1310 fourth class. So this is 1310 covers. He also said no books of accounts. Books of accounts, 18 codes are given, books of accounts and records. Books of accounts, 8 codes, records, 10 codes. All the 18 as if they have maintained. If you give in your that clause number 17, then only the computer will say proper books of accounts maintained, auditor certified, books maintained, books verified, books audited, everywhere else positive. Okay. If any lapse is there, this 1310 will come. 1310 is a special computation. What is this 1310 special computation? In case that GPU activity of some example only, Narada Sabha sold the tickets commercial, so maybe the Supreme Court decision in the BCCI, all the cricket associations, all these days have been claiming we are doing charity, public purpose, general public, exemption, 10 crores, 1,000 crores, 2,000, everything else, we are all done. It's a public society, public cricket association. So Supreme Court, you are not doing any charity, please pay the tax. That is the decision. Someone substance, all the ticket associations are commercial. You are doing only commercial, selling the tickets, big advertisement, it became a hangama, please pay the tax. Exemption is removed by the Supreme Court decision, what he said. So this 1310 is a special computation. Be careful about this computation, be careful about these 4 violations which are mentioned. That is nothing but revenue income minus revenue expenditure only is allowable. That sort of income, ordinary rates only. Once you are caught in these violations, revenue income and what they are not saying that the capital receipts, even if we meet for capital expenditure, will become revenue income, voluntary contribution, that indirectly. Capital expenditure will not be allowed. 2, any loss carry forward set off is not there. 3, out of any loans, if you incur any revenue expenditure also, that loans related revenue expenditure is not a revenue expenditure. Out of revenue income, if you meet expenditure only, I will allow. Remaining is taxable. So like that, these are all the specifics. So with this, I conclude. And as I told you, in the receipts and payment account, if you prepare summary before commencing the audit, if you prepare receipts and payment account, cash basis, then it is easy for you to fill up the audit report and then to give a correct, true and fair view of this audit report. You must have a receipts and payment horizontally, normally receipts and payment vertical. That vertical also I want you to cut into horizontally revenue receipts, revenue payment, capital receipts. Even the revenue receipts again bifurcation. For objects related revenue, objects related expenditure. Property income used for administrative expenses. Business receipts, business expenditure. Donations other than anonymous and donations to other trusts, to revenue, to purpose. So like this you should. Normally even this horizontal bifurcation may not happen in several cases. Why? Revenue receipts will not match with revenue payments. Sometimes capital receipts will go for revenue payments. Many number of times revenue receipts will go for capital payments. So all this you should have clarity, source and the application. Then alone your audit report will be correct. Then alone you will arrive the correct. Thank you for giving me this. So now it is the lunch time. After lunch also we will be here. So the questions we will answer at the end. Thank you.
Thank you very much, sir, for the wonderful presentation. May now request A.V. Arun sir and Revati madam to jointly present a memento to CA Dr. Palgun Kumar sir. We recognize the presence of CA Bhima Bhatt, past chairman also. Requesting sir also please join in the rise.
Come sir. Hello. So I see here. Speed up on time.
Thank you. All are requested to join for lunch and reassemble by 2:30.
I will repeat her question. In section 12, capital AB, subsection 4, definition of specified violation, there is one subclass from 2019 onwards. Is there any violation under any other act? This was introduced in 2019 in this 12AB4. So now it is included in the definition of specified violation. So, why this has come? Just before COVID. Why? Because an education institution, not less than 10 acts are applicable to education. Leave alone the Income Tax Act. Leave alone the Income Tax Act. Right to Education Act. Every education institution, minimum 25% must admit poor people. Your name plate na
Sir, next generation taking over.
Off the record, in a joint family, a father, 4 sons and 4 daughters-in-law were there. There was always a clash between the daughters-in-law, who should do which work. So, father-in-law ultimately decided, we all go to the farm, and by the time we come to the lunch, you prepare lunch, you prepare the dining table, everything, you serve, and the 4th one, clean. Sir, time solunga. Correct, we generally normally come in, so 1 o'clock, you cook by 12, you serve by 1, you do this by 1, and 1:30 clean. So, after a division of work, first day implementation itself, all the people have gone to farm, labor, and they have come. By the time they come, 45 minutes late, like this session, by the time everything is clean, the head of the family asked, what happened? You said you do your duty without talking to anybody. First one, I cooked. Second one, I served. Last one, I have also cleaned everything. Nobody has taken the food. So cleaning is also done. Timely doing. So division of labor when it is there, somebody will cleaning job, they clean it whether the person is there. Coming back to our subject, the object for which it is given, forget. So, coming back to our subject, violation of any other law which is affecting the main object's achievement only, there is a word. So, during COVID, many hospitals, government prescribed CT scan 2,500 only, some other scan 1,000, because everybody wants to scan, whether I got an infection or not, normal cough also, afraid of cold cough. So the government prescribed the use. Many hospitals violate penalties also. If such a hospital is a non-profit organization, in achieving the main objects, government prescribed is the law. Law who prescribes? Legislature through government. So that violation is there. It is a specified violation of section 1284. Thereby the registration can be cancelled. Now her question is, in the computation of charitable institution or religious institution, in the income and expenditure side, some penalties are there. Do you say such penalties are to be coming under any other disturbance or not is her question. So now my answer is, go to section 37.1, business head. 37.1, any other business expenditure wholly, necessarily, wholly, exclusively, not necessarily, necessary word is not there, wholly and exclusively incurred, which is not personal expenditure, which is not capital expenditure, is allowable. 37.1, proviso, provided any penalty shall not be allowed under this 37.1 in the business head is there. Now on this institute guidance note, number of case laws, all penalties are not to be disallowed, which are violation of law, which are not procedural violation, substantial violation, shall be disallowed. So which are, in the sense, a traffic rule, your school bus crossed the yellow line, then challan will come automatic. Nowadays challan 1,000 rupees. Such 1,000 rupees penalty, is it allowable or disallowable, is our question. How many say allowable, how many say disallowable? Yes sir, after lunch, don't keep silent. Understand? Oh, it is allowable because it's all human error, not principles of for education institution violated means, as I told you, under the Right to Education Act or prohibition of Capitation Fees Act. After Supreme Court decision, every state government has passed an act, no education institution shall take the capitation fees. And fees regulation committee, every state government is having fees regulation committee. For engineering college, one fees regulation committee, for medical college. As per the fees regulation committee, only management quota this much fees, this is fees. So beyond that, if you take any proof is there, then it is a violation. So the penalties, normal penalties are all allowable only for objects only. So if you violate any other law and a big penalty is there in that 12 AB specified violation, which he is going to cover. Which class? In your classes 37 to 49, one specified violation on class is there. There he will cover this class. This is how we have to interpret and report. When to report, when not to report.
What about additional fees by registrar of companies?
That's also normal, sir. It's an opinion difference, sir. You see, what sir says, the institution purchase a land, they say I will purchase for this much money, they pay the fees. No, I want to extra money and extra additional fees paid to sub-registrar. That's what it is. ROC. Late filing also is the administrative expense, sir. No institution voluntarily pays the additional fees, sir. Because men are not there, information is not there, computers are not working. So we pay additional fees, late filing fees, which are all allowable. For information, in charitable trust, decided cases, on a normal income, you paid 1 year income tax. Is it next year application or not?
It's an application.
Number of decisions in the charitable institution under old 20A itself, income tax is an allowable. Now the next question comes. You paid and then went in appeal. You got refund. Then refund is income or not? Refund is income, normal income out of which 85%. These are all decided cases. Already number of cases. Any other questions, sir? Few minutes, sir. 5 minutes. Then he has to start his session.
Compounding fees paid to register.
These are allowable, sir. Hello, normal, sir. Compounding is also, instead of big penalty, all violations put together is not. Your question?
Education institution has taken a loan about.
Ma, ஒரு மைக் கொடுத்தா கொஞ்சம் எல்லாருக்கும் சொல்றதுக்கு.
An educational institution has taken a loan for construction of buildings about 15 years back. Now, and it has become NPA in the middle. Now the one-time settlement has been given by the bank, and now they are repaying the loan. Now the new amendment came which says if the loan is outstanding beyond 5 years, we will not allow the repayment of the loan as application of income.
Correct.
How to deal with situation? Because we are genuinely paying the amount.
The Act has no human considerations. Act means strictly Act only. So this problem is earlier loan repayments were allowable by court decisions only. No specific provision in the 11, 12, 13. There was no provision for repayment alone is allowable. No provision was there. Now there is a provision. This provision says any loan repayment within 5 years of taking the loan only. Central government gives to state governments loans repayable in 30 years. The same central government for charitable institutions says any loan repayable within 5 years only. Now it has come. This question is, the institution 15 years back taken loan, now some difficulty this that it is repaying now. Is it allowable? No, it is not allowable. Under the computation of this religious and charitable institution public trust, now as per law, as on this date, not allowable. Because only within 5 years if you repay, from the taking of the loan, repayment within 5 years. Normally banks give term loans, 7 years, 10 years. So first 5 years allowable, remaining thing from your taxable income, that means from your income though you repay the loan, pay the tax, not allowable, pay the tax. Or In that 85% this loan repayment will not come. Maybe in that 15% you repay. You see the difference? So not allowable means the loan repayment is an application. All the application, is it 85% or not, 85% or not. Maybe the 15% you pay. That is the intention of the law. That's all. That's the answer. Next question.
Two doubts regarding Form 10BD. The filing of 10BD is mandatory. The donors don't want ATG exemption. Number two, how to deal with donations given in kind?
Sir, the previous person has dealt with this in this audit report. If your hard copy is given to all of you, see that class 26 or 27. That is voluntary contributions reported in 10BD. It starts with is it, sir? Reported 10BD. What is not reported, 6 subclasses are given in the hard copy. In that not reported, your client comes who says, I don't want the ATG. That means you are not reported in a 10BD. In a not reported, by cash how much, by electronic mode how much. What is in kind, that's also there. Like that they give. What is less than 2000, like that they give. So in that it will come nothing wrong.
No anonymous, nothing will come.
You are right. See, anonymous also is one subclass in it. So anonymous is there, that also you cannot, anonymous you cannot report in 10BD. So if you say anonymous is there, still you accept it and try to pay the tax. That's all. You are prohibited from taking anonymous if you don't want to pay the tax. But by chance, because orphanages, orphanage will come in relief to poor. Orphanage will come in relief to poor. If old age comes, GP. Old age means even rich people will go to old age. Not necessarily. Orphanage means only poor, nobody else to say. So orphanages will come and relief to poor. Old age homes comes in GPU. Whether the GPU or the old age home or this thing, if it puts a hundi at the entrance, orphanage, somebody they don't want their name, they put in the hundi. Then hundi you cannot say that is other than anonymous. Hundi is always anonymous. Hundi for religious institution is exempt. Hundi for other than religious is taxable anonymous. You admit as anonymous and pay the 30% tax. That limits as it is. So, and your question, the audit report itself is clearly saying what is total voluntary contribution. Out of the 10BD reported how much, 10BD not reported how much. Normally in India, especially in southern India, many temples, many places, free food is there. When you go for free food, whether they ask or not, after eating the food, normally some money you will, and then the other person, please give your Aadhaar, please name and address, cell number. I don't want that. I am giving this money, you take it. It happens. It is the reality. It is the reality. So they are all anonymous. So anonymous you cannot report in 10BD. In that form you say totally, this money is accounted, 10BD, 10BD not. So total efforts. Next.
Donation in kind.
Donation in kind, he has already, my previous institute said it should be accounted for a proper internal control. But this audit report indirectly says what is the value. So at a fair market value we record them in the books of. For example, temples, jewelry donating people, normally anonymous only. They don't want their name on the jewelry. So, jewelry, how can you say at 1 rupee value? Because control will not be there. Managements every 3 years, 2 years, 1 year change it. Jewelry, so it should be a record. So the government by bringing these records, compulsory records, property register, one register is maintained. Movable property. There are several trusts. Several survey numbers of land disappeared over the years. The managements are that much capable of disappearing the land. So now the government said all immovable property register you maintain. The auditor should verify the register, yes, verify. Movables, especially jewelry will be there for temples. Like it all deposits, everything we maintain the register. So when you maintain the register and verify market value, fair market value. Fair market value is defined. Yes, sir.
Sir, one of the trusts donated classrooms for this thing. Company donated classrooms. What is the accounting entry for this?
Sir, sir, the classrooms constructed and given.
Yes,
This happens normally alumni associations. Medical college alumni associations. Those doctors, 10 doctors, that batch, 40 doctors, 10 went to America. Normally they come back. I got from AP state government itself an opinion for me. For a Guntur government hospital, which is a very 70, 80 years old hospital, the alumni wants to donate 10 crores. The government said, this is a government hospital. You want to donate 10 crores. What for? A separate block for cancer. Okay. So the government said, we are already having a AP Infrastructure Corporation. You should donate to only AP Infrastructure Corporation. Infrastructure Corporation should invite tenders and go and construct it. So that total cost you bear, not the 10 crores. So what is happening? 18% the contractor is charging on the buildings. So the donors say, why 18%? When we are giving donation, you say you exempt that this thing. Otherwise say for 10 crores, 18%, 1 crore, 80 lakhs I have to incur only for the sake of tax. My donation is paying for 18% tax. We don't want the donors. Then the government asks me, is there a way out to give an opinion? You please give the opinion. Whether is there a way out how to do all these things. So, your question, please repeat your question for the sake.
What is one of the company constructed classrooms for a trust?
You are right. That company, two possibilities. As a donation constructed the classrooms means, company would have claimed it as expenditure.
See that
CSR expenditure.
that aspect we don't know, sir.
Sir. Company can incur the CSR expenditure by two ways. A, company itself can float a Section 12A registered trust, and through the trust it can incur the CSR expenditure. That's a company section 135 of the Companies Act has said. So then no question of any problem. If companies which are compulsorily to apply 2% of their earlier 3 years average profits as CSR expenditure, if they are donating to some other management charitable trust to do some charitable activity prescribed in Schedule 7 of the Companies Act. Now, if the company puts question, conditions, my money you should use, every 3 months give me the report, I have to apply to the MCA also, the thing, you also must register some, that CSR 1 form, the trust should first register with the MCA, then only the company can use the donation. If the conditions are there, it attracts 194C. It is not a mere donation, it is a conditional performance is expected. My money I am giving some performance from the other person I expect. It amounts to contract, agreement, subject to TDS. So CSR expenditure directly as donation without TDS may go, but go as a grant, a conditional grant, then the question of 194C contract will apply. So your final question answer, the building how to account for, that the company donated or somebody donated, as colleges, alumni, people give the equipment.
Sir, actually the company has given us a letter stating that we have constructed a building with valued at rupees 2.5 crores.
The 2.5 crores is buildings, new buildings donation, 2.5 crores buildings cost debit, building account debit, and corpus for donations, 2.5 crores credit. That's all the journal entry.
Actually, we don't know that the building is not worth 2 crores.
They would have accounted in there.
Generally, there is a local proverb. The cow in my house, when it is alive, I will say, this is useless, this is eating this much grass, giving only 1 liter milk. If my cow dies suddenly, then I cry, my cow 5 liters milk giving died. When it is alive, I will say 1 liter only. When it dies, I cry, my cow which was giving 5 liters died, I am at loss. So whenever the donation, all these things locally, not worth means what is it? By accounting, what is the loss for you? By accounting 2.5 is there. They gave the letter, for nothing loss.
We cannot put into problem by the income tax.
Sir, the company gave you blame. Then the company will be in more trouble. They were booked 1.5 crores and they have given the letter. The black money, the 69 will attract for them. 69C, unexplained expenditure. Sir, any other question?
Bad debt statement, bad debts. Application.
You are right. This is also decided cases, number of decided. In a charitable institution, for example, the students' reimbursement of fees, governments liberally say, you claim we will give, we will give. It happened in Andhra Pradesh. Several private hospitals are all approved under Arogyasri. That means the government says, you give the free treatment, I will reimburse. And after 6 months, 1 year only, while releasing the money, no, you claimed according to us that surgery procedure is unnecessary. You claimed 1.5 lakhs, I will give 1 lakh only. Now what happened? You already filed 3 years back 1.5 lakhs. Now that fellow is giving 1 lakh. What happens? As I said, right off that, bad debts are application, number of decided cases. Bad debts are application, number of decided cases in capital ministry. Next.
Sir, it is a cash purchase on fixed asset.
On panna, switch on.
It is a cash purchase on fixed asset. Whether it is a allowable deduction, because on the 48.3 it is only on related to expense. It is to be related to fixed asset. So provided amount exceeding 10,000.
Please go through section 43 subclass 5. Business head is 43 subclass 5. Cost of the asset. If it is cash, it is not cost of the asset. 43.5 cost of the asset definition.
Okay, sir. But in case of PGBP, only 3 sections applicable in the trust. 40A1A, 40A3 and 40A3. Other than PGBP provision not at all attracted trust. So 43.5 to be not at all attracted in the trust. Sir.
You are right. But first, your simple question, I incur the capital expenditure by cash. Can I claim it or not? Now, the section in charitable trust, what it is saying, I have already shown in my slide. Any application of money, is it satisfying the conditions of 40 capital A3? It's a simple question. So, capital expenditure, though mutatis mutandis the 40 capital A3 is imported, 40 capital A3 principle is, sir, we should go sometimes with the principle, the spirit of the section. Capital expenditure allowing itself as application is a very wide wisdom, the broad mind. In that I will incur the cash expenditure, please allow me means you are violating the 40A3. In my view, it's not allowable. It is not an allowable application. Yes, sir. If no other question is there, I will leave and the speaker.
Repayment of the loan taken before 15 years, sir.
Now
he has gone for one-time settlement.
So
they have given a sanction ticket, new sanction ticket, it becomes a new loan.
The LB, in your hand you are having LB schedule. Which year you borrowed and which year you are repaying, you both are to be given details, sir. One-time settlement is only not a fresh sanction of loan. Loan amount is received earlier. In which year you received, which year you applied for the objects also is asking, the schedule LB. So we cannot interpret that this thing is there.
It is only a commitment letter. One-time settlement, they are agreeing to this.
See, actually one-time settlement is a rescheduling. Nothing but reschedule. Already scheduled given is over. NPA it has become. Again rescheduling repayment is one-time settlement. The rescheduling of payment is not equal to first loan sanction, first repayment. It will not. Sir?
Renaming the repayment.
But of course, for some people, for income tax sake, give divorce and again marry. So can we call it a fresh marriage? That's what it says. Giving donation or giving transferring the assets, she is not my wife. How to tell? Take divorce. And again after some time you marry. So that I said.
Not to corpus fund. 3 years before 2021, the corpus funds would be depleted by application of towards objects. But in the books, it will be treated as a capital. It will be gone to the capital fund. So corpus fund will be depleted, but actually in the books it will be showing the value exactly.
See, now if you see the new ITR, which is more detailed, elaborate thing as far as the corpus fund is concerned. What was the corpus fund in 1420? Then 21, 22 it is asking the new ITR. So the government expectation in this corpus fund is a dubious method was there to cut that only they have put this. What is the dubious method? I will tell. Please don't apply it. Because I am telling you, stealing technique. A school is there, a college is there. Corpus fund to cross. balance sheet, land and building 1 crore 50 lakhs, deposits 50 lakhs. Suddenly the management thought, why should we keep this land and building? School is not giving that much income. Let the land and building be used for a hotel. How to do that? Already we are having 12A accumulated income, already enjoyed. They want to wind up the school. What do they do? Every year, 4 years, 5 years. School fees is only 60 lakhs. Salaries and administration is 1 crore 60 lakhs. Within 2-3 years, minus. So, how to meet that? Every year the management people will introduce the loans, meet the loss, and ultimately 4th year, sell the land and building, meet the liabilities. No assets, no liabilities. Corpus fund is 0. So, they introduced this charitable trust, which was not there up to 2021, as you said. Corpus fund cannot be touched. You should see every year. If you are depleting, is it genuinely depleted or not? They want to monitor. That's why section 11(1)(d) the condition is made, and now for the past 3 years, what is the corpus fund? In the idea it asks you, how, with which assets this fund is represented, you give. It is asking idea 7. So, you have to maintain the corpus fund is the intention of the government. That's the answer. Sir, with this I will close, because before around 4 o'clock I will, before 4 o'clock I will leave. I am giving the floor to the next speaker, and I am sure at the end the first speaker and the third speaker will put together answer the so many practical questions, practical problems also. So I thank once again all of you for giving me this opportunity of clarifying problems. Thank you.
Thank you very much, sir. We are now moving CAE Chaitanya sir to handle the post-lunch session. May now request CA A.B. Arun, Secretary SIRC of ICAI, and the CA Revati S. Raghunathan, CP Committee Chairperson of SIRC, to jointly present a shawl and memento to CAE Chaitanya sir. Over to Chaitanya sir. Good afternoon, everyone. At the outset, I would like to thank SIRC team, SIRC Chairman Sir, Honorable Sir, Secretary Arun Sir, SIRC Regional Council Member Madam, for giving me this opportunity. I am also thankful to all of you for being patiently staying here post-lunch to hear a topic which is of current flavor. 10B is, by now you would have understood what are all the criticalities that are involved in the 10B. It is a very complex form. Very fortunately, it is applicable as of now only to, not to every charitable trust, but only to very few charitable trusts as of now. So, at least to that extent, we are saved. We are saving our effort. Now, imagine the amount of complications that a chartered accountant would undergo if he certifying 10B, not just the issues that are there in Form 10B alone, but you couple it with the other requirements that are present under the institute guidelines, the effect is manifold. You will have to first decide under which level your charitable trust will fall. Is it level 1, level 2, level 3, level 4? Then decide the list of standards that are applicable to that category of charitable trust. Then apply all those standards, prepare your financials, sign it, issue the audit report under SA 700. Then forget what all you have done, take up the financials once again and start filling up your
Form 10B. The effect is manifold. You will have to apply all the standards that are there under the normal accounting standards issued by ICAI. Then, ignoring those standards, there is a complete different set of requirements which are to be presented for the purpose of Income Tax Act. So, the effort that is put in by the CAs for the purpose of certifying financials, especially in the case of charitable trust to whom Form 10B is applicable, is quite daunting. Now, having discussed all these things, Form 10B to a great extent, it appears for me to be a copy-paste exercise. In fact, several of the clauses were lifted directly from the sections and put into the Form 10B. They did not even, wherever there was an obligation on the part of the trust, they have lifted it from the section, put it in Form 10B. Wherever there was a compliance issue, they have lifted it from the section, they have put it in 10B. Sometimes they forgot to even delete the copy-paste errors that are coming in. So they have just written all the things that are there with copy-paste errors also. So not just, somebody says, some senior politician would say, chartered accountants, most of their audit reports are copy-paste. Now not just auditors' reports, even Form 10B is also having considerable amount of copy-paste errors. Not just Form 10B, Form 10BB also. Now, apart from that, the Income Tax Department went a little further. They did not want the auditors to have a little peace of mind. So they were earlier, for all commercial institutions, they were asking us to issue tax audit report, and wherever required, they have asked us to issue transfer pricing report also. So where there were domestic transactions, earlier we used to issue tax audit report along with this transfer pricing report. Now even the specified domestic transaction scope is reduced. For a couple of very few transactions, we issue a transfer pricing report also. For charitable trust, they have mixed both the transfer pricing report and the tax audit report, and they now say it is all in one audit report, which is Form 10B. In this audit report, you will have to report not only the issues relating to charitable trust, but wherever there are transactions with related parties, even for those, you will have to certify whether they are at arm's length or not. If they are not at arm's length, you will have to report it in the Form 10B also. So probably the guidance note on audit report of charitable trust would go beyond the size of the guidance note for banks. Probably some 800 pages should ideally come. I don't know. When it is out, we'll have a case for discussion. Now, before I take up my 37 to 49 clauses, there are a couple of, seeing questions that have come up, I thought I will, instead of rushing through my points, I will take up a couple of issues which are very general to all my points. I try and clarify them for a better understanding, and then we will proceed with my points. See, this business is one critical area as far as the charitable trust is concerned. Whenever there is an activity for a consideration, then normally there is a issue that it could be in the nature of business. We all know that there is this last limb called as any other advancement of any other object of general public utility, and for that there is a proviso which says that the activity has to be incidental and the total receipts from such activity should be below 20% of the gross receipts. And while describing that, they said the activity should be in the nature of trade, commerce or business, or any service in relation to trade, commerce or business. This is what is treated as a business activity. But let me tell you that the receipts which are in the nature of business need not be only in the last limb of the charitable activity. It could be in the first 6 limbs also. And for the sake of clarity, I would classify the business receipts into 3 categories. First category, where charity itself is a business. You come to my hospital, which is a charitable hospital, I treat you for a fee which is below the market value, it is still business. The charity itself is a business there. The second category could be a business activity which is incidental to charity. That is the second limb of the business activity. And the third activity could be an unrelated business activity to charitable trust. These are the 3 buckets in which I can divide business activities, and for all the 7 limbs these three categories would come. So effectively there could be 21 different categories or different streams of income applicable for a charitable trust. As far as business itself is charity, or as far as business incidental to charity is concerned, for the first six categories, as long as it is proved that there is no profit motive, there is no taxation. So for the first six categories, business itself is charity, business incidental to charity goes out. What remains is just the last category alone. Unrelated business, receipts from unrelated business activity are prohibited in all 7 categories. I'm repeating again, receipts from an unrelated business for all 7 categories are prohibited. For example, there is an empty space, there is a school playground which is available, and on a very regular basis, the school allows the outsiders to use the playground for whatever purposes it is. It could be cinema shooting, it could be movie related events like audio launch or video launch or trailer launch. It could be for any category. If they continuously lease the empty playground, then it could fall within the category of business. The moment it falls within the category of business, it will automatically fall in the unrelated category, because the letting out is neither incidental nor is it the main charity. It is only a feeder activity to the charity. It is as good as running a wine shop and taking the money and using it for charity. In that scenario, unrelated business, there is a total prohibition. If you are carrying it out, it is not in relation to your objects, your exemption could also go. So, unrelated activity, please be very, very careful as far as the 7 limbs of charity is concerned. Now, there is only one peculiar case in which an unrelated activity is also permitted for all the 7 limbs. I am not taking it here because it refers to property held by a charitable trust. In that scenario, an unrelated activity can also be carried on. Effectively, to put it in a one-liner, I cannot carry on an unrelated business, but if an unrelated business is given to the charitable trust, it can be allowed to be continued. It is a very difficult scenario because it involves considerable amount of case laws and other issues, but as of now, unrelated business, you can simply take it as prohibited for all the 7 categories. As far as the last limb is concerned, for that you will have to ensure that your gross receipts are below 20%. Effectively, if your gross receipts are below 20% and it is incidental to business, then you are permitted for the 7th category, which is advancement of any other object of general public utility. So, I hope now you are clear with the business receipts which are applicable to a charitable trust. Now, having discussed business receipts, we will quickly move on to, incidentally I have also covered the proviso to clause 15, which says that for the activity of charity which is falling in the 7th limb, 2 conditions have to be complied. The receipts have to be within the category of incidental business, and then it should be below 20%. Now, in this Audit case, Ahmedabad Urban Development Authority, the Supreme Court, as you all know, in the morning session also it was elaborated, the Supreme Court dealt with the 7th limb of activity. There, the Supreme Court did not say that if the business receipts are there, it amounts to business and then you have to pay tax. That is not the answer. They said, for the purpose of testing whether a transaction is business or not, you will have to test what is the markup. If it is a nominal markup, the transaction would amount to business. If it is not a nominal markup, it would not amount to business. So, for example, if a government institution, if an urban development authority is selling land or it is allocating land to poorer sections at a nominal price, for example, it is constructing a building and selling the land and the building at a very nominal price, then even though the transaction is in the nature of business, it would not amount to business because the markup over the cost is only nominal. In that scenario, cost plus nominal markup will not amount to a business transaction. Cost plus abnormal or unreasonable markup will amount to a business transaction. The moment it amounts to a business transaction, it does not directly lead to taxation. You will have to again test it for this 20% limit. You will have to aggregate all the business transactions. The total of the business transactions, is it falling below my 20% limit or exceeding my 20% limit? If it is exceeding my 20% limit, then only for that year you will lose exemption under 13 clause 8 and thereby it will lead to taxation. Otherwise, every business transaction will not result in taxation for a last limb of charity. This is the sum and substance of the judgment of the Supreme Court. So effectively, please don't jump to the conclusion that every business transaction would lead to taxation. There is no such case. Now, having discussed to clause 15, we will now move on to something called as specified violations. These are the violations which can result in loss of your registration under 12A. This is a concept which is very important because if any of the 7 activities are attracted, any of the 7 violations are committed by your charitable trust, then it will result in cancellation of your registration. And I will refer to those 7 when I come there. In fact, the audit report 10B only gives 6. Current year budget introduced 1 more that was not captured in the form in spite of budget becoming act much ahead of time. Anyway, as of now, there are 7 kinds of violations. Now, what is the problem as far as these violations are concerned? Why should we be worried about? Because this year, the Act has increased the number of sections which can tax a charitable trust. You have section 115 BBC, which taxes anonymous donations. You have section 164, subsection 2, which taxes normal income like your disallowances, like the income unspent, all that will be taxed in the normal 164.2. You also have 115 BBE, which is now, you have 115 BBI, which taxes specified income. You also have 115 TD, which is the draconian section, which taxes, when you lose your violation, you have your taxed at your MMR. Apart from these 4, there is every possibility that even 115 BBE could come in your charitable trust case. So please be, normally when we talk about 115 BBE, we say it will only get attracted when the provisions of 68, 69 to 69D are getting attracted. But there could be every possibility that even in a charitable trust, those sections could come into play. So please be very, very careful. There are effectively 5 kinds of taxation sections which could tax the charitable trust. Now, 115 TD is the section that I just now talked about. In case you have heard this discussion, it would only amount to repetition, but nevertheless, it is a good point to discuss on because 115 TD is now by far the most dangerous section as far as the charitable trust is concerned. Reason? The moment 115 TD gets applicable, the moment it becomes applicable, what is taxed is not your assets minus liabilities, but the market value of the assets minus your liabilities recorded in your balance sheet. Total market value of all your assets, not just immovable properties, market value of immovable properties, market value of your land, building, your movable assets. By chance your market value of the movable assets is much more than your cost, then even that market value is captured. Market value of all your assets minus your liabilities, that would be treated as the accredited income taxable under 115 TD, and on that accredited income, tax is levied at MMR, maximum marginal rate. For this year it is 42.74%. So it is a very draconian section because if 115 TD gets attracted, you are liable to pay on a value which is much, much higher than your normal income of the trust. Now, when does 115 TD come? 115 TD could come in 3 scenarios under this section. The first scenario is when you have converted into a form which is not eligible for registration under 12AB. Second is when you merge with an entity which is other than having the same objects and registered under 12A. And when the third one is when you have dissolved but you have not transferred your assets. First, what is meant by conversion into a form which is not eligible for registration under 12A? This is where the problem arises. You had a charitable trust. All along the charitable trust was having registration under 12A. In the current regime, you don't want to get yourself registered. You don't want to have the registration continue. You decide not to apply for registration under 12A. Good. You have not applied. The moment the due date is over, the department will visit you with 115 TD. 115 TD says, see, all along from the date of inception till this new regime came in, you enjoyed exemption under 12A. So all these years, whatever are your assets, on the market value of the assets minus liabilities, I will levy tax at MMR under section 115 TD. Okay. It is like once you have stepped up on the tiger, you cannot get down. You have to keep continuing. You have to keep riding it. If you get down, it will eat you. This is like this. Now, what happens when even though I don't like, I want to apply for registration. The due date they have given a particular due date for registration. That due date I missed. But nevertheless, I applied for registration. Even though I apply for registration subsequently, if I missed the due date, even if it is by 1 day, there is every possibility that it will be eligible for cancellation under 115 TD. Thereby, trust could invite tax liability under 115 TD with MMR rate also. So please be very, very careful. If you are supposed to get your trust registered by 30th of September of a particular year, if you apply for registration on 2nd of October or 3rd of October, for that matter even 1st of October, your trust could lose exemption your trust could get itself de-recognized under 115 TD, then you will have to pay tax. Unfortunately, nowadays, no income tax officer wants to open the Income Tax Act and read the sections. If they want to become master of the Income Tax Act, all they have to do is operate their software perfectly. That's all. They know the software well, they are well versed in the provisions of the Act. Everything is now recorded in the income tax software. Everything is now there online. How many hours we would have spent reading the definition of what is meant by notice served, notice issued? How many hours we would have spent? Everything is now vanished with just a tip of, with the introduction of software. All those old cases, everything is gone. Everything is recorded. When did you file your application? When is it due for renewal? When have you reapplied for registration? Everything is recorded. Nothing can be escaped. So the consequences of 115 TD are very, very harsh. Please be very, very careful whenever you are applying, whenever you are maintaining, you are doing the audit for a charitable trust. Charitable trust, as I said earlier, now the registration is not perpetual. It has to be renewed once in 5 years. The moment there is a due date for 5 years, you will have to file the application within 5 years. If you miss filing the application within that 5 years, you will invite the consequences of 115 TD. There were two provisions which were beneficial to a charitable trust. They said, if you obtain the registration at a later point in time, then this registration which is obtained at a later point in time will travel backward to all the years where there was a gap in the registration, and this registration could be applied backwards also. Was those provisions under section 12A, those two are deleted by this Finance Act 2023. So no more the registration travels backward in time, it is only forward. Therefore, if there is a delay in the registration, for that gap, your charitable trust could apply 115 TD. Now, having discussed so much about 115 TD, we will now quickly move on to my slide, because these are all concepts which are relevant for the purpose of my slide, so I have given it out there. The first one is application of income out of the following sources. Now, this is a point which tries to capture applications which are not out of the current year income. In clause 31, when we were verifying clause 31, we said we are trying to capture applications which are out of the current year income. Now, this is a clause which is trying to capture application which is outside current year income. How do we determine what is to be reported in this clause? Take out total application for the charitable trust, total application. Whether you have spent it on the objects of the trust, you have spent it on the administrative activities, you have spent it for some other purpose. What are all the total application, what are all the total expenses incurred, revenue expenses, capital expenses, you take a total out of the application. Out of that, whatever is out of the current year income, that will go for reporting in class 31. Balance left, balance of the application has to be now segregated into all the categories that are written here from A to F. They have to bifurcate into all the categories that are given here, and then it has to be reported. And then that also has to be again segregated into what are electronic modes, what are non-electronic modes. As you all know, there are 8 to 9 categories of electronic modes given in Rule 6A BBA. Rule 6A BBA gives out the categories of incomes, categories of electronic modes. Apart from that, Circular number 6 of 2023 also has clarified the various categories of electronic modes. They include your credit card, debit card, account pay check, account pay, DD, NEFT transfer through this apps, UPI app or BEAM app. All those things are captured under the electronic mode. So for all of them, Rule 6A BBA would discuss the various categories. Accordingly, you will have to classify the total spending into what is electronic mode and what is non-electronic mode, and then you will have to give the total spending. So effectively, from where did you start? Take out your total application. Out of the total application, whatever is reported in class 31, you remove. The balance has to be segregated into the fields that are given here. How much is spent out of corpus, how much is spent out of borrowing. Now, as far as borrowing is concerned, I was hearing a couple of questions. Borrowings, as you all know, could be two categories. One is a term loan, another is a OD loan. OD, sometimes some educational institutions, some hospitals take an OD where they keep having the balance. Now, incidentally, this was also one of my questions. What happens in the case of an OD? OD is renewed every year. OD is renewed every year. Does every renewal mean that I have closed the old OD and taken a fresh loan? Does every renewal mean I have taken a fresh OD and closed the old OD? Probably it could be so under the banking law, but under the income tax law, it requires actual closure. For at least one day in a year, the OD balance should come to zero and then again restart. If that is the case, then yes, you have repaid the old OD and then you have taken a new OD. Why is this relevant? Because if you have taken a loan, then the maximum repayment period for the loan is 5 years from the date of utilization. So, if I have to say that I have really repaid the loan within the 5 years and I have taken a fresh loan, then within 1 year your OD should touch that zero balance and again restart. So, just because you are renewing your OD every year doesn't mean that you have closed the old OD and started a new OD. There should be a closure at one point in time. Then, as far as term loan is concerned, term loans, I am sure before this act was introduced, before this provision was introduced, every college or every hospital would have taken a loan for 15 years, 10 years or a larger period also. It could be for construction of their building, it could be for machinery also. In fact, several NBFCs are issuing loans for machineries in hospitals, the tenure of which is normally more than 5 years. Now, it would all be difficult to escape the provisions of this section 11. One best way to come out is wherever you have crossed this 5-year threshold, wherever you have exceeded this 5-year threshold, then if you repay out of your current year income, it is not treated as an application. So, the best way would be to break an old FD which is there. Say that I have repaid the term loan which is beyond the 5 years period out of my corpus. Hence, my corpus is getting utilized for the repayment of the loan. Current year income, you spend up to 85%. If you have surplus, you accumulate without any obligation. If you have more, then accumulate and spend it in the subsequent years. But this should be supported by your transactions in your bank account and your accounts. You cannot simply take this argument at a higher level. It should be well documented in the form of entries. So if you have to repay a loan which is beyond 5 years, then the best way would be to break an old FD which is not under any obligation. By obligation I mean accumulation under 11.1 or accumulation under 11.2. If it is not under any obligation, then it would be a corpus FD, you break that FD, or it could even be a 15% accumulation over a period of years. You break the old FD, get it credited. Even in that breakage, current year also there will be some portion of interest. Don't utilize that interest. Whatever is the principal FD that you have broken down, that portion alone you utilize for the repayment of this loan. Effectively, you will be bypassing this 5-year time period. But please be very careful when you are doing this transaction, because any issue, it could result in taxation. Yeah.
We constructed a building of 12 lakhs, taken for loan for 10 years. 5 years, we get repayment. Balance in 5 years, 7 lakhs I'm going to repay. I would like to depreciate on 7 lakhs and 5 lakhs the repayment. One transaction I divided into, one is the depreciable thing, another is a non-depreciable thing. Can it be possible?
Why can't you claim depreciation on entire 12 lakhs?
No, repayment of loan I am taking.
Repayment of loan is application.
Application.
Asset is not application. You are not claiming the asset as an application. You are only claiming the repayment as an application.
Yes,
for the purpose of depreciation, asset should be treated as an application. Asset is not treated as an application in your case. So you are eligible for depreciation.
The same asset, when it is repayable for first 5 years, that portion I am taking as asset is an application.
No, a loan is an application. First year when you purchase the asset, have you claimed application? The answer is no, because it was out of a loan.
Yes.
You have taken a loan, you have purchased an asset. Have you claimed the asset as an application? The answer is no.
No.
Subsequently, you are repaying the loan.
Yes.
Loan is a repayment, asset is not an application.
Yes.
So I am eligible to claim depreciation on the entire 12 lakhs. What is the problem?
But in such case, 12 lakhs plus this 4
Double
years
deduction.
repayment,
Yes.
17 lakhs is
Double
the
deduction.
application. Is it correct?
Depreciation, how can you estimate it in the 85%? See, for example, my income for the year could be 1 lakh. My depreciation could be much higher. I have an asset, I am allowed a depreciation at a rate of 10% on the asset value. My depreciation could be much higher than my application. Depreciation, the whole purpose why depreciation is allowed is because of judgments. Judgment law said, income has to be computed in a commercial manner. How do you compute it in a commercial manner? Means you will have to allow depreciation. That is how people have started treating depreciation as an application. Till this point in time, there was never a law in the Income Tax Act which either prohibited or allowed depreciation. The whole purpose of allowance of depreciation. In
23-24 assessment year prescribed ITR 7, there is a particular line, allowable depreciation. In the ITR, 23-24 assessment year. Then depreciation is allowable. There is a particular line. Go on, now by which one?
Just to elaborate on his question, I think his question was, I cannot take loan as an application after 5 years. So I'm just bifurcating. First is like 5 years I'm taking loan as an application. After that I'm taking the depreciation.
He is on a very conservative side, he can take it. You can take it, but I am trying to go a little more further in saying you can claim double deduction by taking the asset also as depreciation as well as treating the loan also as a depreciation. A loan as also an application. Yeah.
I'm taking loan for 10 years. Now 5 years is about to close. I will ask the banker to close it and again give fresh loan.
Good. First, you will have to ask the banker to issue a new loan. You will have to utilize that new loan to close the old loan. In that scenario, yes, it is a new loan used for a new purpose. It is allowed. Okay. As I said earlier, it has to be broken up into these categories and then it has to be reported in these categories. As the earlier in the morning also the speakers have said, the data flow is now automatic. All they want to try and do is they want to bring the data from the audit report to the ITR electronically. So even if you file the ITR and the audit report on the same date while processing 143.1, they will again bring the data from the audit report to the ITR, compare wherever there is a discrepancy, and then they will process your return. So effectively, whatever is reported here could effectively lead to a disallowance in the hands of your assessee if it is not being properly reported. So to that extent, you will have to exercise caution while reporting application other than out of current year income. Now, again, this particular point says, to the extent you have reported in 37, to the extent you have shown as application in 37, for that if there is a payment made exceeding 50 lakhs to a single person, there you will have to give the name and address of the person to whom such payments have been made. So to that extent, you will have to ensure that you are properly reporting under this clause. Now, this 50 lakhs would serve as a information to the department in verifying this activity.
So each and every case we have to give.
Each and every case in the sense, what are you trying to say?
50 lakhs individual payment.
In the one person, 50 lakhs exceeding, you will have to report. Whether it is capital expenditure or revenue expenditure.
Maybe 100, 200 items.
How can 50 lakhs, more than 50 lakhs per person in 1 year, sir? If there are 100, you will have to report, sir. Out of the total application, sir, point number 37 is talking about application other than out of current year income.
Other than out of
Current year income. If it is out of current year income, you have to report it in clause 31. If it is not out of current year income, you will have to report it in clause 37. Out of the amount reported in clause 37, if there is any payment exceeding 50 lakhs per person in 1 year, you will have to report it in clause 38. Hope all of you are through with this. Then you will have to report more than 50 lakhs, to that extent you will have to report. If at all TDS provisions are applicable on that payment, you will have to report those also, TDS also, if at all it is applicable.
Sir, one more doubt.
Yes, sir, please.
It will be very difficult for us to say how it is spent out of current year or out of accumulated. It will be very difficult to know. It is something like pour water in a bucket, say take save water.
Correct. Sir, there I would not fully agree with you, but I would also not fully disagree with you. Sir, for example, till last year, my corpus and my income, surplus in the income and expenditure account, whatever was there, I parked it entirely in one fixed deposit. My bank account balance, opening balance was 0. Current year income I got. I made some payments on which I have not deducted TDS. Can I say I have made these payments out of the opening balance? Your balance sheet apparently shows. What happens if your opening corpus and your opening income and expenditure is entirely sitting in your bank account? Your bank account, current account, opening balance is having 3 crores or 4 crores, from which is represented by the corpus. In that scenario, you are free to take a stand that I have spent this payments on which I am not subject to TDS out of my opening corpus, so hence you remove me from this.
Corpus is represented by fixed assets, sir.
Corpus is a very good example. The corpus is represented entirely by fixed assets. How can you say I don't know the distinction between earlier year funds and current year funds? That could also be said. So this is again point 38, which is there. Point number 39. This was one point that I was talking about when I was talking about on 115 TV. They say, is section 1013 applicable or not? The first point within clause 39 is section 1310 applicable or not? What is the history of 1310? This is something that we need to understand to know whether 1310 is applicable or not. What happens to a charitable trust when it loses the exemption for that year? For some reason, it is not maintaining the books of accounts. Section 12 starts with the wording. Section 12 starts with the wording that nothing contained in 11 would apply if the assessee does not maintain the books of accounts, or if he does not get his books of accounts audited, or he does not furnish the return of income. This is how the language goes. So, if for any reason I don't maintain the books, or I don't get it audited, or I don't file the return in time, for that year I would be losing my exemption under 11. If I lose my exemption under 11, how should I be taxed? Should I be taxed at MMR? Should I be taxed on my gross income? Should I be taxed on my net income? This is a point which was a dilemma for most of the practitioners. The most logical thing to do would be to take this charitable trust, the entire income of the charitable trust would be treated as an AOP. They take the entire income of the charitable trust into other sources. The moment you take it to other sources, expenditure allowable should be in accordance with section 57. 57 said expenditure for the purpose of making or earning the income is allowed as a deduction under 57. Rest of the expenditure is not treated as allowed. For example, I get a donation of 1 crore. Out of that donation, I do a charitable activity. Now, is this expenditure for the purpose of earning or making that income? The answer is no. In that scenario, the entire gross receipt is taxable under other sources. There is no possibility of allowing this expenditure, even though I spent it on charity, because there should be a correlation between the income and the expenditure for all the 5 heads. It is only for the purpose of charity. Even though if there is no correlation between the income and the expenditure, this set-off is allowed under the income tax act. So the moment I go out of 11, the moment I step out of 11, although I have incurred the expenditure and although I have got income, there is no correlation between these two. I have not incurred for the purpose of earning this income. I have got donations. This will be a little different if it is school fee. For example, there is a school fee. I can still go ahead and say I have incurred the expenditure for the purpose of earning school fee. So in a school case, let me get taxed at a net basis. The answer is yes. But in a case where I have only donation as my income, but I have incurred expenditure, in that scenario, it will be very difficult to state that you have to tax me on a net basis. You will obviously be taxed on a gross basis. In that scenario, the dilemma always was that whether I should be taxed on gross basis or net basis. The normal logic, all courts have adopted that 57 is allowable subject to the expenditure meeting the criteria mentioned in 57. This was the stand taken by almost all the courts. 57 was an allowable deduction. That is now codified in the form of section 1013. Section 1013 says, even though you lose your exemption for whatever be the reason, I will, out of the income, I will allow you the expenditure provided it meets 7 conditions. It should not be capital expenditure. It should not be expenditure which is not subjected to TDS. It should not be incurred in cash. It should not violate the provisions of the 13(1)(c), 13(1)(d). All those conditions, not 13(1)(c), it should not violate. It should not be a payment made out of corpus. It should not be a payment made out of loan. All those conditions they have put, the 7 conditions, but they have somehow allowed the expenditure. So if you have 11 operating, then even capital expenditure was allowed as a deduction. But if you do not have section 11, at least the expenditure which was incurred for charity, revenue expenditure which was incurred for charity, at least that can be claimed as a deduction against the income. So to that extent, section 1310 is a beneficial section. 1310 is no doubt it is a beneficial section, because we need not rely upon case laws. We can simply quote the section itself, which is now allowing for expenditure. Yes, sir.
Trust, I got only
You can sit
trust
and
income.
ask.
I
Please
don't,
sit.
I,
Sit
I
and
don't
ask.
have I don't have any voluntary donation. I have got only interest income. Whether expenditure is allowed?
No, except bank charges or any expenditure incurred for earning that interest income.
Administration expenses.
Nothing can be allowed.
Administration expenses and all.
Sir, actually the manner of claiming the deduction is a little different in the board circular, sir. There is a very old board circular which said, out of the total receipts of a charitable trust, reduce expenditure in entirety which is incurred for earning that income. You reduce that expenditure. Whatever balance is left, out of that you spend 85% for charity. This was the board circular that was there. Somehow that board circular did not come into the ITR as it is. They could not bring in that filling up as it is. There are a lot of charitable trusts which have substantially higher administrative charges rather than the actual charity. There will be 4 employees, there will be 5 employees. Whatever donation they get, out of the donation 50%, 60% will go for administrative expenses itself. They will be spending very little on charity. Even in such cases, board and the courts have held that administrative expenses also should be treated as charity only. Administrative expenses cannot be classified. The whole reason why I am saying administrative expenses is, ideally in this scenario, out of my total income, administrative expenses have to be reduced in entirety. On the balance alone, I have to calculate 85% and see whether I have met that limit or not. That should have been the presentation. Unfortunately, it is not captured in the ITR. ITR simply says, tell me your gross receipts, out of that tell me whether you have spent 85% and accumulated 50% or not. If you have not accumulated, then I will tax you. This is how the ITR goes.
Whether the department will take a stand that it is not a charitable institution at all, because I got a valid registration. Till last year I got a donation. This year I didn't receive any voluntary donation. So
Yes.
I got only income from unsourced, which is by way of bank deposit.
You have a good case to say that you are still a charitable trust. Department cannot take a stand that you are not a charitable trust. 1 year, due to lack of money, I could not have spent. That doesn't mean that I am not a trust. Yeah. So 1310 to that extent is a beneficial section. Now this reporting under clause 39, it says whether 1310 is applicable to you or not. First you have to say yes or no. When would 1310 be applicable? When proviso to 215, which is for any other advancement of a GPU, would get attracted. In that scenario 1310 could come. When my books of accounts are not maintained, or when the books are not audited, or when the return of income is not filed. In all these 4 scenarios, there could be a possibility of 1310 coming into picture, because I would lose my exemption under section 11. In that scenario, when 1310 gets attracted, then you will have to specify for which reason 1310 is getting attracted. First is whether 1310 is applicable or not, yes or no. If the answer is yes, then you will have to say for which reason 1310 is getting attracted. The 4 conditions are given below. Out of that, you will have to select either one or multiple, more than one as yes or no. If all the 4 are no, then obviously the first one is also a no. It cannot. First one you say 1310 is yes attracted, but you cannot say the others are not applicable. So one of them should be applied for 1310 to get attracted. Once 1310 gets attracted, now they ask for computation of income. What is the gross income? Out of that, what is your expenditure? In this expenditure also, is there any expenditure which is disallowable? What are the categories of disallowable expenditure for the purpose of 1310? For the purpose of normal computation under 11, the disallowable expenses are different. For the purpose of calculation under 1310, the disallowable expenses are different. In 1310, if 1310 gets attracted, your capital expenditure is not allowed as an application. Your capital expenditure spent on building is not allowed. But if 1310 does not get attracted, you could have claimed the capital expenditure as application. Therefore, to that extent, make a distinction. 1310, if it is getting attracted, capital expenditure goes out, spending from loans or borrowing goes out, depreciation goes out, contribution out of donation goes out, cash payments goes out, expenditure on which TDS is not deducted goes out. Apart from all this expenditure, if at all there is anything which is qualifying, that alone will be allowed as a deduction. Then on the net income you will have to pay tax. Otherwise, normally, if both are equal, then probably, in spite of losing exemption under 11, you need not pay tax. So this is how working under 1310 gets calculated. Any doubts in this? 1310, as I said, it is a beneficial provision. This clause number 39 is only trying to capture the calculation under 1310 in audit report. 1310 calculation is getting captured in this audit report. Effectively, they don't want to do anything. Income tax department does not even want to raise a pen and put a figure. They want everything from the audit report. They want this calculation also.
Sir, in this case, we feel it is respect of file 10B audit report. Now we are not getting 11 exemption.
Sir, if you have not maintained the books of account itself, then the question of filing an audit report would not arise. But if you have maintained the books, return is not filed on time, you still lose exemption. Or you are getting your accounts audited after 2 years, you have to still file Form 10B, but you have to give the calculation. Sir, you are still a charitable trust. As long as you have 12A, you are still a charitable trust. Whether you claim exemption for 11 in that year or not, you are still a charitable trust. You will have to file ITR 7 itself. Just because I am not eligible for 11 exemption in 1 year doesn't mean that I will file ITR 5. And I still have to file ITR 7 only, because ITR 7 has to be filed by an institution having 12AB registration number. Similarly, Form 10B, even if you have to file the audit report, you have to file the audit report in 10B itself. But for that year, you could apply, 11 could get applied to you, it could not get applied. Assuming you have maintained books, you have filed your audit report in time, you have filed your return also in time. Because of operation of the proviso to 215, you could lose exemption. That 1 year, instead of 20% gross receipts, your gross receipts from business activity went to 22 or 23%. For that 1 year, you will lose exemption. So you will give calculation under 1310. Next year, it will fall below 20%. You will still claim exemption under 11. So even though you lose exemption under 11, you still have to file Form 10. That should be your answer. Is that adequate, sir? Anything else? Okay. This was the last point which said what is your total income under section 1310 if at all calculated. Whatever probably this is a red mark, whatever I put there, it is a typographical error. They have copy pasted from the line below. There is no such class called subclass 2 of class 12BA, 1BA. There is no such subclass 2. There is only section 12, subsection 1, class BA, but they have put subclass 2 also, which is a typographical error. Now, this is a standalone point where they are asking if you are registered under 80G, where you are registered under 80G, you are collecting donations and you are issuing the receipts for the donations collected, then you will have to spend only for charitable activities if you are a charitable institution. You will have to spend for, if you are a religious institution, you are anywhere not eligible for 80G. But if you are a composite institution, like you are doing both charitable and religious, and you have obtained 80G, then in that case, or even if you are a standalone charitable trust, you cannot make a payment towards a religious activity exceeding 5% of your total income. That is the limit that is prescribed in that section. For complying with this point alone, they have raised this point in the audit report. As I said earlier, wherever there is an obligation on the part of a charitable trust to do a particular thing, they have lifted that section and put it in the audit report. So this is again a standalone. This is only to check compliance with section 80G subsection 5A. That's all. 5B. Nothing more. They want to know whether your expenditure towards religious objects is below 5% or not. They have lifted that section and put it in the audit report. Now, this is again a clause which is trying to capture the details of specified persons. Specified persons include your author, your trustee. This is just the starting. Now we are starting on the transfer pricing report. So effectively they are trying to capture all your associated enterprises. Now they are saying, give me a list of all your related parties. Who are our related parties? Author, trustee. If the author is a HUF, all the members of the HUF. Then your substantial donor. Donor who has donated above 50,000 from the inception of the trust till date. From the inception of the trust till date, if he has ever made a contribution, either one payment or aggregate of payments exceeding 50,000, he is treated as substantial donor. 50,000 rupees is the limit given. If he has given, even if it is 10 years back, if he has given 50,000 rupees, he is treated as a related party. It will continue to hold on, go on. So more than 50,000, any single contributor is treated as a related party. Ever 10 years back he gave 50,000. For 10 years he was sleeping, I was sleeping. After 10 years, if I were to give him a payment for any expenditure or for any application, it will be treated as a payment to a related party. That will again be subjected to substantial amount of scrutiny. Okay. It is now 4 o'clock, probably in another 2 minutes. I'll finish off this class and then we can go ahead for tea break. Sir, give me 1 minute, sir. I'll finish off and then we'll go back. Now this is only trying to capture the list of related parties. It is saying author in the case of a trustee. In the case of a trust, it is the author. And in the case of society, all the executive committee members, in fact all the members, then the trustee and the member, substantial donor, I have already discussed. All the concerns in which the above parties have substantial interest. Substantial interest means 20% or more voting power or eligible to take profits. That 20% substantial interest, if they have in any concern, such concerns will also be treated as related parties. You will have to provide the list of related parties in this clause 41. Whether it is restricted to the transactions made during the year or it is a perpetual lifelong list is something that is for which there is no clarity. My personal view, to the extent of transactions made during the year alone,
those parties have to be reported under this clause. It is not a perpetual list that has to be given here. So with this, I conclude on point clause number 41. We have another 5 clauses to deal with. It will not take much of time. I'll answer sir's question and then we'll wait for you. Sir, your question.
When was the tea break?
Yes, sir. It is now a tea break. Thank you. We'll have a tea and we'll join in. We will now quickly move on to clause 40. Yeah, please.
In case if we are treating...
Sit and ask me.
In the first limb, as you rightly said, like charitable as business. So in that kind of scenario, maybe a educational institution, maybe a hospital. In that case, even like 1 year fees will cross 50,000. So do we consider everybody as related party?
No, 50,000 is substantial donor. He should give you as a donation.
Okay.
In that case.
No, it's like in fees, generally it is fees, but it's like bifurcated as donation.
If it is bifurcated as donation, you have a serious risk. Everybody is a substantial donor.
The entire school is a... Sorry.
42, clause 42. Now this is dealing with transactions with related parties. Let me tell you here that from point A to point H, it has been lifted from section 13 and put in the audit report. Beyond this, they have not even done anything. They have simply lifted the section as it is, section 13.2, whatever was there in 13.2, they have lifted it verbatim, they have put it here. Now, having done that, they know we will think bad about them. So they introduced the schedules to see whether the transactions are done properly or not. First, these are all transactions with related parties. Transactions with related parties are dealt with generally in 13.1c. Without affecting the generality in 13.1c, 13.2 gives you the list of related party transactions where it is deemed to have been considered as violation. 13.1c gives you the broad mandate in which a transaction with related party will be treated as violating, and for which 11 and 12 will not apply, is a general provision given in 13.1c. Without affecting that generality, as an illustrative list, 13.2 gives you the list of items for which it is assumed that there is a violation of 13.1c. That list which is given in 13.2 is lifted verbatim and put in audit report. What is the first one? Whether the trust has given its funds for the as loan to another party. If it is given as loan to another party, then is there adequate security? Is there adequate interest? These two are clubbed using the word and. So mandatorily, two things have to be complied. Is there adequate security? Is there adequate interest? If it is given as a loan. Okay. What happens if there is no adequate security or there is no loan? I just go to the reporting point for the purpose of this, otherwise I don't have to touch. See, here they say where the money is lent. You give me the name of the party, PAN of the party, details of income from which it is given, what is the security that is obtained, what is the interest that is collected. And more than asking those details, it is, I have marked it in red, it is asking whether the security is adequate, whether the interest is adequate or not. This is something which is very, very similar to your transfer pricing audit report. Transfer pricing audit report, what does it say? What is the transaction with the related party? What is the arm's length price? Is it excess or shortage? You tell me. That is the sum and substance of the audit report, transfer pricing audit report. The only thing they used to ask in extra was what is the methodology adopted for determining the arm's length price. That methodology alone they are not asking here. Everything else they are asking in this charitable trust audit report. They say what is the security provided for the loan? Is that security adequate or not? And what is the interest that is being charged for the loan given? Is that interest adequate or not? So this is the extent to which they want to capture the details from the auditor. So before finalizing a charitable trust audit report, you will also have to do the testing for the arm's length price,
And if it is found to be acceptable, at least I need not go with the terminology called arm's length price. I can say, is it at market value or not? If it is at market value, then I will have to report the value as market value. If it is not, I will have to show a different market value. So this is how the reporting is there. All the points are there in 13.2. It simply says whether the transaction is, if you say the transaction happened, if you say yes, then you will have to mandatorily fill up the schedule. Without filling up the schedule, you cannot simply say yes or no for all these points. This is how it is asking. Now, each of the points is not a big deal, but if you still want, I will explain, otherwise I will skip this. 13.2. Okay. These are all the schedules which require. I will just stick on to the last table, which is, I think, applicable in all the cases. They say, where a salary, allowance or otherwise is paid to a specified party out of the resources of the trust, then you tell me whether what is the amount paid and what is the reasonable amount. Take the case of a school. A school has a trustee who also happens to be its correspondent. There would be a principal also, but still there would be a trustee who acts as the correspondent. He draws a salary of 1 lakh rupees per month. Now, not only should you report the related party here, you should also tell whether that salary is reasonable or not. You ask the trustee, how do you say your salary is reasonable? He will say, sir, you are the auditor, you tell me how should I make my salary more reasonable. How do you prove? Very, very difficult. There is a owner who has surplus funds, he has invested in a charitable hospital, he sits as the managing director or he sits as the main trustee of the hospital. He does nothing. He only collects the cash, he makes the payment, he ensures that the doctors are attending the patients. That's all. Now, he charges remuneration of say 1 lakh per month. How do you say his salary is reasonable? If you are asking a charitable trust to show that the transaction is reasonable, you should also know before certifying that the transaction is reasonable. This clause is considerably different from what was there in the S2I 10B. S2I 10B, I am repeating again, S2I 10B only asked us to report if the transaction was not at market value, if the transaction was not at a reasonable price. But current audit report, it is not asking us to report transactions where there is a deviation. It is asking us to report all transactions and then you report whether it is deviated or not. For example, I have paid a salary of 1 lakh. I will report till column number 6 that I have paid a salary of 1 lakh. Is it reasonable amount or not? I mean, what is the reasonable amount? Invariably, I have to put the same amount as the reasonable amount. For example, if 90,000, I have paid 1 lakh as salary per month. If 90,000 is the reasonable amount, I will put 90,000 in the last column. But I have paid a salary of 1 lakh and the reasonable amount is 1,20,000, then I have to put only 1 lakh. I cannot put 1,20,000. Because whatever I paid is reasonable. So, as long as my 6th column is reasonable, I need not fetch values outside and put higher values in column number 7. But if my value in column number 7 is lower than my expenditure, then I will have to report the lower figures. Judging the reasonableness is now a daunting task for the auditor in the completion of the audit report, especially in Form 10B cases. If you are running a school or a college, ask your college to obtain the fees or the salary published by various government institutions. For engineering colleges, you have AICTC or you have JNTU, where they publish that you have to pay so and so minimum amount to so and so teacher. All that salary list you obtain. If you are a case of a doctor, ask him to obtain salary pay slips of his friends who are working in outside commercial institutions. One pay slip per month or one pay slip for the entire year. 1 month salary at least if you can see, that will act as a good proof for you to report under this clause. Sir, the harshness of the government on the CS is increasing day by day. As if we are not being adequately governed, our institute is also being more protected. We now have QRB, which is reviewing all tax audit reports. There are already a number of cases which are reviewed year on year. Time will not be long before our report of charitable trusts are also verified by QRB. In that scenario, it is high time we have adequate documentation to safeguard ourselves. Whether client goes to hell or not, we should be safe enough. So it is our job to first protect ourselves, and then if at all any skin is left, we will protect our clients. Otherwise, first we will have to protect ourselves. So adequate documentation before the closure of the audit is a vital point that I wanted to bring to your notice. Sir, most of us while doing audit will think, if at all it comes for scrutiny, we will see. If at all somebody picks up for scrutiny, we will take at that point in time. Sir, in most of my own cases, I could not take at a later point in time. Because client will not be interested. Okay, QRB is your issue, you look after it. I am not worried. Income tax scrutiny, if it comes, we will see. Most of the clients will report the same thing. Very, very difficult, sir, but still that is how we have to report on. In the case, yeah, yes, sir.
What is this compensation? We did some other compensation.
Sir, land and building, if at all you have given it, is the rent adequate or not? Land, building, which continues to be made available for use to a specified person. I have a shop. I have given the shop to a trustee. For that shop, in a similar area, the rent would have been 1 lakh. I charged only 50,000. I am charging lower for letting out my property. The trustee is losing money. That has to be reported here.
So that is for rent.
Correct.
If the 1011 tool it is saying some other compensation.
Details of rent. If there is other compensation, that also has to be reported. For sale of immovable property below the value, there is a separate schedule, sir, that does not come here. For sale of immovable property below the value, market value, there is a separate schedule. You need not bring that. Maintenance expenditure, for example, you are incurring maintenance expenditure, you are not collecting it from that cases, it has to be reported.
So in some cases, monthly rent will not be paid, bulk amount will be given.
Whether you compare per year or per month, sir, you should ensure that both of them are reasonable. For example, you are collecting 1 lakh per month.
When bulk amount is paid and no monthly rent, we have to fill the compensation
No,
area.
no. See, for example, you are collecting bulk rent from the trustee or from a related party.
Bulk rent, instead of paying rent, use effective mortgage takes.
The lease type.
Lease type.
Is it at market value? If you are done the same transaction with a third party who is unrelated, will it be at market value? If it is at market value, you need not.
I fill the next column, last one.
Compensation?
Yeah, in that we have to fill.
No, if your rental agreement says that you will take care of maintenance, and if that is the case with all other tenants also, then it is still at adequate compensation only. But if your rental agreement with all others is, I will charge 10 rupees per square feet, and for the purpose of related party, you say there is no compensation, I will give you free.
No, his question is like this. Instead of paying a rent or something, I have paid 10 lakhs for user of the property for 10 years. Shall I have to fill that compensation column instead of the rent column? That's his question.
I am saying, if that transaction is like any other transaction, yours is a peculiar case, I understand. But is this peculiar case a general case with all other tenants? If it is the case, you need not fill up. But if it is, you have done this only with your trustee, you have not done it with any other tenant, and you want to prove that it is at arm's length, then you are at risk. If it is a very peculiar transaction with your trustee alone, and all other tenants you are giving property on monthly rent, it will be very difficult to prove. Yes, sir.
Section 13 itself they have specified, if it's given on lease, minimum 1,000 rupees you have to charge.
Section 13, sir.
Section 13, one of the clause, leases and all, if you give me.
There is no amount reference.
I think that rent, if you give me minimum 1,000 rupees, I read somewhere else. In that case, I am charging 1,500 rupees. Whether it will be reasonable?
It is obviously reasonable, sir. So for example, if
Market may be more, even 10,000 or 15,000.
then it is not reasonable, sir. If you were to give the same property to a third party, unrelated party, if he gives you 10,000 per month, minimum of the minimum, you are doing injustice. I mean, the rent collected is lower, so you will have to report.
Maybe in the case of educational institutions or anywhere, so the principal who is being appointed, he becomes a party of the board, maybe a secretary or so whoever is employed. So in that case, will he be a related party here?
No. Ma'am, as far as I know, all CBSE schools, the CBSE board insists that all the salary payments should be made through a principal account. Bank account should be opened in the name of the principal so-and-so school, and from that bank account only salaries has to be made. The person who is disbursing the salaries, the drawing disbursing officer, would be the principal only, but that does not make him a related party. He should be an author, or he should be a trustee, or he should be a member of the managing committee.
So member of the managing committee.
He cannot be a member of the managing committee without his name appearing in the bylaws or in the society trust deed.
in the society.
says that any person who is appointed as a principal will become a member. So that is
Then he is a related party. Then he is a related party.
If the value is specified, is any income or property trust instituted diverted during the previous year in favor of any person referred in section 13 where the value of the same exceeds 1,000 rupees.
That is only a threshold limit, sir. It is not per property. Sir, if my difference is more than that amount, then I will have to. That is only a threshold limit, sir. Just like your 40 capital A materiality.
So sometimes trustee's child will study in the
Most dangerous section, trustees child studying in the college. Section 12A says it is treated as.
Can we get collect fees?
You collect the fees, then to that extent of the difference, there is no taxability. But if you assume that the fees you charge for an unrelated child is 10,000 per month, from a trustee child you collect 3,000. On that 7,000 rupees, you will lose 11 exemption and you will have to pay tax. You cannot say this 7,000 whatever is there I have applied. That also you cannot say. So on that 7,000 you will have to necessarily pay tax.
Do we need to report in the report
Yes,
that the trustee child is
Yes,
studying?
yes. Yeah. So these are all the issues as far as this related party transactions is concerned. Services made available by the trustee by the trust to the trustee or to the related party. For example, in his case, he was talking about the trustee, the school trust giving educational services to the trustee or to the trustee's child. Take the case of a hospital which provides free medical treatment to the trustee or to the related parties. All that will have to be reported here. All that will automatically become taxable irrespective of your threshold limit. Whether you have 1 lakh, whether you have 2 lakhs, that will automatically become your income and you will have to pay tax. So please be very, very careful as far as that point is concerned. I mean, the moment it becomes AOP, all the rates could apply. Sir, this is again a very misnomer that I would like to bring to your notice. I mean, for most of us, we think that a trustee is exempt up to 2.5 lakh. The answer is true. A trustee is always exempt up to 2.5 lakh. But if you look at the word trust defined in in the end of section 13, in an explanation, they say trust includes any kind of legal obligation. So, a trust or a society is taxed as an AOP. So, for all those cases, this 2.5 lakh limit would apply. Whether the same logic can be extended to a Section 8 company, the answer is no. If your assessee is a Section 8 company, then this 2.5 limit would not apply. The limit is 0. So even if it earns 1 rupee, it will have to file its return, it will have to get its accounts audited, there is no basic exemption. 10,000 rupees disallowance also you will have to pay tax. So the basic exemption limit of 2.5 lakhs is only applicable as long as your client is falling under the category of an AOP. The moment it becomes a Section 8 company, there is no basic exemption limit, everything becomes taxable. So on the 2.5 lakh, I have clarified that. This is shares purchased by the trust from a specified person. Is it below the rate or above the rate? Immovable property, somebody was asking, the consideration. What is the consideration paid for the asset? What is the reasonable consideration? Again, that would be an issue. This would be, there are cases where genuinely the market value of that asset, especially in the real estate sector, would be considerably higher than the SRO value. Then you normally pay the higher value to the trustee and buy. When a trustee is purchasing the property from the trustee, it would pay higher value. But here, the officer could view that SRO value is alone the real value. Why are you paying higher value? There could be a possibility of getting hit also. So, to that extent, please be very, very careful. Shares sold on behalf of the trust, is it at higher value or lower value? Any other movable property which is sold, whether is it at reasonable value or not? This case, in the case of any other property being immovable, what is the consideration, adequate consideration or not? These are all the subclasses. The moment you say 13(2) is applicable, all this would come. Whether income is diverted to the trustee, that has to be reported in this clause. These are all points that we know only for our safeguard. It is not that we are going to say yes to any of these points. The moment we say yes, our claims are seriously picked. But we should know what we have to report under these points. Why I am saying this is that, assume that a trust has committed a violation under 13(1)(c). 13(1)(c) is payment to a related party.
13(1)(d) is placing the funds of a trust in a mode which is not specified. Modes are specified in section 11.5 read with rules. If you don't place the funds of the trust in any of the modes specified, if you place it in a different mode, then you could invite application of 13(1)(d). 13(1)(c) is where you make an excess payment to a related party. What are the consequences? What are the consequences? Till last year, 13(1)(c) violation or 13(1)(d) violation was a part of the reasons which can lead to cancellation. This year, specified violation list has been given. In that, 13(1)(c) or 13(1)(d) does not appear directly. You understood? Till last year, 13(1)(c) or 13(1)(d) was one of the reasons which could lead to cancellation. The moment the cancellation is there, 115 TD would come. So 13(1)(d) or 13(1)(c) compliance was a huge issue. This year, in the specified violations list, nowhere you find 13(1)(c) or 13(1)(d) directly. So there is one strong presumption that any violation under 13(1)(c) or 13(1)(d) could not lead to cancellation, is one presumption. That is added further by the introduction of section 115 BBI. 115 BBI says, if there is a violation under 13(1)(c) or 13(1)(d), to the extent of the income so violated, you will have to pay tax at the rate of 30% only, not even MMR. 115 TD attracted MMR rate. 115 BBI says only 30% rate, you pay the tax, get out for that year. This also supported my view that it cannot lead to cancellation. Now they introduced something called as 271 AAE. Penalty under 271 AAE, which said if 13(1)(c) or 13(1)(d) violation, 13(1)(c) is a first time violation, no problem, pay 100% of the amount so violated as penalty. If it is second time or third time violation, pay 200% of the amount as penalty.
Tax amount or disallowance?
Disallowance amount, sir. It is the income which is applied for those purposes, you pay that amount as penalty. So under 115 BBI, they are collecting 30% plus the applicable surcharge and cess as tax. Under 271 AAE, they are collecting penalty which could be 100% or which could be 200%. Are they satisfied with these two? The answer in my view is no. It can also lead to cancellation. Just now I said in the specified violation list it is not appearing. Where can it lead to cancellation? Please look at the specified violations list. It says if the conditions of registration is violated, it could lead to cancellation. In the conditions of registration which is given in your form 10AC, it says the funds of the trust should not be pledged in any modes other than 11.5. The funds of the trust should not be lent to related parties at unreasonable rates. All that is given in conditions of registration. So effectively, for 113(1)(c) violation, you could end up paying tax, you could end up paying penalty, and possibly you could lose your registration together with 115 TD also. At least if it is a first time violation, I am sure I will not lose my registration. But if the violation happens second time, third time, fourth time, then I am not going to assure you that it could not result in a cancellation. Definitely it could lead in a cancellation of registration also. So please be very, very careful as far as 13(1)(c) or 13(1)(d) violations are concerned. If you have a different view, I will be happy to hear, but as of now, my view is 13(1)(c) violation could lead to cancellation also. Specified violation, I was just talking about it. If at all there is a specified violation, you have to report it here in the audit report. What are specified violations? The list is given here. As I told you earlier, the CBDT in its enthusiasm to pick the language, they have taken the Income Tax Act 2022 and put everything. They forgot that in this own section, specified violation, there is an amendment by the Finance Act 23, wherein apart from F, there is one more point called as G. They have omitted to report that point in the audit report and they have just picked the language. If you look at those 6 points given over there, each of them independently constitutes a specific violation. What are the points? Income of the auditee applied for other than its objects. What is other than its objects? Even if you spend it for a charitable purpose, if such charitable purpose is not in your objects class, it amounts to spending for other than your objects. Morning, the best example given was donation to PM Relief Fund. Even though donation to PM Relief Fund could appear on the prima facie as a
charitable purpose. If it is not given in your objects clause, it could lead to specific violation, thereby leading to cancellation. So please be very, very careful. In my view, entire expenditure in your income and expenditure account, ledger wise, map it with the objects clause. This expenditure incurred, to which object does it pertain to? If it pertains to object number 1, put it as object number 1. If it pertains to object number 3, put it as object number 3. Ensure that you map the expenditure with the objects in your objects clause. Thereby you are adequately safeguarded that none of your objects are spent for other than none of the expenditure is incurred for other than your objects clause. Second, profits and gains, they are neither incidental nor, if they are either not incidental or separate books are not maintained, it could lead to specified violation. Third is 13(1)(c) and third is private religious purposes. Fourth is particular religion or caste, except scheduled caste, scheduled tribe, women, children, except for these backward classes also, except for these 5 categories. If you were to form a trust for a specific community, you will not be eligible for 12-year registration. That is what is being captured here. Fifth point, if the activities are not genuine, it could lead to cancellation. Sixth point, if you have violated any other law which is material for the purpose of carrying out your objectives, then you are required to fill up a separate schedule, and that schedule has to be reported for the purpose of this clause. So this is the schedule that has been put up there. It says what is the law, what is the non-compliance, has it reached finality or not. If it has not reached finality, you need not report here, but if it has reached finality, then you will have to report there, and thereby the trust could lose exemption. So this is how the clause number 43 is worded. If there are doubts, I'll take, otherwise I'll move on to the next point.
Any other laws like PF violation or PF?
Sir, which are material to the conduct of the activities. For example, there is a school. Materiality could include PF and ESI laws because they are pertaining to the employees. Now, those have also undergone a change very recently, so the new laws could be applied. But essentially, for a school, you will have to look at first the society law, because that is the structure through which it is governed. So the society law. Then you have the state fee regulation committee. Then you have other applicable laws, including the labor laws, could be attracted.
Safety laws regarding the kids, food safety and all those things.
It should be material for the purpose of our objects. For example, I'm a hospital. The state government puts out a rule that you cannot charge beyond this amount. That is a material law which is there. But every small minor non-compliance will not lead to my cancellation, even though I have not complied with the law. The law should be material for the purpose of carrying out my objectives. That is the issue. So, on point clause number 44 and 45, 44 talks about depreciation. I think we have discussed adequately on depreciation. 45 talks about claim deduction under any other section of claim deduction or exemption under section 10. Normally, except section 10(1) and 10(23), C, 3AD, 3AB, 3AC, 3AD, 3AE, except for these 5 sections. If you claim exemption of income, you are not eligible to claim exemption under any other section of subsection of section 10. So for a charitable trust, except section 10(1) and section 10(23)(c)(3), 3AD, 3AB, 3AC, 3AD, 3AE, except for these 10(1) plus these 4 sections, 5 sections, you are not eligible to claim exemption under any other section. If you have claimed exemption under any other section, automatically you will lose exemption under 11. Best example, I have a registration under 1023(6), or I have a registration under section 1046, and I also have a registration under section 11. Then I cannot pick and choose what is applicable to me. Either I have to stay in section 11 or I have to stay in 1023(c) series or 1046. But I cannot choose between these two. This year they have introduced 1046A also, which is again a beneficial provision. So if I am opting for 1046, there also it requires an approval. But if I am opting for 1046 or 1046A, 1046A is now more beneficial. If I am opting for 1046A,
then I cannot claim 11 exemption. If I am opting for 11, I have to surrender 1046A. Between these two, only one is allowed. So the audit report is now trying to capture under which section you are claiming exemption. If you are claiming under one, you will lose the other. And by the way, if you happen to claim under 1046A, you are again inviting troubles of 150 TD. So even though your income is exempt, your assets will be taxed at MMR. The accredited income will be taxed at MMR. So please be very, very careful. 46th point. Now from this point onwards, it is all a combination of your old audit report under 44AB. Whether you have taken a loan or a deposit in violation of 269 SS. If you say no, then you need not fill up the schedule, but if you say yes, you will have to fill up the schedule. What is a loan or a deposit? For example, the trust had a shop. That shop it gave out on commercial rent. Now, for giving it out on commercial rent, the trust took 3 months rent in advance as a deposit. Assume 1 month rent is 10,000 rupees. It took 3 months rent, 30,000 rupees in cash from that fellow as rental deposit. It has to be reported in this clause under 269 SS. So all deposits, security deposits, rental deposits, anything that you collect, if it is in cash, if it is in violation of 269 SS, you will have to report under this clause. This is as similar as you are reporting under 44AB. So to that extent, you will have to ensure that proper care is taken. And for all this nonsense, the institute simply says, why do you want to put all your head into all this? Give a disclaimer. We are unable to prove that the deposit has been taken through account pay checks. Give a disclaimer in the audit report. Fine, you are done with the schedule. So this is what institute really recommends, and it is advisable to put in every audit report. As an auditor, we do not have information whether the payment was receipt was collected through account pay check or not, because that would be in the hands of the banker. So to that extent, I am claiming my disclaimer. So to that extent, the institute recommends, and I would also suggest that you put the same wording that is reported in the guidance note here also for charitable trusts. Same is the case 269 ST. 269 ST says for in any one day from any one person, or for an event or a transaction, or for a series of transactions, you should not collect more than 2 lakh rupees in cash. Now, for example, a person comes to a trust and says, I want to give donation. Morning somebody was asking about anonymous donations collected in cash. Some person comes and says, I want to give a donation of 5 lakhs. I don't want the donation to be given ATG. Can the trust accept? The answer is no. Because a trust cannot take a donation, even though it is a donation, it cannot take donation exceeding 2 lakh rupees in cash, because 269 ST would come into picture. So even if the donor does not want deduction, a trust cannot take more than 2 lakh rupees in cash as donation, because 269 ST would be violated. So to that extent, please be very, very careful. All donations received, verify. If it is not in violation of 269 ST, then you are safe. If a person has given a donation on one single day exceeding 2 lakh rupees, we all know the answer. Break the donation into 2 halves. Say one he has given on a New Year day, another he has given on a Deepavali day. Somehow you break it, take it as 2 donations, but on single day don't write an entry exceeding 2 lakh rupees, thereby inviting consequences of 269 ST.
Does it require filing SFT for trust also?
No sir. No sir, but probably they will take a cue and then they will start this also. Again 269T, we all know, most of these sections, the wording in the audit report or the schedule, it is not at all new. They simply picked it up from Form 3CD and put it in Form 10B. Apart from this, there is not a single word that has been disturbed. So all the guidance that is given in the guidance note on tax audit of the institute would apply as it is here also. So to that extent, there is not much of a thing that I can give. Last clause is your TDS clause, where it says all the transactions relating to TDS you will report in this schedule. This is again as it is verbatim picked up from Form 3CD. To that extent they have given. TDS schedule relating to the quarterly TDS returns filing has to be reported. Interest payments on the current year transactions as well as earlier year's interest from traces both have to be reported. This is how it has come. So everything clause number 47, 47, 48, 49. All these three, in fact 46, 47, 48, 49. All these 4 clauses, they have picked it verbatim from 3CD and dropped it in this 10B. So this is how I conclude my talk on this 10B. Thank you for a very patient hearing. If there are doubts, I will take them. Otherwise, sir, you can also join. And before I go for doubts, there were a couple of questions on prepaid expenses. Normally, prepaid expenses, you would put it in your balance sheet. Even the normal accounting, under the normal accounting, you put it in your balance sheet. But as far as the trust is concerned, every expenditure, whether it is prepaid or not, even the prepaid expenditure would qualify as application. If it is made out of the current year income, even though it is prepaid expenditure, you can treat it as application of income. Capital work in progress, 100% it would qualify as application of income, even though the asset has not been capitalized. PF employer contribution, as long as it is paid, it is treated as an application of income. Irrespective of the date of payment, your provisions of section 3615A or section 43B would not arise, and all PF ESI payables, if they are paid before the end of the year, it will be treated as application. On 31st of March, if it is remaining as PF payable, then to that extent it will be treated as, it will not be treated as application of income. Advances given for purchases, whether it is on capital account or on revenue account, any advance given is also treated as application. This is coming out of the judgments that are already given. Advances received on account of services to be rendered, fee received in advance would be treated as income of the trust also. So this is how I have addressed all the queries that have come during the debate. If there are further queries, yes sir, I take.
The temples are selling this hair. The TCS has to be collected if it is more than 50 lakhs per
If you are a seller, that 206(1)CH talks about a seller. Seller means a person who has previous year turnover is more than 10 crores. Or
turnover means the gross receipt will be turnover.
Gross receipt in the sense from this business activity. What is business is the criteria there. If at all your activity qualifies as business, and from that business if your turnover is more than 10 crore, then yes, you will have to collect TCS.
So in the earlier year, if they have sold the hair and it is more than 10 lakhs.
And about
10 crores.
advance for civil work, it is treated as application.
It is treated as application, sir.
But do I have a choice to show that an application?
The answer is no, sir.
No, sir. For everything, prepaid expenses, I have to necessarily claim it as application.
Yes, sir. Sir, this concept of accrual basis of accounting has been removed from this charitable trust, especially under section 11. So, if I were to keep something as payable, I cannot treat it as an application in the year in which I record the entry. I will have to record it as an application only in the year in which I have paid. This year, this form 10B or the form 10BB also, it says expenditure which remains unpaid has to be removed in the negative, it has to be removed from application, and the earlier year's expenditure paid during the current year, it has to be added to the application. That is how the formula is given also. So all this is captured in the form itself. There is no choice much left.
They have not asked the question whether or not.
Sorry, sir.
They have not asked the question whether or not.
But the statutory obligations like PF and AS and you can pay next month only. Even that also
will be liable for disallowance, sir. You can get the opening pay unpaid, which is paid during the current year as application, but current year's PF payable, which remains unpaid, cannot be claimed as deduction application for the current year. You can only claim it in the subsequent year.
like section 43B, you paid before the date of filing the reckoning.
43B is not applicable to the charitable trust. Heads of income are not at all applicable. It is a separate computation provision, charging and computation provision by itself.
Even for the statutory obligations, there will not be no leverage.
I understand, sir, but no leverage, sir. 1 minute, sir, I'll answer.
Normally what happens is statutory company, they have to do as per the approved basis.
Correct, ma'am.
But when it comes to trust, we are talking about,
So for the purpose of your...
a lot of difference between
Perfect, ma'am. Yes,
income
ma'am.
and the
Yes,
they
ma'am.
are required to pay records. I think Institute has not come out with the guidance on that.
Yes, ma'am.
Because this is a big bigger challenge happening, especially when Section 8 companies are getting their accounts audited. You need to go as per approved basis of accounting, and especially when they're larger trust. They also have specific funds allocated for a period of say 5 years, 6 years. It could also be for a longer period. Then they approve it depending upon what the terms and conditions of the contract is. But when it comes to your trust accounting, when you have to fight it, the reconciliation is enormous. So I think somebody has to take it up to the institute where they have to come up with the guidance for mapping the Section 8 way of accounting.
Ideally, it should be something that should be discussed at the North Block. Section 8 companies, they should allow cash basis of accounting. This is a real life scenario. A Section 8 company has come to me. Before finalizing their accounts, for a few hours I forgot Income Tax Act. I finalized their accounts under the Companies Act. I decided whether it is an SMC or not, because for companies we have to first decide whether it is an SMC or not. If it is not an SMC, there are a different set of accounting standards which are applicable. If it is an SMC, there are some exemptions which are given for a company. So all that has to be decided first hand itself. Then you will have to prepare the accounts in accordance with that format. Related parties, as far as Companies Act is concerned, is a different set. As far as income tax is a different set. So till the date the board meeting happens, you will have to forget income tax for a minute. Prepare under the Companies Act all the notes on accounts, significant accounting policies. Now they are calling it as materially accounting policies. They have changed the word significant to material accounting policies. And all that has to be computed, disclosures of related to all that has to be given. The moment board meeting is over, accounts are finalized, then we have to start working on 10B again in a different set, and a separate set of notes or accounts have to be given for income tax purpose also. So it is a Herculean task, not an ordinary task. Even normal SSEs, deciding whether they fall in level 1, level 2, level 3, level 4 is a big challenge by itself. Because level 1, level 2, level 3, this is all coming from the institute's own accounting standards book. The book, if you go back, they said the preface to accounting standards, they talk about which category. So when I was interacting with one of the senior professionals, where they say level 1, level 2, level 3 would be applicable for industrial, commercial or business entities. Where is the question of industrial, commercial activities coming in for a charitable trust? I was asking him. He said, on a very practical note, let the trust itself say in the notes on accounts that I am not following the accounting standards issued by ICAI. You qualify your audit report. Who is going to see your qualification that the accounting standards are not qualified, are not followed? A trust does not go to a bank very frequently. Nobody asks a trust why it is qualified. So you let the trust itself say that it is not following accounting standards. You also qualify in your report that it is not following accounting standards. It is safe for you, safe for the trust, and with minimum effort you can complete the audit. That was the practical reply that I got, which I found to be very useful.
It is mentioned in notes. Is it mandatory to qualify in audit?
It is, if it is mentioned in the notes or not, it is mandatory to qualify as a chartered accountant. You have to say whether the institute's accounting standards have been followed or not. If it is not followed, you have to bring out a disclosure. If it is followed, then the notes will be sufficient. Yes, sir. Sir, please sit and ask. I can.
The preface to the accounting standards says these standards are applicable only to industrial, trading, manufacturing.
Yes, sir. Yes, sir.
That means these are all excluded.
No, sir. If you look at the list of persons to whom it is applicable, they have specifically written trust. They have specifically written trust, charitable trust and all. That is why there is a confusion. Sir, even if the level 1, level 2, level 3 talk about business, commercial entities, level 4 says anything excluded in 1 to 3 would fall under level 4. So even if it is a charitable trust, it could fall under level 4.
They have not read the preface at all.
Yes, sir. So,
this application of income, the funder says you first spend, I will then give money. The year overlaps. What happened to the money which I spent over the year?
Sir, good sir. If the person says first you spend, I will give, then I am spending out of my corpus. Either I am spending out of my corpus or either I am spending out of my accumulated savings. I am spending. Spending either out of corpus or out of accumulated savings will not be treated as an application. Will not be treated as an application. So the year in which I spend, I will not have no application. Anyway, income is also not there, so I am not worried. Subsequent year, having spent, the donor will give me the money. There is income. With this income, I replenish my corpus. It will be treated as an application. Replenishment of the corpus or replenishment of my accumulated saving. Accumulated saving, if I replenish, unfortunately, there is no application. But if I were to replenish out of corpus, it will be treated as an application. Income application, you will not have tax effect. Sir, am I clear or shall I repeat again?
The receipt will go to corpus, sir.
No. You are receiving only in the second year.
Yeah.
So all you want is you need to have an application in the second year and not in the first year.
Okay.
You have spent in the first year, but you want an application in the second year in which he gives a donation.
Income and expenditure will reflect this payment.
Correct. Sir,
My
income.
application will not reflect it.
Correct. Income and expenditure, there will be expenditure, but it is not treated as application because you have spent out of corpus. Second year, you receive the money, you will replenish the corpus. The moment you replenish the corpus, it is treated as application. Thereby, you will have no tax effect.
The second day I will receive as a normal donation.
Correct. Now, that normal donation, you need not spend it because you have already spent it in the first year.
Yeah.
So, you will put it in the FD.
Yeah.
So, it is amounting to replenishment of corpus. So, it will be treated as application. Yes, sir.
You said there are 3 types of business in a trust will do. Actual activity, like take a school, actual fees collected, and bus, canteen, incidental, and separate business if they incur.
Unrelated business.
Unrelated business. And you told that when it is unrelated, it will lead to the cancellation of registration.
Yes, sir. Yes, sir.
We had some case law saying that the profit is again used for the welfare of the trust.
Sir, please look at Ahmedabad Urban Development Authority 449 ITR 1, which is as latest as 6 months. In that they said any feeder activity will not qualify as a charitable trust. It is as good as I tell you in one sentence. I run a wine shop. I say wine shop because it is treated as bad. I run a wine shop. I get a surplus of 1 crore. I use this 1 crore for charity. Does it mean my profits of wine shop are exempt? Answer is no. It is only a feeder activity which is fueling my charity. It is not something which is generated in a charity. So 11 exemption is only to incomes which are generated in a charitable activity. It is not given where there is an unrelated business.
You were mentioning something about the immovable property when you were talking about this.
Madam, I will give an example. Everybody here knows about a trust called as Tanti Trust. It runs the newspaper. This also came up before the Supreme Court in a decision of Tanti Trust. In Tanti Trust, they allowed the exemption from the assessment year 1984 onwards. The reason why they allowed it is that this Tanti Trust, whatever it is doing, it is generating income. It is, in a way, the trust claimed that the activity itself is charity, thereby you give me exemption. But the main argument in that trust was the trust, whatever was the printing press that was there, that was not started by this trust. It was given to this trust through a will. The founder said, you take this asset, you utilize it for this purpose. So it was thrust upon the trust to do that activity. I am not allowed to carry out an unrelated business activity. I am not allowed to start and carry on. But if somebody gives me a wine shop and says, from this wine shop you do this business, wine shop itself is given as a property held under a trust. If somebody gives me and then I am allowed to do, then I am permitted to hold an unrelated business also. I cannot start an unrelated business and do. But somebody gives me, I cannot say, you give me also, I will not take, I have to do only, I cannot say that. I have to take and move on with it. So that is permitted till this day.
What if a school or a hospital lets its property for shooting?
It is an unrelated business. It is doing unrelated activity. Somebody cannot say, I am giving you a studio, you use it for hospital. So he will have to give a hospital only. If I were to let it for an unrelated business activity, definitely I am hit. There is no doubt about it.
So that should be separately as business 30% tax.
That is an unrelated business which will not even qualify under 11-4 For 11-4 to get qualified, it has to be an incidental business. This is an unrelated business. The receipts are prohibited. For that year, you will not enjoy exemption under 11. You will have to pay tax. And not even pay tax. You may even lose exemption. I will tell you one more thing. The objects cannot be commercial. Your objects have to be charitable. Amongst these objects, you can carry out activities, even though if the activities are commercial, if they are incidental to the objects, it is allowed. In your case, it is totally unrelated. Neither the objects nor the activities are charitable. So you don't enjoy exemption at all.
For the entire receipts, entire year.
It could lead to cancellation. That year you can say this receipts you tax, other receipts you allow. But you are doing activities which are beyond your objects. So it could lead to cancellation.
What do we do as auditors? Like if
First tell them not to do. You are meant to do charity.
they're coming to us only.
Let them face the
We
consequences.
can ask donation
About what?
instead of fees, donation can.
But what if they have recorded evidence that it is used for this purpose?
No, and donation, I mean, it cannot take anything in return. No, donation should be like without any consideration.
No, he's saying you have anyway used this hospital for cinema shooting, no problem. You shoot and get out. Subsequently, instead of paying it as fees, you give me as a donation.
No, I filed all
You are-
GST returns, damages of shooting and all that. So enough records created. Damage done.
Sir, 11.4a income is exempt.
11.4a income is exempt provided it is incidental and separate books are maintained.
What about 11.4, sir?
11.4 was my wine shop case, where property itself is 11.4 operates separately, 11.4a operates separately. 11.4a is a business which is incidental and which is started and carried on by the trust. 11.4 operates where I did not start the business, it was thrust upon me and then I continue.
So there also we can claim exemption.
11.4 does not talk about incidental. The word incidental is not there. It allows exemption. It only says if you report income, if the income found by the officer is more than what you have reported, I will not treat it as charitable. 11.4 says you voluntarily report proper income. If I find out that you have more income than what you have reported, I will not treat it as charitable. That is 11.4. So for that also separate books have to be maintained. Income has to be perfect. If it is more than that amount, we are covered.
So Tanti case in this example comes under 11.4.
Tanti trust comes under 11.4, sir. In fact, they made a distinction between 11.4 and 11.4a. In fact, much before Tanti trust. Tanti trust was probably the closing end of the series. It all started with lot of cases. Major first case probably would have been Surat Art Silk Art Manufacturers Association. Surat Silk Art Manufacturers. There it started. From there on, they had this JK Trust case and then lot of other cases where they have differentiated between 11.4 and 11.4a. And then they have concluded that they operate in different fields. Ideally, even both could also come. There are instances. 1 minute, sir. There's one query. Any query on that side? None? Okay. Yes.
So, in Noble case, you told that the markup is very less.
Ahmedabad Urban Development.
Oh, Ahmedabad. Okay. Where the markup is less, it doesn't comes under business. So that turnover should not be taken for the calculation.
Perfect.
For the 20%.
Yes, yes. Ahmedabad Urban Development Authority, it said, for the purpose of considering what is business, you will have to look at your markup. Cost plus nominal markup would not amount to business, you need not count it. Wherever it is beyond the nominal markup, you have to treat it as business. Again, you have to test it for this 20% limit. If it is crossing 20%, then you lose exemption. If it is not crossing 20%, you are still eligible for exemption.
So this will not come under 11.4 or 11.4a. It directly charitable.
No. It still comes under 11.4. Even though this is 20% limit,
No, I am saying that markup is very less.
markup plus nominal will not come under 11.4. Yes.
Sir, I had a point number 19 of this technical form.
Yes, sir.
That we have to refer to TDS direction details. The trust is running a
Sir, class 49 or you are asking?
19.
Okay.
Where we have to give the TDS receipts details under section 194C.
Correct. Yes.
So, the trust is running a hospital whereby the insurance companies are directing
194J.
Under the category of income, there are only three categories. One is trade commerce, then is any activity rendering any service relation to the trade or commerce. Others. Which column you choose?
Others only, sir. Because the business itself is charity. You cannot say I am doing it as charity.
So they said specifically the nature. That is.
I say it is income from hospital.
So to have a nexus with the ICAI 7 we have for income.
They all want to know if there is any business activity, sir. Essentially business activity they want to track down in the form of.
And also the name and address of the farm. In case of a society, You have to give the details of all the members. If they are more than 100 or 200.
No, executive committee members only.
No,
But in
they.
the morning session, they said you have to give the members of the session.
No, the form 10B, it says, give the list of the specified persons. Specified persons means those referred to in section 13. Now, should they give the entire list of the specified persons? Because substantial donors could run into hundreds and thousands. So, should they give the list of all the parties? The answer is no.
So
If I have entered into a transaction during the year, I will disclose this. Otherwise, no.
Column type, if you read details of all authors, set trustee, members of society. So, who are the members of the society?
As on the date, as on during that year, whoever are the members will give their names.
Members means the general members? No, sir, that's what I different general.
Only executive committees.
So, nowhere it's mentioning executive committee, sir. It says that members of the society.
Sir, if your members are running into
At any time during the previous year.
Correct.
Suppose the society having 200 members.
You will have to give all the 200 members.
That's what I want to ask.
You'll have to.
Nowhere it's mentioned that executive committee or managing committee.
Sir, but will the field take those 200 members? While you are entering form 10A, 10AB or form 10A, have you entered the 200 numbers details? Then how can you enter in form 10B also? You can have to simply put a scanned copy in the audit report and file it along with the audit report. When you have not entered those details in 10A or 10AB, which is the latest renewal form, there is no point in putting it in the audit report also. You can put executive committee list and file it. Yes, sir.
Clause number 11.
Yes, sir.
Only on water bodies.
Sir, where is? Sir, I know. Yes, sir. Yes, sir.
The trust was given a project for water study, water quality study. The company deducted tax at 194C. How to show this?
Sir, what is the object of the trust?
It's a eco society.
Are you claiming it in the protection of environment clause? That should be the ideal charitable activity. In that scenario, it would not be treated as a business. You can take it as a normal income in the course of carrying out the activity, and thereby you can say that it is not business. Even if it is business, it is only an incidental business, still covered by 1148.
Act of deduction by the payer, it's not the decisive factor in ascertaining your taxability. As long as you are a trust and you are in the preservation of ecosystem without a profit motive, then you are exempt. You can file the return in ITR 7 and claim the TDS as refund.
Any other issues, sir? There were a couple of questions also shared, sir. It was a practical session, so we thought we have brought a couple of questions. I don't know if they have been shared with you or not.
Yes,
You have shared? Okay. Fine. If you are interested, probably we can take some answers also. Answers, I hope they are not shared, sir. Only questions are shared.
They are not reached.
Sir,
Answer as well.
Actually, some of them are already covered in the
This
morning
answer
discussion,
actually given in
given with
session itself,
answers.
question number 1.
Hello?
Yes, sir, you're audible.
Audible?
Yes.
No, not audible.
Mic testing, 1, 2, 3.
Question number 1.
Question number 1 is, an Ojo Gangama temple is being run in a village by some specified family members. Its annual gross receipts are 10 lakhs. Net income is 4 lakhs. Can it register under section 12AB now, though no documents of its origin is available? In the application, how to fill the column asking the trust deed details. It was actually answered. We have already referred that there the creation of the trust, like very old temples or family temples or particularly village temples and historic temples, which we know, even say Venkateswara Swami temple or Kanchi Kamakshi temple, where
The origin, the tree itself is stated to be 3,500 years old. Then how can you expect a trust deed to be available? So in all such cases, it's not mandatory. We have in the morning given two cases, CIT versus Lakshmi Narayan Maharaj, 1984, 150 ITR, 465 Madhya Pradesh, and principal CIT exemptions versus Dawoodi Bora Masjid, 2018-90 taxman.com, 312 Gujarat. And one more thing here is, the annual gross receipts are 10 lakhs and the net income is 4 lakhs. So when once you apply and say your spending is not, it's only 20%, say take care of filing Form 10 within the due date, because 60% of the income itself only was spent, which falls short by 25%, and 15% is general accumulation, and see that Form 10 is filed within the timeline specified, and the surplus funds are invested in accordance with Section 11, subsection 5.
What if the expenditure that you are claiming is in the nature of application?
Actually, this question was designed by Malgun sir.
Sir, this is a live case, sir. This is a live case where there was a temple that was consecrated by age-old Rishi. It is a 400-year-old temple. It was consecrated near Tirupati. The temple had lands which were annexing the temple, and that lands were sold for 4 crores. They conducted a public auction, and the lands worth 4 crores were sold. Neither the trust filed, neither there was a trust deed, nor was the trust filing income tax returns, except for having PAN. They had nothing with them. They were controlled by the State Endowments Department. They had nothing except reporting to State Endowments Department. In fact, it was the State Endowments Department which put the auction, sold the lands. Now, information was captured by the CIB Department, Criminal Intelligence and Department of the Income Tax. They have issued notice asking whether you are eligible for any sort of exemption. How come you are not paid capital gains tax? This was the notice that was received by us. Immediately on receipt of the notice, we have filed an application with the CIT exemptions, saying that it is an age-old trust. As soon as we have filed an application, he has called for this thing. There we have produced a self-certified document. The CIT, who subsequently now is presently an ITIT member, CIT at that time said, you are now filing this only with the intention of avoiding capital gains. I won't want to give you a registration. I will simply say that you have conducted your affairs as a commercial entity and rejecting the application. This was what the CIT has done. That order of the CIT was assailed before the Andhra Pradesh tribunal, in which we have argued, and we had relied on the provisions of section 12A, which allowed retrospective application of registration under section 11. That early erstwhile provision which was there, which was deleted by the Finance Act 2023, was relied upon by us, and the tribunal allowed it. In fact, much before our reliance on those provisions, in a number of reported judgments, those provisions were allowed by high courts, not just by tribunals. Quoting those decisions, we have applied, and the registration was granted by the tribunal itself. Tribunal did not say, Commissioner, look into the affairs and give registration. Registration was granted by the tribunal. So from that facts, what we are trying to say here is that even though a trust does not have a formal creation document, a self-certified document would be sufficient to establish its existence and thereby allow it to take exemption and registration under program. That is the sum and substance of this judgment. I mean this.
As rightly pointed out by C.A. Chaitanya, it was a live case. We had another case, it's a temple having about a few hundred acres of land. They have sold a part of the land to a public sector undertaking. They have subjected the entire thing to TDS. There was no registration. It was a 400-year-old Venkateswara Swami temple. He got the registration, filed the return, came up with no tax. But the department raised demands in other cases for late filing of 10B, etc., which we have been
But there is
pursuing.
the record for the lands, isn't it, sir?
A record for the land was there. Say, the record for the land says it belongs to a temple. Say, the ownership is established. The trust deed was not there. So, deity can be a juristic person as per the general law also. But Chaitanya's point and my point was, even if there are no documents, in one case, in 1930, Gorakshana Sangam, it has parted with a part of the lands in favor of the state government, and they paid compensation. I had to get a 12-year registration and then do it. This protection what Chaitanya was referring, like no 148 notices for the earlier years, or say no adverse action during the pendency of the registration, they are all done away with, and the future course for trust on this particular count is very hard. Is it not, Chaitanya?
Yes.
But we'll cross the bridge when we come to it, because this is not the appropriate forum to discuss all those things. And another thing is, Chennai lorry owners wanted to register under section 12AB. Can it run a workshop or broker office for its members? Actually, sir wanted the participants to answer, and then wanted the faculty to analyze and see that we reach at some an agreeable solution. Agreeable as per the law.
Association is on, what is its object?
That's what our question is this, sir.
So if we understand the association is for the welfare of the...
Chennai lorry owners wanted to register section 12AB. No, we will read the question. We will only give that information. If some information is missing, you have two things, A, B, C, none of these. So my question is this, Chennai Lorry Owners Association wants to register under section 12AB. Can it run a workshop or broker office for its members? By then you know a few things.
First of all, lorry owner is specific people. Only we cannot be claimed my part of it.
That's what we say. We don't say anything.
No, we want you to correct it.
No, it's not like correction. This is your answer, because lorry owners, specific people, so you can't create a trust for that. That is one point. Next. That's all. Okay, we will go ahead, because actually the fundamental idea.
I will just elaborate, sir. What sir said is 100% right. It is a limited number of people, so 12AB cannot be granted. But that doesn't mean that they cannot avail the provisions of principles of mutuality. So to the extent they contribute to the association, they utilize that for their own purposes. To that extent, principle of mutuality would still apply. But if they were to run a workshop, earn the income from third parties, entire income is taxable at MMR.
Then in that case, like the mutuality means, they have to go for a cooperative society.
Sir, even if they go for a cooperative society, CET versus Bangalore Club, Supreme Court, Bangalore Club stated that the banks in which I put deposits are all my members. They are contributing interest to me. I am utilizing to my members, so I claim mutuality, was the argument of the Bangalore Club. Supreme Court said nothing to it. You take money from third party, you are liable for taxation. Your principle of mutuality will no longer apply. So to that extent, they will have to pay tax.
So you mean to say that if it is a mutuality is there, you can claim?
If it is mutuality, you will have to satisfy the principles of mutuality. If you satisfy, you are still exempt. You need not file return of income also.
The members and the beneficiaries should be the same. If say you are collecting something from your members and your services are rendered only to the members, there is a principle of mutuality, and without say actually the income tax by itself is not leviable where the investor and the beneficiary are one and the same. On that principle you can get away. Otherwise, have a cooperative society. If it is an indeterminate body of individuals, then you go for a trust.
So normally the people will run a petrol bunk and that.
They are all
So
cooperative.
public also will come. How will the mutuality will
Simple concept, sir. Take the case of flat welfare association. Flat welfare association will have 1 or 2 shops which they let out. That money is used to maintain the flat. To the extent of the money received, it is taxable. Whatever they contribute to the welfare association for maintenance is exempt.
So suppose here you said workshop, no, sir. Suppose members 100 people, outsider 10 people. For 10 people only taxable or 110?
Sir, you are earning income from whom? Whether outsiders or insiders?
100 people members.
100 people are
10
members.
people outsiders.
Outsiders can't work in a workshop. So you have
No,
to.
it's a workshop.
Okay. It is not who is working in the workshop. You are getting the income from whom? If this workshop is for the purpose of the repairing the vehicles of all these 100 employees, it is exempt. Your workshop is to do service to third party, from whom you are getting income.
Petrol bunk example which Falguna Kumar sir.
Your workshop,
My question is, entire amount will be subjected to income?
entire income will be subjected to amount.
Sir, we have answered it in 2 parts. One is where the lorry owners association runs a workshop for the benefit of members. That is, the members pay and they get the service. There is no tax. If it runs a workshop for the benefit of anybody who pays and gets the service done, there is a business. There is no question of charity. First, there should be a charitable objective for you to pursue. Without such an objective, there is the question of getting registered. That's it. Next.
Sir, in a flat, they are using the corpus fund. They are not registered under society, under trust. But the interest what they are getting from bank, they are not showing it for income tax purposes. Is it right?
No, not right. Not right. They are normally formed as an association. Normally they should form an association. That association only has got the power to collect the money. The moment they collect the money from flat owners and utilize it for all their activities, there is no tax. To the extent they get it from banks, they have to pay tax. Bangalore Club is exactly on the same point, sir. CIT versus Bangalore Club, Supreme Court, exactly on the same point.
But in SARS question, it is a corpus fund, not a general.
Doesn't matter, sir. Whether I invest corpus in a bank or savings in a bank, it doesn't matter. Interest income from whom you are getting? Are you getting it from members?
There is a logic, no sir, when interest is on corpus should add to corpus.
No, there is no. At least for taxation purpose, it is not there. At least in this case. In SIRC case, there is no such one.
And next question is, Madurai Urban Development Authority wants to now apply for registration for its total income exemption. Under which section registration is better and what form to be used? Just now Chaitanya discussed and he'll advise us. Before that, we are obliged to answer the question. Section 11, 1046, 1046A. 3 options before us.
1046A.
Why you should say, I don't know something?
To overcome the Supreme Court decision, government has amended the Act. 1046 was inadequate, so the government has introduced the 1046A.
So you go with the government decision.
To amend the Act and provide benefit to the assessee and avoid the controversy. That is what the finance minister.
Chaitanya, go ahead, tell a few
Sir,
words about
the same thing, sir. Ruling in Ahmedabad Urban Development Authority will apply. Test whether the transaction is business or not first. After testing for business, go for the 20% limit. If both are complied, you still have 11 exemption. If you cross the 20% threshold, leave the exemption for that year. You can avail exemption in the next year.
So the trust taxation now after 22 is really, say, the rule is doctrine of res judicata doesn't apply in tax proceedings except to a limited extent. That is very much true in the new scenario because you have 12A registration 1 year, you have say made a specific violation, say you have flouted the law 1 year, there are no benefits. Next year you take the lesson and you are in there as a charitable trust. It's not there is nothing permanent in this world. even in the Income Tax Act and its provisions. So now this has actually changed the game. Charitable taxation, actually, people are running workshops on direct taxes, etc., where in one of those things I had the occasion to go through the lecture of Chaitanya. There should be a separate one-week workshop for charity taxation. One day or half day, grossly inadequate, but it's very tough to follow. But actually, it's one of the hardest nuts to crack in the Income Tax Act, because it permits through all the sections except a few schedules to the Income Tax Act.
Sir, whether NB is made applicable to university where 50% or more?
That is 1023C, 3AB. No, not applicable.
Unconditionally exempt.
1023C, 4, 5, 6, 6A and section 11.
Return filing is mandatory for universities.
Yes, mandatory. 139.
Even though they are unconditionally exempt.
Yeah, no. Return filing is mandatory.
No, sometimes government is major contributor.
Doesn't matter, sir. 139 for it clearly says universities.
Act is amended.
4C also.
Now, for any kind of exemption, filing of return has been mandatory. We should go through the amendments made in the last 4 years. For anything you want the tax to be exempt means you should be a return filer.
Okay, Mahabalipuram fisherman wants to construct a marriage hall. Can they now apply and register under 12AB?
If it is open to general public, yes.
What, Chaitanya?
A lot of cases where renting of marriage hall is not a charity.
No, renting of marriage hall means we actually is one of the most profitable propositions. If you have the required site and say have the required funds, first thing I will do is construct a marriage hall, let it out, and say shed a part of my charitable trust audits.
And
Not
arrange,
others.
and arrange for a diverse office also.
Sir, the question is looking at the problem from the income side. We have to essentially look at it from the expenditure side. What is the objects for which I am going to use this marriage hall? If I am going to let this marriage hall for the purpose of performing
Actually,
marriage,
why I purposely wanted, because there are so many things. If the marriage hall is constructed for the public, first thing is you should start from the beginning. The case law where performance of marriage is covered by section 2, subsection 15, number 1. Whether marriage or construction where the say owners and beneficiaries are one and the same. Whether there is an element of profit, and Ahmedabad Urban Development Authority's case comes into picture. What about the say GST registration? Did you apply for GST? Because that itself showcases your intent to carry on the business for say purpose of charity or business. Because as he said, this particular question generates 100 questions to people who attend this seminar and 1000 questions to those who have not attended the seminar. And because he has both attended the seminars and deliberated the seminars, he will have 10,000 questions. So let him answer. So question yourself and answer, Chaitanya.
sir, my view is, what is the purpose of this Mahabalipuram fishermen? What do they want to do after starting the association? If their intent is to perform marriage of economically poorer sections of people in that hall by charging low rent, then it would amount to relief to poor, and the business income would only be incidental business, thereby it will enjoy exemption. But if they want to give it to open public to everybody, and they want to charge the rent that is prevalent in the market, then definitely it will amount to business hit by 215 proviso, thereby taxable.
If you say if it is for particular community, then also we are...
Sir, if it is for particular community, it should fit into the conditions given in the Act. SC, ST, backward class, women and children.
But fishermen won't come in SC,
I don't know, sir. You have to, which community is...
So refer to the constitution.
So if they fit into that community, okay, otherwise it is another.
Other backward classes all are.
Actually, the idea of putting these questions in a cryptic fashion is this. Somebody should question. Yes, we are constructing, it is construction by the fishermen or for the fishermen or for the general public with a charitable objectives or on commercial lines. You should question and each question should be answered. Next we will go to the next question.
Sir, if you mean that it's for relief of poor, that charging lower rent, you meant to say 12B will be applicable?
Yes.
12B means?
12 exemption.
Exemption, yes sir, why not?
So,
actually,
that is, we have to prove that it should be comparatively lower than what the other.
No, to whom are you giving?
General public.
General public, if you may answer, you can. Sir, if they are giving it to poorer people who are not able to afford Kalyana Mandapams, to them if you give, it is relief to poor. But if you give it to general public at normal prevalent rates, it is business.
215.
So which means before renting, get the income certificate.
Sir,
very smart. That kind of question should come.
if I ask for income certificate, they will not perform marriage in the house. They will look for some other one.
Income certificate to show low income.
It need not be income certificate. It can be anything else. What is the class that he is working on? He is a rickshaw puller, auto man. He is doing he's a sweeper. All this.
Create evidence, I am saying.
Self-declaration could also be sufficient. After all, you are doing charity.
Do you want some CA to issue a certificate with UDI?
No. We will ask our government authority.
Even that lower rent will qualify for GST, that is exceeding 20 lakhs.
Yeah,
yes, that's
Even
if it is below 10,000 rupees, if it is in relation to a religious institution, in all other cases, if it is below 20 lakhs.
So even that case also I can claim exemption. That time GST return will not be covered.
GST is a separate statute by
So
itself.
SAR told me that the moment you file GST return, if you reach an income, no?
I'll give you an example, sir.
One second. Actually, why I am saying this is, the moment you apply for company registration, if you want even a Section 8 registration company, it automatically throws out a GST number. That's the first thing before the first commencement of activities, surrender of the certificate because it's not required in the case. Because down the line, LLPs and firms also, they get the PAN number and GST number, PF number, whatever numbers it is in, say finally it will be SI and SIN to do all these things. They are going to come. In that case, actually the intention is gathered by the certificates you get. That's the issue. We will go to the next question.
Our own ICAI for the purpose of Income Tax Act is a GPU, General Public Utility, but under the GST law it is an education because it is issuing certificates. So GST is a separate law by itself.
Sir, if a temple runs a Kalyana Mandapam,
within the precedents, it
not
is
within, outside the temple, say 1 kilometer.
no limit of 10,000.
No, that limit to the limit. And charges say 1 lakh rent per day. Whether it becomes business perfect.
100%, sir, why not?
What? Rent
If it is used as a sir,
Incidental business only,
sir, if it is used as a meditation hall or preaching hall, and whenever there are no preachings, they will let out for.
Sir, performing a marriage is also a religious activity. So it is incidental business. 11(4)A will apply.
That's performance of marriage is an establishment. There are so many cases.
There are disputes whether it is a social activity or a religious activity. You can take depending on the tax application.
Educational society running high school, gross receipts below 5 crores. They want to register under Section 12AB. Can it get it itself registered? And what's your suggestion?
My suggestion is continue in 1020C, 3AD. Don't keep the stone which is on the earth and it is lying on the earth.
I don't think there will be no better answer for this question than this. We go to the next question.
An I-Brahmin Community Association wants to register society for training youngsters of its community in traditional music. Can the CIT exemptions refuse to register? After his refusal, what's the recourse?
I-Brahmin is backward community.
They cannot enjoy it.
I-Brahmin is backward community.
Youngsters, if it is children, then yes.
You should be aware. So various facets are there. It belongs to a community. They want to do some service to the members of the same community. And what they want to do is teach music and make them musicians. So there is a benefit to the community and there is promotion of arts and culture in the sideline. So what do you say if the CIT exemption refuses?
Backward, SC, ST, backward community, women and children.
He'll answer what? Say, we don't have any business to interfere. Let him go ahead.
No, if there are answers, I
Yeah, only, so we open our mouths only after the answers
Exemption
come up.
available under that backward community.
See, traditional
They can
music
see
is an
the
art. A development of an art has to become,
Under which limb of charity you want to take it? There are 7 limbs.
Actually, sir, is it relief of the poor? So medical relief or preservation of monuments?
Advancement of general public utility only.
So music can be learning, like education.
If it is for all the everybody, then it is okay. This cannot happen.
I would personally take a stand that it is education, although my father disagrees with me on this. I would personally take a stand that it is education. New Noble Society said scholastic training, scholastic education. What is scholastic education? Teacher, student should be in existence. As long as the teacher teaches and the pupil hears, it is scholastic education. If he is teaching music, it is education.
Yeah, Kumar sir was telling that unless it leads to a degree, it's not education, it's not like that. There are actually education, object of education was the largest, was the highly debated issue before the courts. There are so many facets of education. Definitely, music is a form of education because, as he said, there's an organized training, there's a curriculum, and there is stage 1. Somebody doesn't learn, say, Alapana or Pancharatnas the moment he joins a music course. There should be Sarali Swaras and say next Varnams, Krutis, Alapana, Swarakalpana, etc. Like that, when it's such an organized thing followed for so many years than the regular kind of school education, it's music. The only thing we should discuss is it is limited to a group of, it's a education is imparted to a particular community. So does it in any way derogate the society from getting registered under section 11 as a Tolly AB? Or irrespective of that, because we are giving education, it should be arranged as a charitable trust. That should be decided.
Yes.
What about exemption to backward communities? SC, ST,
Sir, does it qualify under backward community or not is a question of fact. If that is determined, balance can follow.
That's it. Yes, say I say yes, he says no. It's covered by backward community. He says it's not covered. Then what will be our answer to that?
So if everybody agrees, probably can we just request him to just go through the questions and give us the answers? For the positive time, I think people are leaving.
Okay. Sir, take up. I'll read the question. He will say give the answer. Okay?
Yes, sir.
Let's divide.
I'll read the question, sir. In case there is a different answer, you can.
Sure, you can do that.
Survey under 133A has taken place in an NPO school. They found funds are saved partly in Margadarshi cheats. Its gross receipts in the past never crossed 1 crore. it never filed return of income, but under Societies Act every year it filed audited accounts. Can it claim any exemption of its net income, which is around 20 lakhs?
1026 380. And 11.5 is not applicable to 1026 380.
Correct. Perfect. No further deliberation, go on to the next question.
Yes, sir. During the scrutiny assessment of a 12AB registered medical college, the officer found salary of the executive's member's wife working as a professor is excessive. He proposed to cancel registration. What is the recourse?
Now 1310 has come.
As I said earlier, 1310 would apply for that year. They will have to pay tax under 115 BPI. They will also have to pay penalty under 271 AAE. Apart from that, if there are violations of more than one time, then they could lead to cancellation also.
And say one thing is, assessing officer found the salary of the executive member's wife. Say Form 10B, while explaining, Chaitanya has shown a slide. What was the salary paid? If it is felt excessive, yes, why it is excessive? If you can demonstrate that it is not excessive, there are no consequences at all for the trust. No further tax, no derecognition from the, no derecognition to apply the provisions of section 11. So make out a case that it's not excessive, because the question only says, AO found it to be excessive. What AO finds need not be the truth. Get along. Next question.
Yes, sir.
More than one time, more than one time, where it is more than one time?
271 AAE says, first time 100% penalty, more than one time 200% penalty.
Violation, say.
Violation.
Violation.
271 AAC, it says if the violation is more than 2 times, 200% penalty. But if it is a repeated activity, the trust intends to pay the money and then still enjoy exemption, there is every possibility that CIT can cancel registration.
Where is that? Which section it is?
Specific violation, they say conditions of registration.
Chaitanya, 1 second. What he says is, you have told two things. 271 AAE, as statutory provision stands now, it says that for the first default, the penalty is 100%. For the second default, it is 200%. Chaitanya suggests that if you perpetuate the same mistake, you are likely to lose registration. There is no specific statutory provision.
No, you look at specific violation. Specific violation, one of the conditions of registration has to be complete. In the conditions of registration issued in Form 10 AC, if one of the clause is inalienably, your funds of the society has to be put in 11.5 mode, or your fund, you should not give excessive benefit to trustees. This is one of the conditions. So you are violating that condition. It is happening more than the required number of times.
That is why. So if I violated, that's all. Not more than one time.
See,
Talk about more than one time.
see, the whole purpose of a penalty is not to take out registration. So if I have done it for the first time, all the CET has the power. We can plead that there is a penalty provision available, hence you need not exercise.
But there is no provision. Only we can plead before the commissioner.
Then the whole purpose of the penalty is
Chaitanya is trying to say is, it's going to be the final fallout for chartered accountants, for charitable trusts. So be careful to follow the provisions and avoid fatal consequences. Next question.
A trust has 12AB registration, is having its objects only as education, is running a medical college and hospital. It wants to do free treatment for some poor patients. Is it necessary to amend its objects to include relief to poor?
Yes, mandatory. Education is there, these two are not there, has to mandatorily amend.
Just to mandatory.
Go ahead with the answer. Do you have more? Actually, no. What I try to say is this. If you are less than 5 crores category, 1023 AB is there.
Yes.
If it is more, say there, for evaluation on section 1023C, Noble Educational Society says that there should not be any other objective, it should exist solely for education. Even if as an incidental activity you are rolling out relief to the poor, it may take you out of the purview of 1023C and may force you to take a registration under 12AB. That should be kept in mind.
Sir, my medical college is continuing. It is an education that is continuing. Incidentally, I am doing this hospital.
If the purpose of the patient is to educate the students, patient comes into a college. Every medical college has a hospital also. What is the purpose of the hospital? It is not only to treat, it is also to educate the students. So if that purpose is being fulfilled, it is still education. But I would like to conduct medical camps in rural places to help their benefit, not the students. In that scenario, that means students are not traveling to that medical camp. Professionals are traveling to the medical camp, which is for the purpose of relief to the poor. There, you have to amend your objects to come out to 11.
It is not telling any of the.
Sir, you can add some.
Only in the hospital only the treatment.
Hospital only treatment for students.
Hospital is attached to the students' college.
As long as it is less than 5 crores, no problem. If it is more than 5 crores, for 1023C approval, it should exist solely for education. As Chaitanya pointed out, if it's a part of the regular, actually medical education is like CA. You both learn the theory and practice. Unless there is a teaching hospital and parents say patients come, there is no teaching. It's incomplete teaching. But besides, say, treating them, if you provide them free medicines or make some other services, it should be definitely covered as a specific objective. For it is not a direct case entitled for approval under section 1023C. If it is more than 5 crores, medical college, it will be more than that. If you want to make relief of poor separately and in addition to, though it is closely connected to your medical education, go for 12AB registration.
Sir, even we see today as per RCI, 25% of the children.
That is Right to Education Act, that is different. Right to Education Act
Sometimes
only.
poor people also come join because of coming poor. Our objective need not be.
No, the question is different. We are a little deviating. Excuse me, that's not the question. Actually, it is not educating the poor. Educating the poor, free education, Right to Education Act is there. It's only treating poor patients without any fee and helping them. Next, we go to computations or stopper. We are going to say call it a day. Somebody here to pass concluding remarks. Or shall we pat ourselves on our backs and head on?
We definitely deserve a good pat from all of us here. A big round of applause. So we have a lot of senior members here who probably read only section 13 and there is no violation under section 13 and trust is super safe. And with all the violations which is going around and thanks to data analytics which gave government a lot of information that all the benefits which the government is giving to a charitable institution vis-a-vis the ground reality, the benefit which is being passed on to the public is a complete mismatch, and that is why there is so much of regulations around the charitable trust. And today what they give generally, I'm here to actually thank them. We generally thank when we have a very pleasant feeling, but today all of us are kind of carrying a kind of concern when we are leaving this hall. But I think we should take that pinch as a COVID vaccine for all of us as professionals, because we are here to go and face the community which says if it is a trust, it is all exempt, blanket. So there is no conditions for a person who's running a trust, it's a trust and it's exempt. So today I think it's a good wake-up call. Thank you so much for the informative session. Opening remarks by CA Shivram Kumar sir from clauses 1 to 27 and 28 to 36 by Falguna Kumar sir. Thank him in absentia, probably Chaitanya can leave a message to him. He took us through the heart of the clauses, which is the income computation, which was very, very critical. Because I'm sure Winman or any software which people are using, we just
do something. It's a Sudoku kind of activity when we are filing this IPR 7. There is a mismatch, okay, you put it here and it will match. So gone are those days, we have to be doubly, triply careful when we are doing this, and thanks to Chaitanya for taking us through all the violations, specific, general and all those things, and also giving a holistic view on what a charitable institution is and the exemptions and the pain points or the activities where we have to be careful as chartered accountants to protect our skin and our clients. Thank you so much to all the speakers for the thoroughly enlightening session, and thank you audience for staying here until evening. And I think this is one exceptional seminar where we have so many people with a vote of thanks. Thank you so very much.